Welcome to the stream. Welcome everyone. Good morning. And AMC slightly down here, currently trading at $50. We're going to see some of the top movers today, trending stocks. Currently, AMC is down. Let's take a look at some BlackBerry. BlackBerry getting some love here, currently trading at 16.18. So BlackBerry seems like it's getting some of the action from AMC. We see a support here. Let's draw a line here. We see a support here around the between 13 and 1450 area. We see a cluster here. This is the 5-minute chart, and it's going to be interesting to see how these stocks react on expiration Friday, options expiration. Are we going to get another blow off top, or are they just going to, create more pressure and make the stock go sideways for, you know, for in preparation for a setup for next week? So we have BlackBerry getting some love. We have AMC slightly lower, just about $1. Nothing major here. Let's take a look at GameStop here. GameStop 257.45. We saw a pullback here towards the end of the day, and now it's going slightly higher here for the time being. Let's go. This is a new one here on Clean Energy. Clean Energy also, we saw some action on it. Right now, Clean Energy at 10.20. This is one to look at. Trading at 9.12. I see a lot of institutions holding Clean Energy, so this might be something that worth looking for. We could potentially see it go back to around the $17 level, and in a few weeks, possibly. So this is another one that we're seeing getting some good momentum here. And just to throw that in there, also we are seeing Sundial cannabis stocks. Also, we're seeing a lot of momentum coming back into these names that were getting a lot of movement about 4 or 5 months ago, and we're seeing the rotation coming back. We're seeing
Business, but
a lot of this money flows go out into crypto, and it looks like it's coming back into the stock market. So this is looking pretty promising. If we look at Tilray looks like it wants to take off once again. I actually have some skin in the game in Sundial, so I think I could size up a little bit better there. Um, what up? What up? Let's go AMC, Ape Nation. Yeah, there we go. Morning, Ryan. Morning. What's up, guys? What's up? Thanks for joining the stream. So let's take a look at Workhorse. Workhorse getting a nice squeeze here. Everybody gave up on Workhorse. Kathy Wood started dumping it, and what do we know? It squeezed, and it squeezed hard yesterday, topping off almost at $19 here at the high of 18.33. Workhorse trading as low as around, what is this? The low here is $7, and we just saw it in a couple of weeks, about 2-3 weeks, just squeezed massively. This is a great opportunity. We saw Kathy Woods dumping it. We saw the funds dumping it. We saw just negative news. It didn't get the contract. And here we are. We're back to where it was trading a few months ago. So this is massive for Workhorse. Let's take a look at Nokia. Nokia right now currently at flat at 548. Another name to look at. So we're seeing all the meme stocks getting some love. So let's look at Cloverfield here. Clover Health. Clover Health right now trading at 917. Also another one that squeezed. It's been on the news since the beginning of the year with a couple of Department of Justice lawsuits. And I'm not exactly sure where this stands at the moment. But yeah, we have Clover Health here also squeezing from a low of around 650. Right now, it's a little bit slightly higher after hours at 917. Let's look at another one. This is my trending watch list. So these are great names to be looking at right now. We also had GTT. I did a call out here on GTT on my watch list on Discord about 2 weeks ago when it was trading around 150. And look at it now. Once AMC and all these money rotation started coming back. GTT started getting some love, and this is another one where it was heavily shorted, and it's also owned by some institutions, and it has some pretty decent fundamentals. So very interesting. GTT getting some love here. It's trading around 340, and we're gonna see if it holds. So let's take a look at some Bed Bath and Beyond. Another one that skyrocketed. This one was trading around 27.19, and then exploded when AMC exploded to all-time highs. This one went to 44, and so this one went a little under the radar for me. I wasn't as following it as much, but. And then we have Palantir, another name that we all love out here, and I have a few shares. Palantir currently trading at 23.73. So we're just a few minutes away from the open. Let's take a look at Rocket Mortgage. This is another one they like to hit. They like to hit hard. It's always a ticker that likes to get squeezed. So right now it's currently trading at 1971. It looked like it was left for dead around $16. And in just the past 2 days, we saw some nice money inflows coming into this ticker symbol here. So that's pretty much the top trending stocks right now that I'm looking at for some opportunity. And let's see what AMC is doing, the leader of this massive run here. Let's see GameStop, where it's at right now. GameStop pretty much flat here at 257. Remember, today's options expiration, and we'll see. In most cases, we see a flat Friday, but maybe we get a nice surprise today. So let's see. Also, I want to throw on this one. This is a ticker that I'm looking at right now. NVIDIA. This is a big ticker here. NVIDIA currently trading after hours 684, going again to all-time highs. And NVIDIA squeezed heavily. Well, not necessarily squeezed. This is just a large cap stock. NVIDIA just announced their 4-to-1 stock split, trading around 580-ish when they did the announcement, gapped up here in the announcement at 600. And now it's at 684. This is another ticker symbol that I did a shout out on the Discord chat group, and it was I as soon as I saw the announcement, I bought into it, and I'm still holding NVIDIA. So this is another great name to be looking out for. This has the potential to run until July, so we have about another month and a half at the end of July to see some nice price action here on NVIDIA. So I think NVIDIA, by the end of July, we're going to see it at least around 750, somewhere around there. And we're off. Markets just opened now. So let's see here. Let's take a look again at AMC. Let's take a look at the 5-minute chart. It looks like it wants to move higher. Some supporting resistance here on AMC is around the 36 to, what is this, about $42, $41 level. So right here, open slightly higher. We're looking at the 5-minute chart, and we see some very aggressive price action here on AMC. We see it here chopping around. It broke this support here. This is my 10-day moving average. So it went down here. It can go as low as around 36 to around 41, but it looks like it's getting some love here, coming up at 52.65. I'm getting a nice pop here. So let's see some of the other stocks that I'm currently holding. Look at Clean Energy. Clean Energy Fuels. This is a great ticker that I'm seeing being talked about. So Clean Energy Fuels here has the potential to go back up to $17 within a few weeks. Nice. Getting some nice action here for my Friday open. Let's see what's going on the news.
In particular to seeing you, my friend, in person once again every single day. I know Jim's excited about it. And in a larger context, David, I think it's important, closing bell is back, which we're glad to see. Squawk's back together. But the banks are going to be using June to bring people back as well. So I think it's a collective statement about what is going to happen, what probably needs to happen in New York City.
Yeah, and yet it's funny when we were doing the interview on the jobs report. One of the gentlemen pointed out Apple. I mean, there are still corporations, Carl, that are not comfortable with the idea or feel as though it actually is beneficial to their workforce to only say 2-3 days a week is what we expect you to be in. And how much of that will remain the
This could be the short-term peak here for Workhorse. Workhorse here seems like it's cooling off, almost peaked up at 19, and we can see it potentially coming back down to around the $10 level. Let's look at Nokia. Nokia at 547. Let's see. It seems like they're talking about the stocks.
GameStop, which is the one that we go back to thanks to January and what we saw happen there. Koss Corporation as well. Another name that I keep an eye on, Virgin Galactic Space, which has also been a meme and a Reddit favorite, if you will, although that one has actually come off somewhat. But, David, just to go back to the whole work from home dynamic and discussion, it's probably also worth noting that in that very long interview with Adam Aron from AMC last night, there was a moment that I think well, maybe not many of us that have worked from home, but some that have worked from home have perhaps experienced before, when they're dressed for business on top and maybe not so much on the bottom.
Make sure that our long-term future is very bright. And right now, we don't have that. We don't have that tool at our disposal.
Now we know something we didn't know
Yeah.
before, and I'm not sure we want to know it. But yeah. Well, listen, whatever it takes to get that $25 million authorization, he's ready.
I'm actually surprised that kind of flew below the radar. I mean, in terms of the coverage, Carl.
I don't know, Carl. We did plenty at home. I always felt like I needed to be fully dressed. Fully dressed.
Yeah, I mean, it's the worst.
Oh, come on, guys. They're picking on Aaron. Come on, this is ridiculous. AMC exploding. This guy's making about $160 million right now from the beginning of the year until now because of the AMC run, and they're picking on him for not wearing wearing some decent pants on the live stream. They're just, come on, guys. That's some bull. So AMC here currently holding above $50. Looks like $50 wants to be a level of resistance here, of support. Let's take a look at some of the other tickers here. Sundial at 131. Oh, they're talking about the jobs market. Let's see what's going on here on the jobs.
Ways. And a lot of people are still looking for what this is telling us about progress. Why did the labor force participation rate come down a touch? What has it told you?
I mean, what it's telling us is that President Biden's economic plan is working. We've added over 540,000 jobs over the last 4 months since the president has been in office. It shows that unemployment rate came down this month, but we still have a ways to go. I mean, there's no question about it. We're recovering from a pandemic, and it'd be great when we shut down the economy basically because of the pandemic. You can't just flip a switch and get it back on, but there's a lot of good signs. We're seeing the largest job growth in leisure and hospitality. We saw it in education and public education. So those are great signs, and as we continue to move forward here, we hopefully will continue to see these gains.
Last month when we talked, you did not believe that the employment supplemental was a factor in delaying people's return to work. We've had some states now stop it on their own. Do you think the progress month on month is related to that?
Well, I think you're seeing in this month, as I said, in the hospitality industry, which includes restaurant and bars. That's one of the biggest concerns people had. People weren't going into those industries. That's where we saw the gain. And I think as we continue to move forward here over the course of the next couple of months, we'll get more and more people back into work, back into the economy, and that's going to be an important for us moving forward. In the UI benefit, I mean, that was there. Thank God it was there because people were able to keep a roof over their head and keep food on the table during the pandemic. And we're getting, we're starting to see the light at the end of the tunnel getting larger, thank God, and hopefully we'll continue to move down that road.
Yeah, I'm curious, though, how you see that road going. I mean, at this point, it's not that many weeks away till some of the benefits start to expire. As Carl pointed out, in certain states, it's they're not getting the supplemental as well. So you expect the next jobs report to reflect more people looking for work yet again?
Well, it'll be great to see that, obviously. I don't want to speculate or make any predictions today because it's a month away. But when we look at the hospitality industry, leisure industry, tourism industry that's been hit probably one of the hardest, we've seen significant gains now from last month to this month. And as we get into the warmer months and the summer months where people travel, we'll hopefully continue to see those gains happening. And I think that hopefully the dependence on unemployment goes away and we'll have fewer and fewer people looking to be on unemployment. We saw the lowest drop in unemployment claims last week, which is a great sign as well. So, there are good positive signs here. I don't want to be, I don't think it's doom and gloom or trying to sugarcoat anything. This is a good, solid report moving forward, and we just need to continue to make gains like this, like we did today.
Yeah, well, I would assume you're also encouraged by, what has been fairly significant wage growth, particularly in hospitality and leisure. Although in our world, Mr. Secretary, of course, that always leads to concerns about inflation. I don't know if you have those conversations in the offices that you're in, but we certainly do over here. Do you have any?
Yeah, no, we certainly keep an eye on all that. We had a conversation this morning, so we're watching that very closely with inflation to see what the impacts of the wage increases are. But and we're going to continue to monitor that closely as we move forward here. And in some cases where we can make adjustments.
Yeah, Mr. Secretary, it's Morgan. Just to dig into that a little bit further, I mean, we have average hourly earnings up 0.5% versus the prior month, stronger than expected, at least from a street standpoint. You factor that in with the NFIB saying record high number of U.S. small businesses that can't fill job openings right now. Is there really a need to actually increase the federal minimum wage?
No, there definitely is. I think increased wages is important for the American people. It's important for the worker. It's going to be important for the economy. It would allow people to spend more money in the economy. And I think that, you know, what I don't want to see is taking wages backwards. I think it's important. The president's message is about creating opportunities into the middle class, and creating opportunities and getting into the middle class means better wages for people.
Where are we in terms of the infrastructure talks right now? There's a lot of reports coming out about negotiations around what the corporate tax rate is going to look like, what the final number is going to be. Where do we stand?
Well, you know, this is a very fluid conversation. As you saw, you guys reported yesterday, the president had some very important conversations with leaders in the Senate to talk about what that plan looks like. It's still a very fluid plan, and we're all negotiating. We're all talking to different people. I've been around the country talking about the American Jobs Plan. I've been talking to members of Congress, members of the Senate. Other people have been doing the same thing. So I think the important part here is that it's actually a negotiation. It's a conversation, and we're having all people at the conversation now. This is not about not having people at the table. And I think from the very beginning, when the president talked about this, he was talking about having a bill that's a bipartisan bill that can move forward. And that's, you know, again, I don't know what the end result will be, but right now these conversations are happening, and that's important.
You know, the jobs print always has lots of noise. You mentioned the restaurant factor, which was a big one this month. People still scratching their heads about construction down 20.
Yeah.
I mean, again, we're always dealing with seasonality and weather, but is there a good explanation for that?
Well, you know, we had that conversation today as well, and from somebody who came out of the construction industry, I think some of it could be on material and supplies too, because during the pandemic, a lot of construction, in some places we stopped it in Boston for about 6 weeks. In some places slowed down. So I think now that as the summer months are coming, construction's ramping up. This cutback in jobs was not a result of small homes. It was a result of bigger projects. So a lot of it could be, we still have to dive deeper into the numbers, but I think it could be into materials and getting materials on job sites.
So, finally,
when I say materials, I mean material like construction materials on job sites, not workers. The workers are available. Construction. Yeah.
Yeah, we know exactly what you're talking about, having our eyes on the lumber market and so forth the last few weeks. Finally, on wages, the fear, as David pointed out, is that the longer we go on with wages rising month on month like this print shows, that the Fed's going to have a tougher job arguing that these inflation metrics are transitory. I know that's not your bailiwick, but I guess I wonder what you would tell the street as they try to game that out.
Well, I guess before we go there, I mean, we've had if I remember correctly, we've had 1 month that shows wage increases. So I want to see, let's see what we do in the next couple of months here as we move forward here. If this is a one-time event, or is this going to continue on as we recover from the pandemic?
Mr. Secretary, it's another interesting report, lots to chew on, and we appreciate your insight as well. Have a good weekend. Thanks.
Thank you, everybody. Have a great day.
Well, let's get to Rick Santelli now for a bond report on this Jobs Friday. Rick.
Thanks, Morgan. Indeed, you know, bringing out the numbers, the wages were a huge component. Those are big numbers. And yes, transient is not a word typically applied to the wage area. Most likely, these things are going to be sticky, sticky, sticky. Let's look at the markets. Now, if you look at an intraday, a very focused intraday of 10-year note yields, you'll see we started to drop in yield before the number. Right on the number, volatility spiked up, and we trade all the way up to 162 plus. Then we just drifted after the number, and here we sit at 159, down on the day, down on the week. But all roads lead to 160, as the 2-week chart shows. And even if we were to do a bigger chart for the last couple of months, you'd see that it seems that at 160, 161, if you had to pick a high-frequency area in 10-year note yields, that's home base. Now, as far as the other big moves on this non-farm Friday, it's all about currencies, and all of it is kind of against the greenback. Let's look at an intraday of the pound versus the dollar. You could see the dollar dropping there. Dollar versus yen. Yen soaring after the number. Euro versus dollar. Euro soaring after the number. And now, to summarize this, let's put a 2-day of the dollar index, because they had a nice day yesterday. We've taken away a good chunk of yesterday. As a matter of fact, We're now barely up on the week. And the reason this is so important is it just has all the earmarks that much of the buying that we saw yesterday was most likely short covering, and watching how it behaved after non-farm payrolls. Most of that short covering is probably nervousness regarding riding a big position into today's number. Carl, back to you.
That's exactly on point, Rick. Thanks so much, Rick Santelli. Speaking of all of that, still to come, an exclusive with Cleveland Fed President Loretta Murray.
Okay, so now we're seeing AMC here holding up here above $50, and we want to see it break this trend. We saw a nice pop right now on the 5-minute chart, breaking this area, but the 5-minute candle is not over yet, so we'll see where this stands. We're seeing a Friday. We're not seeing massive moves, but we're seeing some consistency, and these names are holding. So this is looking good in the short term for now. They're holding, possibly setting up for a follow through for next week. I drew here a simple line here at $68. We want to see if AMC has potential to break all-time highs again and see it surge up a little bit higher. We want to see it break. Right now, more or less, the market is around $68. And so right now we're fighting this downtrend, and that's where it stands for the moment. Let's look at BlackBerry and see what it's doing here. BlackBerry also is just slowly trending, and it looks like they are gonna just we're not gonna see any big moves. It looks like they're killing the options. They're killing the options for the day. Right now we're seeing clean energy pulling back after this gap up, potentially coming back down to my 10-day moving average, somewhere around 980, 970. So clean energy pulling back. We see sundial growers right now at 127, and let's see where the action is at. Tilray pulling back, Workhorse pulling back, Nokia holding here at 548. Nokia looking pretty good here from the bunch. We have Clover Health getting some love here, uptrending here. It's at 941, and we saw it yesterday gap up and run to close to 1050, pulling back, and now it's at 942. So Clover Health looks pretty good from the bunch right now. Let's take a look at GTT. Holding this level here around 310. Let's draw a box here. So this is the range in which GTT is holding. So if we see it stay in this range, that'll be a good support level, potentially to go higher. Let's look at Bed Bath & Beyond. Bed Bath & Beyond giving away those gains, running up, and now slowly melting away. Let's take a look at Palantir. Palantir right now at 2388, pretty much going nowhere. And Rocket Companies right now at 1976, also holding. Let's take a support here. Let's take a box here of support. And let's draw it here around 1950 to 20. Let me just make it slightly smaller here. And this is Rocket Companies. Rocket Companies holds this level. Potential to go higher.
Trading week, major averages are higher. So is AMC Entertainment. It's up about 1% right now. Keep in mind, though, after more than doubling last week, the stock is on pace right now at the current levels to do so. Again, it's up just about 100% on the week. We're going to keep our eyes on this and so many other movers in the market, so stay with us.
Okay, so we're seeing AMC right now. We see it respecting this downward trend, which we don't want to see. We want to see it hold above around $48. If the downward trend continues, we'll see. We're heading towards yesterday's lows, and we want to see a breakthrough here. We want to see a breakthrough. We want to see it break through here. We want to see some nice volume coming in, and push it higher towards above 68. If we look at the volume here compared to yesterday when the stock opened, volume's a little bit lower today. We don't see that much of a volume action today. So we see yesterday huge volume at the open, holding this level, bringing it back up, and just ricocheting back and forth, and ending somewhat strong here with a slight breather. Now, we don't see the kind of volume that we've been seeing in the past 2 days here on AMC. In the past day, we see it slightly lower. So we'll see if it has a potential to move here. So AMC at 51.16. It looks like Virgin Galactic getting some upticks here. Green on the day. Palantir and Rocket green on the day slightly, but we're not seeing an outlier today. We're not seeing anything over the top. Let's just see if we get some more movement here. Clean Energy holding above the 10 level. I like to see that. Clean Energy here. Let's take a look at the daily to see the bigger picture. Big move here on Clean Energy here. I saw this one yesterday and it was a little too late. But still, if the momentum continues, it has plenty of room to go higher in the next few days, few weeks. So Clean Energy looking pretty solid. Let's take a look at the 5-minute chart. Let's take a look at some institutions. Let's see if AMC has any new action going on here. Let's see if anybody's buying AMC today with institutions. Institutional owners still at 429. No one buying. We saw new buyers on the 1st. That was about it.
Robert Frank is an expert in that, and he joins us with some details. Robert.
And David, you know I love talking about your favorite part of the tax code. It's that $10,000 cap on state and local tax deductions, because it is, in fact, changing the map of American wealth. A study by Joseph Briggs at Goldman Sachs found that the SALT cap created an effective tax hike of over 4 percentage points for high earners in New York and California, and up to 12 percentage points compared to states with no income taxes. That larger gap is why over 5% of the highest earning households and over 6,000 households earning more than $1 million left New York after SALT. Now, that wealth flight causing a decline in tax revenue of about 1% in high-tax states, at least before the pandemic. But it is likely about to get worse because of the recent tax hikes in New York and New Jersey. Goldman estimates that wealth flight could actually reduce revenues from those tax hikes by more than 30% and perhaps erase them altogether once the stimulus wears off. The report says we expect the tax hikes will meaningfully increase emigration from New York, which will in turn reduce the almost $3 billion in revenue that they had projected. Goldman not expecting a SALT repeal, but says a possible increase in the SALT cap, maybe to $50,000, is more likely. That would still do little to stem the tide of these high earners to places like Florida and Texas. Guys?
Yeah, that exodus is one that continues, Robert. And of course, then it goes.
Okay, so I just pulled up the latest numbers of AMC's short interest here. Let's take a look. It looks like some of the shorts have started covering, and these are some of the numbers as of yesterday. So we see the short volume ratio going down here at 17% compared to the previous days of 21%, 19%, 20%, 30%. And this is pretty much where it peaked. Where it peaked in the past few days on the 27th and 26th. This is where AMC peaked out at 30% short volume ratio. So now we slowly see the numbers declining, and we want to see this number rise. So we saw some shorts covering yesterday, and we have a lower short volume ratio. As far as the institutional buying goes, there's nothing new happening there. So we want to see these numbers change today, and let's see if we get some new shorts here adding to their positions to create that momentum. We also have potential gamma squeeze coming. So gamma squeeze is also still on the table. It looks like the short interest is cooling off. So that squeeze that we're seeing at 17%, we could still see obviously a nice move higher. But I want to see this number go back up.
That one, as we also take a look at autos this morning, again after that rally yesterday, Morgan, with both Ford and General Motors. General Motors, of course, on that much more higher guidance for the second half of this year.
Yeah, and it goes back to the conversation we've had about the outperformance of the more traditional, if you will, established auto players versus some of the newer names, like, for example, Tesla, or even some of those EV plays that have gone public, many of them via SPAC, and many of which have actually sold off in recent weeks, Carl.
Although, as B of A pointed out, GM market cap 90 billion, Ford 63, Tesla 550 billion, David, even after some of this move lower. So it's still a long way to go for those names to catch up to a market cap like Tesla's. We will take a break. We're going to hear from the president on the jobs number in the coming moments. We'll also talk to Loretta Mester of the Cleveland Fed about the jobs number and the recovery as the 10-year yield now below 158. That's the low for the week. We're back in a moment.
And just in other news here, PSTH, Pershing Square Tontine Holdings, this is Bill Ackman's SPAC, confirms discussion to acquire 10% of the ordinary shares of Universal Music Group, UMG. So after the very long-awaited PSTH merger, Bill Ackman went with UMG to own 10%, to acquire 10% of Universal Music Group. So this is, I mean, Bill Ackman does really strong investments. They're not very exciting investments. So this looks like a complete dud compared to what people were speculating. But yeah, the news is out. Bill Ackman went with UMG for PSTH. So let's see what PSTH is doing right now. PSTH, yeah, the people didn't like that investment. So PSTH right now trending at 22.44. So it looks like it's going to be a strong stock, and it's going to be possibly a slow uptrending mover. Great investment, but not exciting. So, you know, a lot of people looking for high beta. PSTH is probably not going to be an exciting one. But yeah, that's what they went with. Let's go back to AMC right now. Oh, also NVIDIA. NVIDIA going to all-time highs, hitting here 700 here. AMC 700. So we're going to all-time highs here. NVIDIA looking pretty good. AMC momentum, volume is low. Momentum is low. So it's going to be a day, slow trending day today. Let's see what else we have here with BlackBerry. BlackBerry here holding. We want to see it holding around 15. Above this level of support. Looking pretty good here. GME, same story. Same story across the board. We see Sundial here. Sundial growers slightly selling off. Sundial at 119, selling off here. Not looking good for Sundial. Workhorse going back down to its levels of around $10. Workhorse selling off. Nokia holding steady. Nokia not exciting. Nokia's not very exciting right now, but holding steady at 550.
Good Friday morning. Welcome to another hour of Squawk on the Street. I'm Carl Quintanilla with Morgan Brennan, David Faber. Markets here. We got some gains on this Friday, despite the miss on the jobs number. People perhaps looking for a more gradual move by the Fed. The Dow's on pace for a second week up. NASDAQ's going for 3 weeks, and we're really not that far away from record closing levels. Factory orders are out. Let's get to Santelli.
You know, Carl, we know there are issues, supply issues, and I think you're seeing it in these numbers. Factory orders for April down 0.6%. That's down triple our estimate of down 0.2. And if we look at X transportation, Well, transportation was the negative because without it, you jump up to up 0.5%, up 0.5 ex transportation. Now, on the durable goods front, we take the mid-month reads and toss them for the April final read. Mid-month of minus 1.3 on durable goods remains at minus 1.3. Ex transportation, very similar to factory orders, jumps up to 1%, same as the mid-month read. Capital goods orders, non-defense, ex-aircraft, one of my favorites, a proxy for capital spending, 2.2. We lost a tenth. It was 2.3 on the mid.
Okay. So we see NVIDIA here breaking to all-time highs here at 700. NVIDIA breaking to all-time highs at 700, basically hitting 701.
From home favorite DocuSign, that's rallying after topping earnings and revenue estimates. The CEO Dan Springer will join the gang on Tech Check in the next hour. Meantime, you can see those shares are up 14%. Retailer Five Below jumping after its earnings beat. Comparable store sales surging more than 160% compared to the same quarter a year ago. Those shares are up about 3.5%. And finally, another retailer we continue to keep an eye on, Bed Bath & Beyond, with B of A moving to a no rating on that name, believing the meme stock is no longer trading on fundamentals. B of A also dropping coverage on GameStop for similar reasons. Carl.
Morgan, speaking of which, our Seema Modi has a lot more on AMC and that crazy week. Hey, Seema.
Hey, Carl. Good morning. An incredible run in shares of AMC this week, putting its market cap at nearly $27 billion. Now, that makes the theater chain larger than 40% of all companies in the S&P 500, including big names like United Airlines, Kellogg, and Clorox. A number of stock sales announced this week, roughly 20 million shares in two separate deals, one involving Mudrick Capital, further diluting existing shareholders, which CEO Adam Aron continues to defend on Twitter and in his conversation last night with YouTube host Trey Collins.
If you arm us with a tool to go find value-creating opportunities for AMC shareholders, we can do that. If we're not armed with this tool, then you're tying our hands behind our back, and you'll make it just that much harder for us to land some of these attractive opportunities that benefit us all.
Just to put these stock sales into perspective, from January to May, AMC has raised about $1.6 billion. Short interest, something we've been talking about this week in AMC, it's risen actually to 21% from around 18 or 19% in previous sessions. So short interest in AMC is high, but not as high as some of the other names like Bed Bath & Beyond, Workhorse, which are around 30%. It does remain an actively traded stock. Just this morning, about 55 million shares have exchanged hands in the 30 minutes in trade here. And just to put that into context, the volume on this day last year was just around 8 million shares for the entire session. And a lot of talk, too, guys, about the massive call option volume as well in AMC.
Yeah, you know, Seema, of course, that key stat that you referenced, I mean, I think a year ago they had a little over 100 million shares. Now they've got 520 million shares. And as you heard from Adam Aron, he wants authorization to at least issue another 25 million or have the ability to do so. You can't blame him. This is an opportunity for them to continue to raise a great deal of capital to enable them to pay down debt. Remember, it's a highly levered company. But they've been successful so far, and he has in doing that and using this unusual move in the market to benefit the company so that it does secure a future life, given, you know, how constrained its current business actually may be.
Yeah.
And Mudrick Capital, by the way, which he said on that interview, has been a great help to the company. It's true. It has been. It was there to buy that $100 million piece of paper at 15% coupon that kind of opened the gates for others to consider lending to the company. But as I reported earlier, Mudrick, which also participated in the 8 million share offering, or was bought 8 million shares at roughly 27, is now out. The equity, that's not where they play. They're a distressed firm. It's the debt that's interesting. They're also out on that front, having obviously secured significant gains on all those debt instruments, as this company did successfully avoid bankruptcy.
And this has been part of Adam Aron's strategy even in the past. Remember, this is a guy who's actually come from hospitality. He's the former CEO of Norwegian Cruise Line, Starwood Capital, David, which was then bought by Marriott, as well as Vail Resorts. In fact, he was called by Newsweek article a couple of years ago as the man who transformed the ski industry. when he was the CEO of Vail Resorts, and he issued stock there. And with those companies, when they were going through a tough time, you wonder if this is just sort of part of his strategy. He's done a great job capitalizing on the momentum behind the stock and this investor enthusiasm around AMC, and we'll have to see where it goes from here.
Yeah, lives to fight another day, but what that life actually looks like for this company is still very much unclear to many. Seema, thank you. It's 75 million shares now in volume. Seema Modi.
So Mudrick Capital was one of the top shareholders of AMC, and also, last week acquired new shares and sold them. And, now they're stating they're completely out. Mudrick Capital no longer owns debt or equity in AMC. So they were one of the bigger shareholders of AMC. And apparently, as of today, they sold out completely of their position. So that's the latest.
Guys, we'll turn back to the jobs number. Our Steve Leisman joins us this morning with a very special guest. Morning, Steve.
Good morning, Carl. Yes, we have Cleveland Fed President Loretta Mester and an opportunity to get the Fed's views on the jobs report this morning. Good morning, President Mester.
Good morning, Steve. Glad to be with you.
Yeah, getting to be something of a tradition to have you on Jobs Day here. We like it. Give us your reaction. 559,000 jobs, the unemployment rate declining to 5.8%. Is this, in your parlance, substantial further progress?
So I view it as a solid employment report. Jobs up, unemployment rate down, labor force participation, wages up. So I view it as progress continues to be made on the labor front, which is very good news. But I'd like to see further progress. I'm using like February 2020 as a benchmark and looking at how far back we are to those levels. And some of the indicators show we're maybe about 80% back if you look at just the overall unemployment rate. Other measures less so. If you look at prime age labor force participation, we've only made it back about half the way after the big fall in that. So again, I think we still have further progress to make. I was pleased that we saw progress in that report, but I would like to see a little bit more on the labor market just to really see that we're on track. Gains, job gains, wage gains, labor force participation coming back.
To put some numbers on what you were just talking about, I was just doing some calculations. We are down 7.6 million jobs from February and 3.5 million when it comes to the labor force. Do you want to see all of that come back, every last job, before you change policy?
So I'm not looking at it that way. For me, substantial further progress doesn't necessarily mean getting back to all the levels. And there's going to be some that probably won't come back. As the number of people who left the labor force through retirement was higher during this pandemic recession recovery than in previous recession recoveries. And typically, and of course, nothing's typical about this cycle, but typically when people retire, they don't come back into the labor force. So I've been focusing on prime age labor force participation because I'm not sure we'll see the same level of overall labor force participation that we had in February. So again, it depends on what indicator you're looking at. But bottom line, I would like to see further progress than where we are right now.
Where do you come down on this issue of just how fast the recovery should be, President Mester? Some people were thinking that the numbers certainly the street's estimate was higher. There were higher numbers out there. Do you believe that job growth is being constrained at this moment by policy specifically?
Okay, nothing exciting going on there. So AMC here holding around the $50 level. We see the floor here for the day at the low here is 48.26, and we want to see that price hold. We have potential here of some consolidation going sideways and potentially breaking this downtrend to go higher. So AMC being just holding its ground here. Another one that I see trending here is NCTY, gapped up here, the 9 limited American depository share here. So ticker symbol NCTY. We saw a nice gap up. If we look at the daily chart, it ran up to almost $90 here, and since then has been selling off. I'm not sure if this is a treasury depository NCTY. I'm not familiar with this one, but this is one that is trending right now to be taking a look at, and it's currently trading at 1281. So AMC holding here. Let's see some BlackBerry cooling off. GameStop holding at 250. Clean Energy pulling back here. Sundial pulling back at 118. Also Tilray pulling back. Workhorse pulling back. Nokia holding at 550. Nokia holding at 550. We have Clover Health at 930. Pretty steady here. We're watching the daily. GTT holding above its gap up price target. Bed Bath & Beyond cooling off as well. So it looks like a day of where the stocks are going to be taking a breather here. Rocket Mortgage, Rocket Companies, pretty much going nowhere. Virgin Galactic holding around the 3165 level. Let's see some Nvidia here at 697. Sundial Growers continues to sell off 118 here. Sundial Growers. AMC at 5037. And we see here my account taking a nice pullback. Some of these positions pulling back for the day. Let's see what they say about CPI.
I'm keeping track on what you're thinking about, or talking about at the Federal Reserve, or thinking about talking about. But I want to ask you a direct question. Is it time to start talking about reducing the asset purchases of the Federal Reserve?
So I'm a long-term planner, Steve. I like to think about things well in advance and start thinking about. So I've been thinking about, as soon as we put on some of those asset purchases programs, I was already thinking about, okay, what's the end game going to look like? I didn't know when that would be, but, I've been thinking about it all along. I think, we want to be very deliberately patient here because, this was a huge, huge shock to the economy. We see now we're coming back, but again, it's easy to shut down an economy. It's much harder to have it come back. I've been very pleased with the resiliency of the economy, and we're going to guide our policy decisions based on what we've told you in our statements and in Chair Powell's press conferences, which is, we're looking for and basing our policy decisions on outcomes, right? How close are we to getting back to our dual mandate goals? What is the data telling us, right? Rather than just having a forecast, right? We want to see it in the data. So, we're going to get to the point where the economy has come back enough, right? There has been substantial further progress, and we're going to want to change our policy stance on asset purchases. And then later on, if things go, according to what we're hoping, right, on the funds rate. But again, right, those things can take time. And I think we've been deliberately patient, and I think that's been the right strategy.
President Mester, it's Morgan. That being said, I mean, given the growth that we have seen in money supply, all of the liquidity that is in the market right now, has the Fed had a hand in spurring this meme stock trading frenzy that we've been talking about for days now on CNBC, or other pockets of what is arguably irrational exuberance that is manifesting in the financial markets?
I mean, there's volatility in financial markets. Some of the valuations look higher than can be supported on regular fundamentals. I'll grant you that. I don't think that it's Fed policy that's driving that. And I think one of the things that's really important in times, where there is volatility, is to look at making sure that the markets are resilient, the underlying fundamentals in banking, that they have the wherewithal and they're well capitalized. And we've been focusing on that throughout the pandemic, and I think to good avail. there's more work to do on that in terms of the Treasury market, as you know, had issues at the very start of the pandemic, and those longer run issues in terms of even the non-financial sector, hedge funds, et cetera. We're looking at that. And of course, the Board of Governors, Vice Chair for Supervision, Randy Quayles, is looking at those things. But, I think that we're not driving those outcomes. I think that's just a case of people, their risk preferences have gone up as things improved in the economy. Our job is to just make sure that the fundamentals in the markets are sound.
Yeah, and I understand that. You have this legislated mandate, dual mandate, price stability, full employment, sustaining those. But that being said, is there a point at which, given some of the activity we are seeing in the market, some potential bubble talk in pockets of the market as well, is there a point at which the Fed would need to respond?
So I don't see that at this point in my view of the markets at this point. I think it is, it behooves us to keep an eye on those financial stability issues that you're pointing out. We don't want to take our eye off of that. But in terms of our monetary policy tools, I think we really want to be focusing in on the macro economy, price stability, maximum employment. And then we want to be very focused on making sure that we're doing all we can to increase and maintain the resiliency of the markets. And I think we in this pandemic, we had to have an eye on both of those. Early on when we came in, the asset purchases at the start were not about the macro economy. They were about market functioning and making sure that the markets were functioning. Because we knew that if those weren't functioning, right, it wouldn't matter what we do for our macro policy, our monetary policy tools. It wouldn't.
Okay, bunch of noise. How to stop her. Okay, so we see AMC here holding at $50 level, 49. So we want to see it break this support, this trend line. We want it to break my 10-day moving average. Yeah, right now, for being the first, about hour of the market open, nothing too exciting happening as of now. We're just seeing most of these stocks cooling off slightly. No major moves, no craziness. Volume slightly low. So we'll see if we see some volume coming in towards the middle or towards the end of the day. Typically, in the middle of the day, during lunchtime, we don't see much happening until towards the end of the day, towards the market close. So sundial growers right now at 117. Big pullback here. It hit a high today of around 136, 130. Let me check here. Yeah, about 137, and now at 117, giving away 20 cents of losses here, sundial. Let's go to Tilray. Tilray giving up. Workhorse giving up. So it looks like most of these stocks are pulling back here to a range. Let's see if it holds and continues lower, or if it holds and we go back up to stabilize some of these prices. Bed Bath & Beyond giving away the gains here. Palantir, we see some decent volume, nothing too special. Rocket Mortgage, pretty much flat here. Virgin Galactic looks like it's cooling off. Let's see if it stays above the $30 level here. And let's see AMC. I don't see any new news on AMC. I don't see anything new special happening, other than we're basically watching paint dry here at $49 level. And we see it's really struggling with this trend. This is brutal. It's like it's so close yet so far. So we'll see in a few minutes, maybe within the next hour, to see if we hold, around the $49 level, break this downtrend, and see AMC consolidate at this area before going higher. So I don't have any new news other than Modric Capital selling off completely from their position. And I did look at the short volume ratio, slightly lower today, slightly lower yesterday after the close. So it looks like some of the shorts started covering. So we want to see more shorts coming in strong to create that momentum and really see some buying pressure. Let's take a look at some of the other stocks on my main list. As announced earlier, PSTH taking a stake on UNG Music, Universal Music, a 10% stake on Universal. Nothing exciting. PSTH sold off on that news. Not what the people were looking for. We see CCIV here. We see CCIV holding 2365. So we've seen a nice run on CCIV in the past week.
In Delaware, we're going to continue to monitor, and we'll bring you there live once he begins speaking. In the meantime, as you can see, major averages are higher on this Friday, with the S&P up 0.6%. 42.18 is the level there, David.
Okay, we got some SPAC news to share with you this morning. It involves what really was the largest SPAC out there, the one sponsored by Bill Ackman and his Pershing Square, called Tontine Holdings. But it's not really a SPAC deal. Leave it to Mr. Ackman to come up with something entirely new. It involves Vivendi, of course, which owns Universal Music Group, a business, by the way, that has rebounded quite strongly over these last few years as music streaming has changed the profitable nature of the business for the better. And the value of Universal Music Group has been going up. In fact, to the tune of, it's worth $42 billion now, at least according to Mr. Ackman, who's willing to put $4 billion of his SPAC's capital into Universal Music Group. But that's what they're doing here. They're buying a 10% stake at a value of $42 billion, so $4.2 billion basically going to be used to purchase this stake. Then they will distribute that stake to the holders of the SPAC, PSTH. You just saw it. Of course, it's down about 9% this morning. And then the SPAC will kind of live on. We talked for some time, previously about how large this was and could they ever find a deal. Well, this kind of is a transaction designed to do that, I guess, but it's not typical in any way. Following the deal, they'll still have $1.5 billion in cash. And as I said, they'll continue to pursue a separate business combination. The UMG stakes satisfy the SPAC requirements, so you won't have to be held to the SPAC rules any longer. They'll have more than 2 years. And then he's creating this thing called a SPARC. Which will issue rights to the SPAC holders on a one-for-one basis at $20 a share. And that's going to add more capital to this SPARC, which is not a SPAC. And if you've lost me, I don't blame you. It's complicated, but we'll kind of keep it simple, which is, yeah, $4.2 billion, 10% stake, great value for Universal Music Group and its owner. Those shares, by the way, soon to be listed on the Amsterdam Exchange. But Morgan, leave it to Mr. Ackman, as I said, to come up with a novel structure for a SPAC that we were watching, given it was the largest of all of them. By the way, it had been issued at 20, so it's getting closer to that issue price.
It definitely seems like a very creative structuring of a deal, and I would love to see a meme of you breaking down SPAC versus SPARC. SPAC, SPARC, SPAC,
yeah,
SPARC.
The SPARC.
But I also, it's also very reflective. We were talking about this earlier of just what we've seen in terms of this crazy transformation of the music industry as well over the past decade plus. And the money that is now being made by some artists would argue it's probably not them, but some within this new streaming landscape, that you would see a company such as this now valued at $42 billion.
Yeah, I think that in some ways that's the more interesting part of the story as we try to wade through the complexity of this deal is the rebound in the music industry worldwide. And obviously Warner Music is another name you can put up because, of course, that has had a very nice run of it. Man, what a purchase that was. I mean, I can remember talking to Edgar Bronfman years ago when stealing music was all the rage, and that company was public then went private, then came back, Carl, to the public markets. But we'll see. He seems to think $42 billion is a valuation his SPAC holders will be happy with. Although, again, right now at least, more selling than buying of that particular equity.
Yeah, really quick, David. I mean, Ackman, and there's lots of jokes about Bill Spackman on Twitter today. Historically, retail, right? General growth and Target and restaurants and Chipotle. But I wonder what you think it says that media has caught his eye.
Yeah, I mean, I think this is a specific situation, and again, we haven't heard from him specifically on what he views and why he views this as great value at this level. Obviously, people could have gone out and bought Vivendi and/or have their own opportunity to buy Universal when it's listed on Amsterdam. But Carl, clearly they see, he believes, I guess, there's real growth ahead for the industry. Of course, digital has been extraordinarily beneficial. Now that people are no longer stealing, they're just
publishing
streaming.
Catalogs too. The prices there have skyrocketed.
Yep.
Yeah, well, when the cost of music comes down, you don't have to steal as much. That's definitely for sure. We are awaiting the president to comment on the jobs number. More Squawk on the Street continues in a moment.
So we're getting to a point where on the 5-minute chart, AMC is meeting up here with a trend line and holding here, getting some, upticks here. And we'll give it about another 15 minutes to get a real direction. But looking strong for AMC, holding around the $49 level right now, trading at 51. Let's see some of the top movers here. Roblox up 5.78%. Roblox at $100. Roblox on a massive tear. IPO'd recently. Chopped away. People getting bullish. Kathy Wood was buying it. And then sideways, creating this pressure and momentum and not exploding. I hadn't seen it until now. It's at 102, breaking the $100 mark. It broke it 3 days ago. So Roblox here getting some moves. We have Plug Power today up 3.6%. We have CCIV here up 2.4%. We have here ChargePoint. ChargePoint up 1.45%. And so those are some of the movers today. We have Tattooed Chef at 22.38. Let's see, Lee Auto just slightly up, almost at 25, trading at, there you go, 25 now. Let's see, AMC trading at 51. Let's check out some of these trending stocks. We have BlackBerry at 14.94. BlackBerry just cooling off at the open and just holding here at above 14.50. AMC here, we see breaking my trend line, but getting stopped by my 10 period moving average here, and it looks like it's holding pretty nicely.
Our ETF Spotlight. We are taking a look at the cybersecurity ETF Hack. That's adding to its monthly gains, getting boosts from its top holdings like Cisco, Proofpoint, and Fortinet. It's up about 0.5% right now. Obviously, it's been another big week in terms of news around cybersecurity and breaches. But watch CrowdStrike specifically this morning. That's reported better than expected results, with the CEO George Kurtz saying a robust demand environment is providing, quote, a runway for long-term sustainable growth. The stock is lower today. It's down about 2%, but it's up almost 10% over the last 3 months. We're going to take another quick break, so stay with us.
Okay. So AMC here at 51.88. We're seeing now some of these stocks, money coming back in some of these high flyer stocks that we've been seeing moving throughout this whole week. Sundial Growers trying to go back down to $1. Big pullback today. Right now it's at 118. And we'll leave it here at AMC. We'll see if it breaks these levels at 51. We want to see it break above around 52 and trade above 52 at this range. Here today's low is at 48.26. So we're talking about between 48 and 52. It's been range bound around that area for the day. Okay, looks like there's a short interest here on AMC. Let me pull that up. There's a short interest update right now. Let me pull up those numbers. Just got an alert. Let me look here. So it looks like they're closing their short. So short interest update, AMC. AMC has begun the day in turbulent fashion, down 5% and up 8% so far. Down 5% and up 8% so far. But it's currently close to yesterday's close of 51.34. Estimated short interest is 17% of free float with 87.26 million shares shorted. So let's take a look at that. So we pull here at Ortex. Let's pull it up here. We see the short interest minus 217. It's currently at current short interest percentage is of a free float is 17%. So we're seeing the short interest ticking down here. So it seems like they're covering here. This is the latest short interest update of AMC.
Since we left office. And I don't know if we'll ever see eye to eye on that day.
And F. Lee Bailey is dead at the age of 87, the high-profile defense attorney, best known for being part of the Dream Team that won a murder acquittal for O.J. Simpson in 1995. You're now up to date. Carl, I'll send it back to you.
All right, Rahel, thank you very much. Hiring did pick up in May as employers added 559,000 jobs amid falling COVID-19 cases, a loosening of business restrictions. Of course, it was below the consensus estimate of 671,000. The chief economist of Goldman Sachs, Jan Hatzius, joins us this morning to talk more about the number. Jan, great to see you again.
Good to be with you, Carl.
You did say that there would be a lot of uncertainty around this number, but you also said that the signals you were tracking indicated sharply higher employment levels relative to March. So directionally, do you think this number, the print itself, makes sense?
Yeah, I mean, it was a little on the disappointing side, not as much as in April, but I think for the same reasons. One, it again seems that the seasonals may have been a headwind here. In not seasonally adjusted terms, employers added almost 1 million jobs. And number two, I think there's pretty strong evidence that labor supply is an issue, given the big increase in average hourly earnings alongside mildly disappointing job gains. And that increase was also concentrated in leisure and hospitality, which is the lowest paid sector where these labor supply issues are probably most pronounced.
Right. Participation, again, challenging. Were you surprised that we went negative a little bit on it? And do you think it's tied to some of the other data that we've seen that suggests people are just less interested in going back to the job that they had before, period?
Yeah, I think it's another data point in support of the idea that labor supply is an issue at the moment. And I think the household survey overall was pretty consistent with what you saw in the in the establishment survey, also a somewhat weaker than expected, despite the bigger decline in the
Okay, so now we're seeing AMC breaking this downtrend. This is positive news. AMC breaking this downtrend, trading around $53, breaking my 10 period moving average here, simple moving average on the 5-minute chart. So we're seeing some positive news here for AMC in the short term, and we see it breaking a downtrend, trading at $53.
our ability to recover. But for these reasons, I think it's taking a little bit longer in the labor market.
See some of these changes you just talked about coming into the fall where the labor market is concerned. But when you see average hourly earnings up 0.5% month over month right now, and you're hearing about the shortages in the meantime and wage pressures for companies looking for workers, how sticky is that when you see those types of increases, and how does it factor into the bigger, broader inflation conversation that we continue to have here on this network?
I mean, my view would be that these are more short-term issues, and the increases are going to diminish as we go into the fall. That doesn't necessarily mean that the level goes back down quickly, but I do think that we'll probably see more muted wage increases. I think at the margin, it's probably a factor that is going to push prices somewhat higher. But again, the question is, I think, really how long lasting is all of this? I mean, if we had reason to believe that these supply issues were going to last, say, well into next year, I think it would be a more serious concern over if it unwinds to a significant degree over the next few months, then I think it's just probably less of an issue, especially if I think about this from the perspective of monetary policy, which is always going to operate on a somewhat longer planning horizon.
Yeah, from a fiscal standpoint, I mean, do we need more stimulus? When we're having talks about infrastructure, social safety net changes as well, something that could be up to, and I suspect it probably won't be this high, but up to $4 trillion in additional spending this year. Does the economy actually need it? How does that factor into this entire conversation?
Well, that $4 trillion proposal is spread out over basically a 10-year period.
Mm-hmm.
So that's a very different type of program from the American Rescue Plan and other programs that came before it. It also will be, at least in large part, financed by tax increases. So I wouldn't really think of this as stimulus so much, but really more as, structural changes in the way that the government operates.
So just want to interrupt here slightly. We're seeing the overall markets bullish right now. We see the NASDAQ upticking at 334. It's up right now about 1.46%. If we look at the SPY, it gapped up today. Yeah, SPY getting some love. So we're seeing the overall markets being bullish right now. Right now, the VIX is down to 1654, the volatility index. So we're seeing positive upticking in the overall market, setting up for the weekend, which is looking good.
And for the American people. This morning we learned that in May, our economy created 559,000 new jobs. Unemployment rate fell to 5.8%, and wages went up for American workers. That means we have now created over 2 million jobs in total since I took office. More jobs than ever been created in the first 4 months of any presidency in modern history. Triple the rate of my predecessor, 8 times the rate of President Reagan. The unemployment rate is now below 6% for the first time since the pandemic hit. The first 14 months, first time in 14 months, we saw the largest decline in the number of long-term unemployed more than an entire decade, in the last 10 years. Long-term unemployment dropped by the second largest amount ever recorded. Not only that, but the signs of further progress are already here. This report is based on a week in early May. That's how they determine the job growth or loss. We have growth, and that week in May, we only had 35% of working age adults had been fully vaccinated. Now they were still all wearing masks. Since then, 21 million more adults have gotten vaccinated, making it easier for them to return to work safely. In short, this is progress, historic progress, progress that's pulling our economy out of the worst crisis it's been in 100 years. And it's testament to the new strategy that is growing this economy, not only growing it, but growing from the bottom up and the middle out. Remember, when I took office in January, our economy was in a tailspin. Job growth had stalled. COVID was raging. Average initial claims for unemployment insurance were over 830,000 per week. Now those claims have fallen below 430,000, about half of what they were when I took office. Before I took office, almost 24 million Americans were going hungry. Remember those long lines of cars, miles long, people waiting for just a box of food to be put in their trunk? That number has already dropped by 25%. Still too many, but clear progress. Before I took office, independent experts were projecting that the American economy would grow by 3 or 4% in 2021, this year. This week, the Organization of Economic Cooperation and Development, the so-called OECD, which makes up a group, includes the world's largest economies in its membership, and has been one of the leading bodies analyzing economic growth worldwide and individual nations, increased their projection for U.S. economic growth this year to 6.9% in 2021. That's the fastest pace in nearly 4 decades. In fact, the U.S. is the only major economy where projections of future growth are stronger today than they were before the pandemic hit in 2020. And in May, manufacturing activity was nearly as strong as it was in more than 15 years, stronger than in 15 years. No other major economy in the world is growing as fast as ours. No other major economy is gaining jobs as quickly as ours. And none of this success is an accident. It isn't luck. It's due in no small part, first of all, the cooperation of the American people in responding to my effort to get COVID under control, wearing masks initially and getting vaccinated. And it's no small part to the bold action we took by passing the American Rescue Plan. The plan provided those resources to get shots in people's arms, underwrite the vaccination effort, enough vaccine supply for every single American, more vaccinators, people to put shots in the arms, and more vaccination sites. And now, 52% of American adults are fully vaccinated. 75% of our seniors are fully vaccinated. And the American Rescue Plan delivered economic benefits directly to the American people. Because of that law, more than 167 million of those rescue payments of up to $1,400 have gone out to individual families. A recent study, the Census Bureau data found just how much these checks mattered. They drastically reduced depression, according to the study, anxiety, and hardship for families. More than 40% fewer families struggle to afford food, rent, utilities, car payments, student loans, and health care expenses. Small businesses and restaurants were getting killed. Now we're delivering loans and support they need to reopen and to stay open. Schools are struggling to reopen, so we made vaccinating teachers a priority. We delivered schools the much support they needed. State and local governments had to lay off tens of thousands of educators and first responders. Many are now back on the job thanks to the rescue plan. In fact, in May, state and local governments added 103,000 education jobs, returned them to work. These funds are continuing to get out this month to support state and local governments, which will help get more people back to work. Small and medium-sized businesses are now able to take advantage of a special tax credit called the Employee Retention Tax Credit. It provides businesses a generous tax credit to retain or hire more workers. Through our Restaurant Revitalization Fund, we anticipate being able to help over 100,000 hard-hit restaurants stay open or reopen. And beginning next month, most families with children will be getting a tax cut, which should be going and deposited in their accounts directly into their bank accounts every month. We know that access to child care is one of the biggest barriers in the way of parents going back to work. Our administration is delivering $39 billion in child care relief to help child care providers get back on their feet, the providers, and serve more families. And this month, our economy added nearly 20,000 more child care jobs that weren't there last month, in fact, allowing parents to have access to get help. And temporary boost in unemployment benefits that we enacted, I should say, help people who lost their jobs through no fault of their own and who still may be in the process of getting vaccinated, but it's going to expire in 90 days. That makes sense. It expires in 90 days. To sum it up, look, COVID cases are down. COVID deaths are up. Unemployment filings are down. Hunger is down. And vaccinations are up. Jobs are up. Wages are up. Manufacturing is up. Growth is up. People gaining health care coverage is up. And small business confidence is up. America is finally on the move again. As we continue this recovery, we're going to hit some bumps along the way. Of course, that'll happen. We can't reboot the world's largest economy like flipping on a nice light switch. There's going to be ups and downs in jobs and economic reports, but we're going to be supply chain issues and price pressures on the way back to stability and steady growth. In the coming weeks, my administration is going to take steps to combat these supply constraints, building on the work we're doing on the computer chips. That is, we're providing more computer chips to be manufactured here in the United States so it doesn't slow up the manufacturing of automobiles, for example. Everyone needs to get their shots, though. Now's the time to accelerate the process we've been making. Now's the time to build on the foundation we've laid. Because while our progress is undeniable, it is not assured. That's why I proposed the American Jobs Plan and the Americans Family Plan for generational investments. We need to make those investments today to be able to continue to succeed tomorrow. We have a chance to seize on the economic momentum of the first months of my administration, not just to build back, but to build back better. This much is already clear. We're on the right track. Our plan is working, and we're not going to let up now. We're going to continue to move on. I'm extremely optimistic. I hope you are as well. And may God bless you. May God bless America. May God protect our troops. Thank you all for being here this morning.
President, give us a headline on the infrastructure talks.
I'm going to be having a talk this afternoon, and I'll be able to report to you after that.
Are you expecting a counteroffer, Mr. President?
I'll tell you after I meet this afternoon.
Mr. President, you saw Cox's and Dr. Fauci.
That is the president fielding at least one question about a meeting with Senator Capito on infrastructure later on today. But broadly, talking about improving trends in jobs, vaccination, confidence, manufacturing output and wages, taking some credit, but also saying it's due to, quote, the cooperation of the American people. Jan Hatzius is with us from Goldman Sachs talking about the jobs number. Jan, we can react to the president, but the one question I wanted to ask you in particular coming out of this print is what it sets up Powell to say on the 16th and what that means for the taper discussion that the market is obviously focused on.
I think it's not going to change a lot. This report, I think, will probably get some people who are on the more hawkish side of the debate saying that there's another big wage increase here. We had obviously some big price increases in the CPI and PCE report, and that should mean we should get on with the taper discussion. But I think the majority and the Fed leadership are probably going to say that a lot of these issues do look more transitory, and that's true both in the price numbers and in this jobs report, because it seems to be driven by temporary labor supply issues. So our expectation is that the discussion is only going to gather pace slowly, and that the actual taper announcement comes perhaps sometime late this year, and the tapering starts in early 2022. There's obviously some uncertainty around that, but I think that is still the broad time frame that we've been looking for. We haven't made any changes to that.
Jan, we appreciate you.
Okay, so now we have AMC holding here at 52, Let's take a round here with some of the top trending stocks here. We have BlackBerry here holding at 15, AMC at 52, GameStop at 256. We have Clean Energy here holding at 989. Sundial, massive pullback here. It's currently at 118. Tilray at 1899. Workhorse at 13. Nokia is not moving much. It's very stagnant and holding steady at 550. No big moves up or down. So it's pretty much flat here. We have Clover Health. Clover Health at 928. We saw a gap up at the open. This is the 5-minute chart. Gap up, pull back, hit my 10-period moving average, and staying above, which is bullish, but very low volume. Very low volume on this Friday. We have GTT giving away those gains. GTT at 284. Let's see some Bad Bath & Beyond at 3163. We have Palantir at 23.95. We have Rocket Companies at 19.98 and Virgin Galactic at 31. So we're not seeing much here today. Today, we're just seeing we saw a pullback at the open, and right now it's coming back up and consolidating. So might hold this way for some time. We might see just it hold these price levels. The good news here on AMC on the 5-minute chart, it broke this downtrend and now is trading above the downtrend, holding ground, and it's pretty much trading within my 10-period moving average here on the 5-minute chart. Let's take a look at PSTH. Pershing Square Tontine reporting the merger with UNG, Universal Music, and not getting much love. The people didn't like this move. Let's look at the volume here on the daily. So the volume is currently at 117 million shares of an average of 264. So it's currently below. I mean, it's still early on during the day. So right now, possibly on target to the average.
In honor of Pride Month. David, we're taking a look at some other asset classes that have been high-flying until late, very volatile.
We're 53 minutes into the show. We haven't really mentioned Bitcoin. So let's take a look at it. Yeah, it's on the move. Isn't it always? Down 4.5%, of course. And once again, there is also that Elon Musk effect. Last night, tweeting a Bitcoin hashtag with a broken heart emoji, along with a meme about a couple breaking up. Now, that referenced lyrics apparently from a Linkin Park song. And that's all I can share with you, Morgan. I don't know if you have more for us on the inner workings of that tweet.
No, but I like that it's a Linkin Park reference, having come of age with that band. But I also think it's worth noting where Bitcoin and cryptocurrency in general and the pressure we're seeing there is concerned that you also have the U.S., the Biden administration, looking into cryptocurrency's role in ransomware attacks. This is obviously, especially by many of the naysayers of cryptocurrencies, something that's pointed to is its role. And it comes in a week where, obviously, we've had a lot of news around additional hacks, JBS, others, disclosures there as we continue to see cybersecurity threats increase, or at least the disclosures around them increase where critical infrastructure is concerned. But you can see Bitcoin right there, 36,857 is the level. Ether also down under pressure, even though it's been an outperformer at least until late versus BTC.
Yes. But it's funny because we have not focused this week as much, perhaps, as we might otherwise have on these continued ransomware attacks and just the continued
the digitization of everything. It comes with
cyber
these
espionage
consequences
that is taking place
as well, unfortunately.
as well from China, and it continues to be such an important story for us to be aware of. Makes you wonder sometimes whether there isn't perhaps even more coming. As for the broader market this morning, we're up 0.7%. The Nasdaq is outperforming as well. We've talked so often, of course, about the meme stocks, but there's been sort of a level of speculation in some other names that we haven't seen for a while. I've noticed that shares of Lucid Motors, the ticker symbol still CCIV, have had a very good week. A number of SPACs have even come to life. It's been a while. Every Friday for quite some time, of course, we go over all those SPAC filings. That slowed dramatically, but it has been coming back to life a bit. Things have been clearing the SEC, so you have seen more. We've talked a lot this morning about Bill Ackman's bizarre SPAC deal, Spark and a SPAC and delivering it to shareholders. It's complex, but beyond that, certainly we have seen sort of new speculation in the market, at least in certain areas other than the meme stocks. But getting back to them, AMC and other meme stocks, of course, as we pointed out, have risen dramatically this week, at least a number of them, leaving many to wonder what lies ahead for the retail investor. Not on Reddit. Rachel Ravashati is the founder and CEO of Asadina Capital, and she testified before the Senate Banking Committee on GameStop, Robinhood, and the state of retail investing. Rachel, good to have you. What did you want them to know, and what is your takeaway from this latest run-up, particularly in AMC?
Well, thank you for having me this morning. The way that we're looking at it from the perspective of the everyday investor is that the meme stocks themselves aren't needing additional regulation as long as they're disclosing the risks to investors. And honestly, AMC's filing this week is just full of caveats that basically amount to them telling investors, don't buy our stock right now. So I'm not sure that additional regulation of the financial, of the stocks themselves are what's needed. It's really more additional regulation of the financial markets, because with this amount of volatility, we're finding that there's a loss in confidence, and that could result in a loss of participation in financial markets, which, just harms everyday investors. So, we're looking at what we can do to add brakes to things like the high-frequency trading that's just acting as an accelerant on these types of stock bubbles.
Yeah, although in this name in particular, I guess, AMC, Rachel, and feel free to disagree. I mean, it does seem to be the Reddit mob to some extent. I'm looking at my Twitter feed here. It's just about buy it, keep pushing it higher, keep pushing it higher. Nobody really discusses fundamentals in any real way, because if you were to do so, you most likely have to make an argument that the stock should be worth a great deal less.
That's very true. I mean, AMC themselves is saying that their market price doesn't reflect any dynamics related to their underlying business or the industry fundamentals as a whole. And so the way that I'm looking at it is, what more can you ask of a company when issuing stock? The company's disclosing that, look, we're in a bubble here, and we're just trying to reduce the cost to us of getting additional capital to fund the functioning of our business. The problem here is not that we have these run-ups. I mean, there's going to be run-ups whether there's Redditors or not. The problem is when there are other forces within the market, like high-frequency trading, that really make the whole situation astronomically worse.
Rachel, can we say yet whether we have this new class of this new generation of retail traders, retail investors, day traders that are in the market and likely not to go away?
Well, I mean, it's a little difficult to say that. This started since January, and I know that we all kind of feel like time has sped up since the pandemic. But I think you need a little bit more time before you call it a new class of investors. What I'm definitely seeing is smaller investors feeling like power's out of balance in the financial markets, and that large hedge funds and institutional investors are the only ones who win. And I got to tell you that, over a decade ago, it was that same sentiment that started the ESG, or the sustainable investing revolution that we're in now. So I wouldn't underestimate them, but I think it's too early to call it a trend. Yeah.
Well, ESG's come a long way since that and has obviously broad institutional support as well. Rachel, thank you. Appreciate it.
Thank you.
Give you another quick look at the markets here, Morgan, as we continue to be having had a fairly good week, but up 12.4% for the year on the S&P so far, obviously far outperforming the NASDAQ. And a key is going to be that rotation that's taken place between growth and value.
Yeah, it's pretty incredible when you put it into context like that. The NASDAQ is the outperformer today, also up 1.5%. That's going to do it for Squawk in the Street. Have a great weekend. Tech Check starts now.
He finally really did it. You maniac! You blew it up! Oh, damn you! God damn you all to hell!
Good Friday morning and welcome to Tech Check. I'm Deirdre Boza with Carl Quintanilla and John Fort. Today on the show, Adam Aron charms the pants off retail investors. We break down the monkey business that is now known as the ape trade. Then a Bitcoin breakup, why a Musk meme is worrying the crypto crowd this morning. And we'll go live to Miami. Later, an Axe back. Bill Ackman has been looking for a dance partner. Will Universal Music hit the right note? We'll discuss. John?
Yeah, well, let's talk about some tech, too. 3 stocks to watch on the move at this hour. Shares of Asana and DocuSign getting a boost this morning after strong earnings results. High growth names that are seeing momentum continue, while PagerDuty beats on the top, not as much the bottom, goes the other way. The CEOs of all 3 of those companies this hour with exclusive interviews right here on Tech Check. Carl?
John leading the charge this morning, the ape army marching on. AMC CEO Adam Aron embracing the retail trader, now going on a YouTube show with the voice of the AMC Trader Online YouTuber Trey Collins.
The stronger AMC is as a company, the more people who bet against the company should be concerned. We've raised billions of dollars over the past 10 months. And we have almost $2 billion of cash in the bank.
Adam Aron is setting the bar in terms of CEOs, reaching out to retail investors and caring about what the retail investor is asking for. They've raised well over $1 billion in 2021 alone, which is really going to help set them up for the next 1, 2, 5, 10 years.
Well, now, while Aron and the Reddit crowd remain bullish against the shorts, Wall Street essentially moving to the sidelines here. Mudrick Capital, the hedge fund that made headlines for investing and then immediately selling stock earlier this week, is pulling out entirely. Faber says the firm has exited both its debt and equity positions. Sell side's at a loss. Stock is above 50 today, but Wedbush price target $750 from $650. Says maybe $10. And B of A basically just throwing in the towel completely, moves to a no rating on Bed Bath, terminates coverage D of GME. Quote, investors should no longer rely upon our previous investment opinion or price objective. So with fewer sell-side ratings, we're left with what the head of the ape army thinks the valuation should be.
I'm reminded, guys, of a few years ago. Do you remember when Elon Musk took a question from a YouTube analyst on the earnings call, and Wall Street analysts, they sort of threw up their arms and revolt, and they said, how could Elon Musk spend 20 minutes with a non-Wall Street analyst? And the writing was on the wall back then. Take a look. I mean, Adam Aron speaking directly now to a YouTube personality, and the YouTube personality, Trey Collins, getting some really interesting information out of him as well, John. And what we're seeing here is just this changing landscape that we've actually been seeing over the last few years, intensified by AMC and GameStop, a new generation of investors that are thinking about value very creatively, and I think will affect the way that investing continues, even in the companies, the big tech companies with real fundamentals going forward.
Nah, I don't think so. I mean, I think this AMC thing, it's a great movie, but AMC is no Tesla. This is not a tech stock. This is probably a real estate play. It's a reopening play. People do want to see movies again, but the idea that this is worth 52 plus. I mean, hey, maybe if you think it is,
John,
go ahead, but this is not Tesla. Look, this is one of those cultural moments, Deirdre, I think. It's kind of like we're going to look back on this. It's like iOmega or AOL Time Warner or the Groupon IPO. We'll look back on 2021. But remember that? Wasn't that crazy how those stocks did that thing? It didn't really matter in the long term before. That was weird.
I get your point, but Tesla wasn't Tesla until a few years ago, until it was able to tap into its fans, turn them into investors, raise capital, and there's been a lot of operational milestones that have been reached, gigafactories. That capital raise has allowed Tesla to become much more than it was a few years ago.
If AMC had Elon Musk reinventing entertainment, then maybe AMC would be. Tesla was always Tesla. Tesla always had Elon. It was always about electrification of cars, and beyond that, changing, the way transportation and energy work worldwide. This is not that, and it's an interesting investing moment. It's worth spending time on. But if you get distracted and you think this changes all the rules of investing, that 2021 is some sea change, I mean, maybe you're right, but I don't think so.
How can you be so certain? AMC now has billions of dollars. Why can't they acquire or entice the next Elon Musk? I'm not saying that it will, but this idea of them being able to raise capital by bringing their fans, speaking directly to them into the mix, just opens up a whole world of possibilities that perhaps Wall Street, typical Wall Street analysts, haven't thought of. And Carl, isn't that exactly what some of the analysts have done today? Thrown in the towel and said, listen, we can't judge this thing anymore because there are other factors at play here. Who's to say that that doesn't start to affect other companies and some of the benefits and drawbacks that may go along with that, especially in terms of corporate governance? John, you're right in a sense. Who knows that they're going to make good decisions? They could make stupid ones.
I do agree that the practice of raising enough capital to get escape velocity and truly think outside the box the way Tesla has is clearly what Adam Aron has in mind. The question is how many followers he's going to have on the sell side who are willing to think that broadly about it. And we have a couple fewer on that front today. The perfect person to ask about this is Dan Niles of the Satori Fund, who joins us this morning to talk about AMC and pockets of froth in the market at large. Dan, happy Friday. Thanks for being with us.
My pleasure, Carl.
So 30,000 feet, it seems to me your view is that, A, these pockets of froth, or whatever you want to call it, aren't new. They're comparable to things that we saw a decade ago or even before that. They're a function of money supply, I think, is your view. I guess the question is, do they bother you? Do you think it makes people question the systemic health of the market at large?
Well, there's sort of two answers to that. I mean, as you brought up, people think this is new. It completely isn't. If you go back to a Fortune magazine cover that I sent you, it said Trader Nation, and that was 1999. And one of the taglines was, they can break you or make you rich. So that's what we're going through today. And this was in 1999. So it's not new. What's new is the fact that these traders are armed with stimulus checks. They can organize more easily on things like Wall Street bets. They can work from home, and there's no cost trading. So those are the differences. But this has happened in the past. I think it's a good thing what's going on, because if this gets people into the market, only about 55% of the population owns stocks. It's the greatest wealth creator, over time that there is. And so if it gets people interested in investing, that's great. What I don't like is when you have people sort of taking out mortgages on their homes and putting themselves in risk if the thing, collapses. You want to be able to, invest what you can afford to lose if you're going to play in something like this, because it is just gambling. And there's nothing wrong with that if that gets you interested in the markets, but you don't want to put your family at risk. And that's where I have an issue with some of the advice being given.
So the activity and the price action and the tolerance for volatility and the different constituencies, whether that's good or bad, I wonder, is it making you bend the rules, your traditional playbook rules? Because things that you thought were largely impossible, huge dilution resulting in a higher price, for example, aren't happening the way they have in legacy times. So are you having to change the way you think about the market?
Not really. I mean, I've been doing this, unfortunately or fortunately, long enough where I started in the business in 1990. And I remember in 1990, you may remember this, some of you, but you had a biotech boom in the late 80s where every company was going to cure cancer. And so, you had that going on back then, and you had this big boom, and then you had the recession, things collapsed. 2000, you obviously had the internet boom, and some of you may remember this, but companies would change their names and just put .com at the back of their names, and the stocks would double overnight. So that's not any different than what's going on right now. I mean, it's just, you have a generation of traders, some that weren't even born back in the late 90s. So, but what it's making me do differently to your other part of your question is that on names where I go, okay, there's a large retail component, there's a large short interest, it might be something targeted by Wall Street bets. For now, I'm sort of saying, okay, just stay away from that. But my view is pretty simple. When we get to the point, and I think we will by late this year, when the Fed starts to take away the easy money, because don't forget, the Fed balance sheet last year expanded by 77%. Money supply right now is up 18%. The prior peak was 14. That money supply number had gotten up to 27%. So that tells you how much free money is just floating around, driving up everything. When the Fed backs off of that with tapering, I think that's when you can go in and say, okay, we can potentially go after and short some of these highly overvalued names, because then the free money starts to disappear and you actually start to contract some of that free money. And that's when things start to get dangerous on the downside. Right now, there's nothing that says AMC stock can't double, triple, quadruple from here, much like GameStop, right? GameStop went from $6 to 250 or so today. So you want to stay away from this stuff right now, I think, unless you're doing it in very small size and you have a basket of them.
Dan, that's sort of what I'm getting at here, is there is actual innovation that is happening in technology in the world that public companies are doing. Like in the past, we had client server. That changed the world. Internet e-commerce, yes, that changed the world. Mobile changed the world. Cloud has changed the world. Crypto and Bitcoin could be changing the world in finance. But I haven't heard an argument or seen anything in AMC and GameStop, those trades that are happening. It's interesting. And as you said, the liquidity and the stimulus and interest rates probably have something to do with it. Does it have implications for the entire market and that every company in the cycle of innovation is going to have to react to? I don't think so. I don't see it.
Yeah, no, that's not something that's going to have happen. The one thing also I'd remind viewers, and I've said this before, is, as you rightly pointed out, John, like e-commerce changed the world. Amazon stock in 1999 peaked at $106 a share. They were doing $1.6 billion in revenues. Over 2 years, the revenues doubled from $1.6 billion to $3.1 billion. The stock went from 106 to 6 over a 2-year span of time as the whole tech bubble imploded and NASDAQ went down 79%. So things may change the world. It doesn't mean that they're not vastly overvalued at any point in time. And that includes real companies like Amazon or Tesla, or you pick your favorite name. And certainly AMC is not going to change the world. Neither is GameStop. So, right now they could keep going up a lot more. But at some point, if an Amazon can go down 95% with revenues doubling, you're going to have a real problem in names that aren't going to change the world. And it's just a matter of time and being patient waiting for it.
So, Dan, if AMC and GameStop, they don't change the world or change their industries, would you allow that they may at least change the way companies communicate with their investor base? Do you think that we have seen CEOs speak directly to the retail investors in the same way that we have seen Adam Aaron go directly to them and Elon Musk? Is that a trend that could be here to stay?
Well, I mean, social media, quite honestly, started that trend. I mean, if you go all the way back, people have been, Netflix, right? Reed Hastings has been very great about putting out interviews on the internet, et cetera. So this has been going on for a while. Where we're obviously talking about this is you've got stocks that, GameStop started before the pandemic at $6, and now it's at 250. I mean, if I'm a CEO looking at that, I want to know, wow, how can I do that? And then raise money at those kind of valuations. I mean, it's ridiculously cheap money, right? So, your job as a CEO, don't get me wrong, they're putting out the risks of, there's a lot of things that could be making the stock vastly overvalued, may have nothing to do with our business fundamentals, and they're raising money, and, you have a right, if you want to give them money at $50 a share or at $250 a share if it's GameStop, and that's your right to gamble with that. And it's their right as a company to warn you of all the risks and say, hey, you know what, I'm going to raise money and go from there. Those retail traders have saved both AMC and GameStop. There's no question about it. That's the only reason these companies are surviving today. They were able to raise money at incredible valuations. And so those CEOs should be really grateful to the retail trade.
Yeah, and I think Aaron especially, and Cohen, their ability to adapt to that environment is one reason why those companies may live on. You're absolutely right, Dan.
Absolutely.
A lot to get to for next time. We really appreciate it. Have a good weekend. Dan Niles.
You too. Thank you.
And big show continues. The CEO of Asana, DocuSign, PagerDuty, all coming up this hour. Tech Check, just getting started.
So we're seeing AMC here now trading above my 10-period moving average on the 5-minute chart. Broke my trend line here. So holding its ground, AMC holding its ground here at these levels. Looking good at 53. Volume is low for the day. Volume is low. So that's what we're seeing across the board on all ticker symbols. BlackBerry still around 1468. GameStop at 256. Clean Energy here pulling back at 974. Sundial took one in the chin. It's at 119. Tilray at 1896. Workhorse at 13. Nokia at 550, going nowhere really fast. Staying steady though, that's for sure. Clover Health, chopping up here now at $9. GTT giving up some of those gains and melting away. Is this a breather? Is this a time to buy? It could be a dip here, but broke below my support line here and gap fill, and now is at 286. Bed Bath and Beyond. It looks like we're going lower. We had a breather here. Looked like it wanted to create some momentum and failed. So we're seeing a slow bleed on some of these names. Virgin Galactic here, big wick here, big candle. Looks like we're going lower at 30.53. So AMC holding its ground. Some of the other names, just going down. Volume is low today, so we're not seeing much action there. We're seeing NVIDIA right now, all-time highs. Doing the stock split. This is one that I've been in, and I'm still in, and I still hold a position here. And NVIDIA, just a true winner right now, just up there at 703.22, all-time highs, and looking steady. The stock split will fruition in late July, so we're gonna probably see NVIDIA continue to rally throughout this whole month slowly. Sky's the limit. Who knows how high NVIDIA could go here.
Should be all about you all of the time. So we make it easy for you to do your banking wherever and whenever you want. You can transfer money, check your account balance, and pay bills all online. Use our mobile app to deposit checks into your account. And through our partnership with Zelle, send money to people you trust, no matter where they bank. Open your account today at Westcom, where it's all you all the time.
Get a gut check on Bitcoin taking a big hit this morning following a tweet from Elon Musk posting hashtag Bitcoin with the broken heart emoji and a meme of a couple breaking up. Our friend and Bitcoin bull Pomp throwing some shade on the price change this morning. He tweets, imagine selling an asset, D, because a rich guy tweeted a meme.
Carl, perhaps the biggest offense of Musk's tweet was that he related Bitcoin to Lincoln Park, and thus some might say painting Bitcoin as uncool. Anyways, let's move on to earnings. DocuSign, take a look at shares. They are up about 15% right now, rallying following beats on the top and bottom lines. An upbeat outlook also driving that surge as a pandemic winner sees continued growth ahead. With us now in a Tech Check exclusive is DocuSign CEO Dan Springer. Dan, good morning, and thank you for being with us.
Good morning. Thanks for having me.
So one thing that stuck out in the quarter to me, and I know many analysts as well, was the customer ads hitting a record even as we head into a post-pandemic world. Can you keep that sustainable? What do you attribute it to this past quarter as well?
Yeah, I think we see it's customer demand because more and more companies are saying they need to digitally transform their business. And whether that's in the pandemic or post-pandemic, whatever our kind of new normal will be, I think companies are saying they have to take advantage of these digital technologies that allow them to save money, have better customer experiences, and really get that time to revenue faster. So we're seeing that same phenomenon, that same momentum in the marketplace. And we're very bullish, as you saw with the very strong guides, as you alluded to, that we're going to have significant growth ahead.
Can you sustain that pace, continue to hit record customer adds? I know you said last night that, this is a big ocean. You guys are only in the early innings.
Yeah, I think you hit the answer to the question is really implicit in the way you asked it around the TAM. We think the addressable market here is huge, and we think we're well less than 10% penetrated. So for us, it's really going to be about execution. And if we continue to scale our field organization the way we have the last several years, and I believe we can continue to scale that organization, the opportunity is there if we execute. So we're, again, very bullish that we'll continue to have that customer add. We just passed 1 million customers, which we're proud to announce, which is a huge thank you for all the DocuSigners for making that happen out there. But we think it's just the beginning, because in the end, we believe every company should be using DocuSign, and there's a whole lot more out there.
Dan, how has customer behavior changed during this period, perhaps in ways that might remain? And also, I mean, I remember visiting you years ago in San Francisco and all the building going on. Apple is planning to have workers return to the office on specific days. What's your plan for that?
So we actually believe that the construct about thinking about DocuSign is less about whether people are in the office or whether they're working from home. We see ourselves as a big participant in what we call the anywhere economy, John. And our view is that people are going to need to, both consumers and businesses, be able to transact with people wherever they want to do their agreements. And so we don't see a real change to our business if people go more back to the office, because we think that the benefits they get from using the DocuSign technologies are really not determined by where they are. So from that standpoint, it doesn't make us any less bullish as more people return back to the market. And that more secular trend that we see driving the adoption of our technologies is because people are seeing those benefits of the cost savings, the time savings, that time to revenue, and then again, their customers having a better experience. One of the reasons we have an NPS score that's in the 70s is because our customers know that their customers get value using our software. And that makes them want to use more DocuSign.
And what about the ways that customers are using the product, the time they're spending with it, perhaps the specific features they're using? Has that changed over the past year in ways that you expect to stick?
Yeah, I think the general answer is the core things that brought us to this dance, and particularly on the e-signature side, and we can talk more about CLM and the broader DocuSign Agreement Cloud. But if you focus on signature, which, as I said, is what brought us to the dance, and it is the primary driver of our revenue today, those use cases have not dramatically changed. Each company's on an adoption curve, and they might start with straightforward use cases like signing customer contracts. But over time, they realize there's other benefits, like when they send out employment agreements, and they realize that that's a great way to efficiently bring people online into their company. And so I think that we're seeing that those use cases aren't changing dramatically, but each company is going deeper and deeper with us into the rest of their enterprise.
Dan, last question. What's the biggest obstacle to DocuSign adopting blockchain-powered smart contracts? Is it still cost, as you referred to a few months ago?
Yeah, I do believe, well, so separate smart contracts from blockchain. I think there's two slightly separate conversations. On the blockchain standpoint, which we would use primarily and do use through Ethereum as an opportunity for storage of agreements, and some of our customers have said they're interested in that. But as we did discuss before, it's much more expensive to do that than the core DocuSign storage technology we're using today. But as the scale gets better and better, I think there is going to be more opportunity to increase that. But smart contracts, and we just made the announcement. Oh, go ahead.
Is the scale getting better?
Yeah, the scale is getting bigger, and I think blockchain will get there. I still think that's a year to 18 months out before a significant number of our customers would say, we really want to be storing on blockchain, given the cost differential, but it will continue to come down. But on the smart contract side, we just announced the Clause acquisition. We believe there's a lot of software development we can do to make it easier for people to use agreements in a code format versus just fixed terms. So we can actually create smart contracts that will change over time and allow you to modify your behavior without having to go back and edit them. So that's an exciting part of the platform that will happen separate from the blockchain.
Dan, thanks for coming on to break down the quarter. Dan Springer of DocuSign. Thanks.
Thanks for having me.
Asana founder, before that Facebook co-founder Dustin Moskovitz is next as his company Asana comes off a strong quarter. A lot more tech check straight ahead. Stay with us.
It's a 13-hour flight. That's not a weekend trip.
15 minutes to wait for it.
I gotta take off. Now, you downloaded the TD Ameritrade mobile app so you can quickly check the markets?
Yeah, actually, I'm taking one last look at my dashboard before we board.
Excellent. And you have Thinkorswim mobile?
So I can finish analyzing the risk on this position.
You two are all set. Have a great flight.
Hey, thanks.
We'll see you. They're getting so smart.
Choose the app that fits your investing style.
This is wealth. This is worth. That takes wealth. But this is worth. And that's actually worth more than you think. Don't open that. Wealth is important, and we can help you build it. But it's what you do with it that makes life worth living. Principal, for all it's worth.
Interested in Ethereum? Just type symbol ETHE into your brokerage account and start investing in the second largest cryptocurrency today. Learn more about Grayscale Ethereum Trust at grayscale.com.
To make progress, we must keep taking steps forward. We believe the future of energy is lower carbon, and to get there, the world needs to reduce global emissions. At Chevron, we're taking action, tying our executives' pay to lowering the carbon emissions intensity of our operations. It's tempting to see how far we've come, but it's only human to know how far we have to go.
What happens when we welcome change? We can make emergency medicine possible at 40,000 feet. Instead of burning our past for power, we can harness the energy of the tiny electron. We can create new ways to connect, rethinking how we communicate to be more inclusive than ever. With app, cloud, and anywhere workspace solutions, VMware helps companies navigate change faster. VMware, welcome change.
I look for the WELL Health Safety Seal at my favorite places.
It means health and safety measures have met rigorous scientific standards.
Look for the WELL seal.
Look for the WELL Health Safety Seal outside and feel safer going inside.
In business, it's never just another day. It's the big sale or the big presentation.
And we have AMC popping here. Broke the trend above my 10-period moving average. It's at 56.75, looking good. Let's see if AMC goes back up to the $68 level, and potentially big day for AMC.
Resetting here at the bottom of the hour. Welcome back to Tech Check. I'm Carl Quintanilla with John Ford and Deirdre Bosa. In a moment, John's exclusive interview with Facebook's co-founder, Dustin Moskovitz. His second act, Asana, getting a nice pop this morning on the back of an earnings beat. And that's helping the Tech Check Work From Anywhere index, which has just gone positive for the week, helped by DocuSign, Zoom, and Oracle, all higher. First, though, let's get a news update with Rahel Solomon. Hi, Rahel.
Hi, Carl. Good morning. Here's what's happening at this hour. The U.S., as we know now, adding 559,000 jobs in May. That's more than twice the number in April, but still below forecast. The unemployment rate falling to 5.8%. President Biden says that more needs to be done to grow the economy, but that the U.S. is on a strong course.
No other major economy in the world is growing as fast as ours. No other major economy is gaining jobs as quickly as ours. It's due in no small part, first of all, the cooperation of the American people in responding to my effort to get COVID under control, wearing masks initially and getting vaccinated. And it's no small part to the bold action we took by passing the American Rescue Plan.
The FDA says that Regeneron's COVID treatment can now be given by injection. Instead of more complicated infusions, the antibody drug has been found to reduce hospitalizations and deaths among COVID patients with mild to moderate symptoms. And if you know someone who has trouble taking their eyes off their phones, and who among us doesn't, you may want to tell them about this. A South Korean industrial designer has come up with a third eye that alerts users of objects before they run into them. That's a very different interpretation of third eye. John, I'll send it back to you. But useful, it seems.
Oh, yeah, Rahel, thank you.
Yeah. That's what I'm getting you for Christmas.
Right, yeah. Rahel Solomon, thank you. Sure. Shares of Asana jumping higher this morning, now up about 7%. The work collaboration software company beat expectations for revenue growth and had a smaller loss than expected, forecasting second quarter sales over $81 million. I spoke with the company's founder and CEO, Dustin Moskovitz, also happens to be a co-founder of Facebook. Moskovitz discussing the company's path to profitability. He told me investors can expect to see him balance spending and that drive to profits as Asana continues to grow.
I think balance is the operative word there. So it's going to be a little bit of both. We intend to make continual progress towards profitability, maybe not every quarter on quarter, but over the longer arc, we do see it as a march in the right direction. But additionally, we have a great track record of being able to find great investment opportunities, pursue them, deliver more value for customers, and improve our growth. And so when we see those great opportunities, we're going to take them. So I think that you should expect Asana to continue spending pretty heavily, but as long as our revenues are growing, we're able to get leverage on that spend over time and continue to make our way towards profitability.
More large deals, a particular highlight of the quarter just reported. Now, looking beyond these quarterly results, I also asked him to weigh in on whether companies should allow or encourage social and political discussions at work and even on collaboration platforms like Asana. This, of course, following the blow-up at Basecamp weeks ago after CEO Jason Fried announced that employees can no longer share their societal and political discussions at work. Here's what Moskovitz had to say.
Certainly, there's been a lot of activity in the news recently. I would differentiate a little bit between the different kinds of digital communication. I think that the least good solution for really charged conversations or conversations about politics or something like that is using text, whether it's emails or chats or even threads in Asana. I think that you just lose a lot in terms of conveying body language and emotional tone. It's just very easy for people to misinterpret what's written down. I think that video conferencing can be effective depending on the topic. But I think best of all is to be in a room together and literally be able to share the same space. I think that really helps with feeling like you're reminding each other that you're on the same team and you're not literally facing off like you are sort of physically when you're in video conferencing. So being able to sit with people and sit next to people and have a more organic conversation with natural control flow, I think that's the healthiest possible way to have very difficult conversations.
For the full interview, you can scan the QR code on your screen. There it is. Head over to our LinkedIn page. Carl, tech isn't a solution always for everything, and that's especially powerful, I think, coming from a guy who helped to found Facebook and who does a work collaboration platform. Sometimes it's nice to just actually sit down with someone in real life.
It's true, and I think it's kind of encouraging to see the Facebook diaspora have a second act, as we called it earlier, because certainly Facebook changed the world in ways that maybe few other companies have, but there's always more to be done, especially when some of these early founders were so young at the time.
Yeah, and investors taking to it. I mean, Asana went public at a direct listing reference price of $27 a share, now at nearly $40. And guys, we talked about this yesterday, but this sort of the middling tech companies like Box and Dropbox that haven't really lived up to expectations. And John, I find it really interesting that Dropbox has gone into two very hot areas, e-signatures and collaboration, but investors have not really appreciated that push, perhaps because it doesn't break out those businesses in its quarterly results. But you see DocuSign and Asana really get a lot more love from investors and, shoot up from their IPO prices, while Dropbox sort of continues not far from where it went public just a few years ago.
Yeah, those businesses that the likes of a Dropbox are incubating inside themselves and perhaps they're not ready yet to break out. It's almost like what you get with some of those older tech companies that have a new product and yet they're still judged on what their core business has been. Now, that's not judging Dropbox and Box and whether those efforts are going to be successful or not. Certainly, some of the things that companies like Apple and Microsoft have incubated have turned into big businesses, Amazon, the cloud. But for a time, you got to prove it out, and you're not necessarily going to get that valuation bump right off the bat, Dee.
Yeah, and when that business is ready, then maybe you tell investors. I'm always asking Drew Houston when they're going to break out some of those HelloSign numbers. Anyways, guys, coming up on the show, Bill Ackman is back, and so is his SPAC. We unpack the flack. Too much? Next. Plus, watch CrowdStrike beating on earnings and revenue and a subs boost, taking that stock higher this morning, but it has since given up those gains, now down by about 3%. A lot more tech checks straight ahead. Stay with us.
Okay, so we saw AMC here. Nice pop, nice rally here on the 5-minute chart, rallying from 48.71 to about 57.36. That's nice $10 move right there. And now selling off here, pulling back from 56.33 to 54.79. Let's take a look at BlackBerry. AMC looks like it's clean energy selling off here. Clean energy selling off. Sundial popping back up to 122. Sundial 122. Let's see if we have any new news here. Let's take a look at some Bloomberg in the meantime. Bitcoin-based lender raises $25 million as loan growth soars. Tesla China narrative swiftly shifts from expansion to exports. Let's see if there's some deals here. Let's look at some deals. Vivendi in talks to sell 10% of Universal. Okay, so yeah, we already saw that. Skincare brand Paula's Choice set to explore IPO this year. Skincare IPO possibly. Let's see. Snowflake back data startup Alation valued at $1.2 billion here. What is this about? I haven't heard of this company. Alation raises 110 million. Let's see. Alation has raised 110 million in a new funding round that values the enterprise data startup at $1.2 billion. Okay. It was led by Riverwood Capital with participation from San Nabal Investment and Snowflake Ventures. I'm going to read this and we'll get back to this after some of this news.
Falling some 10% this morning as Tondards, what some followers of the SPAC call themselves online, they may be left feeling a little bit let down by the announced SPAC target. 10% of Universal Music Group for around $4 billion. Now, at one point, Airbnb was reported to be a potential target. Universal Music is more of a mature business, almost 90 years old. It's already going public, and it's already investable through French parent company Vivendi. So, guys, a bit of a head-scratcher from Bill Ackman this morning. Maybe a safe bet, but there was so much mystery around the SPAC. What would he do? Would it be Airbnb? Would it be Bloomberg? To settle on Universal Music? I mean, Carl, I know you love music, so I'm interested in your take.
Well, I mean, we were talking about it with Faber earlier this morning. You know, Ackman's got a history of going into retail and certainly real estate. But the fact that it's media is fascinating. And only Bill, John, could have made the SPAC process with all the warrants and the evolving SEC regulatory guidelines even more puzzling than it already is.
Yeah, Carl, I mean, this is Christmas socks. When you wanted a PS5, right? You're all excited. You're ripping open the box, the SPAC box, and you expect to see a PS5 and it's socks. Now, they might be very nice socks. They might come in handy at those family gatherings or even at church, but you're hoping for the PS5. But, you know, when Netflix or Disney or anybody else buys content, people get excited. But Ackman buys content, Carl, and it's Christmas socks. Not fair.
We look forward to a lot more granularity on what exactly Bill has constructed there. We're going to take a break. PagerDuty stock was a 2020 darling, as you know, but in the broader cloud sell-off, it's down 30 from the February highs. Jennifer Tejada is going to join us on the other side of this break. Watch Broadcom. Kind of got lost in all the news today, but better than expected outlook, citing 5G. Big earnings beat. All the catalysts behind that stock's move to the upside this morning, better than 2%. Tech Check, back in 2 minutes.
Interested in Ethereum? Just type symbol ET.
As well. Still, the stock is down on today's trade. The company's continuing to spend as it grows. A company now working with more than 60% of Fortune 100 companies. And PagerDuty CEO Jennifer Tejada joins us now. Jen, good to see you. This is interesting to me because your company is one of those that isn't followed by a ton of analysts. You had some things on the call and with the report that I want to get into. So total annual recurring revenue, annualized recurring revenue for customers spending more than $1 million was up 59% year over year. That's interesting. Put that in the context of the spending that you continue to do to grow.
Yes, well, we're really thrilled with the large customer momentum we're seeing. As you mentioned, our customers over $1 million grew substantially for us. And we also saw particular strength again in international, with international up 38% year on year, now making up 25% of our total revenue. So, very strong performance by all of our teams in theaters. And we're pulling forward some investment in the year from a timing perspective to bring our annual summit conference, which has historically been in September, forward to June. So on June 22nd, we'll be talking about the future of work and the future of PagerDuty with a number of great guests like David Solomon, the CEO of Goldman Sachs, Armand Daggar, who is the CTO and co-founder of HashiCorp, and Adam Grant, who's one of my favorite best-selling authors. He recently wrote Think Again.
So you've got that. You've also got an analyst day coming up at the end of the month, do you not? I think we talked last quarter about other costs coming back online as things open back up. People are getting on planes again, traveling trying to connect with customers. Is that happening as well?
Well, look, we continue to be a very efficient business with operating cash flow, again, positive for 7 out of the last 8 quarters. And we're going to invest thoughtfully so that we can grow in a sustainable way, efficiently. And frankly, we're pretty excited about the opportunity to accelerate the business. We expect it to grow, above 30% again. And yeah, I think we'll see some of the travel come back. We're thrilled to be able to host another virtual conference this spring, but hope to start getting people back together in the fall. I think more importantly, with the business seeing momentum, we are going to invest in that acceleration and invest in particular in new innovation and AI ops automation, where we're really helping companies master the operational requirements associated with being digital first, making sure that they can detect and resolve real work in the seconds that are important to consumers that won't wait a single second for you to get it right.
That's interesting. The mindset of the customer right now, Jennifer, John talks about the expenses that they're going to incur as you reopen, but there's been a lot of expense control and savings that will come from, for example, fewer real estate footprints. I wonder if you think that's leading to more optimism from clients about at least the size of their deals come the fall. Do you think there'll be that kind of tailwind?
We definitely see hybrid work as a new tailwind for PagerDuty, in addition to digital acceleration, cloud migration, and DevOps transformation. And we are seeing our customers think about investing for the long term. CIOs and CTOs choosing PagerDuty as one of the few key platforms that they're going to rely on going forward, because our customers' businesses have essentially become digital businesses. They can't afford not to make those investments. And I think you are starting to see some of that shift in expense into long-term strategic IT investing to position these companies well for the future.
Jen, good morning. It's Deirdre. Good to see you. Now, I've been tracking the number of times the word platform is mentioned on the earnings calls of some of the work from home winners over the last year or so. Last night, platform was mentioned 23 times on your call. That was around the same amount of times as I heard it on the Zoom call earlier in the week. What are investors missing about PagerDuty's post-pandemic chapter or proposition and moving beyond your DevOps core?
Well, we're thrilled to see companies and customers adopting us beyond DevOps. And at the same time, we are one of the most influential platforms for developers on the planet. We're a domain agnostic environment, meaning we connect to over 560 of the most important technologies in the world, which sort of makes us a superset of all the observability and APM and monitoring providers out there. We help customers really understand what's happening in their digital world and quickly manage it. I think importantly, we've been able to extend our reach beyond DevOps into security, which, as you know, is a very challenging environment right now. And more recently, customer service, where we saw our customer service users expand 41% in the last quarter, year on year. And with companies like DoorDash and Netflix, OutSystems adopting PagerDuty for customer service, and Zscaler, Cisco, and Okta already having PagerDuty teams, customer service teams using PagerDuty. So really starting to see some good momentum in use cases outside of PagerDuty or outside of DevOps. Long term, I think what we'll see is our customers becoming quite inventive and creative and leveraging our platform anywhere they have unpredictable, unstructured, but mission critical real-time work.
All right. Jennifer, we look forward to hearing what you have to share at the end of the month with your ecosystem and with analysts and investors. Jen Tejada, PagerDuty CEO. Thanks.
Thank you. Great to see you all.
Some interesting news on Square from Jack Dorsey just a moment ago. He is tweeting live from the Bitcoin conference in Miami, where we will be live after the break. Tech Check continues in just 2 minutes.
Give me the detonator.
So now we see AMC consolidating, coming back to the 10 period moving average here at 53.67. BlackBerry holding at 15, GameStop holding. Clean energy trying to come back to some sort of medium here at these levels. Sundial growers 122. Very low volume here on the 5-minute chart. So we're not even at midday, and yeah, volume is out right now. So we're probably not going to see a massive move towards until towards the end of the day. Workhorse selling out. So we had a bit of a sellout on some of these stocks and then holding, and it looks like it's taking a breather, but who's to say that we go lower or if it holds. We have Bed Bath & Beyond. Aggressive sell-off with a nice pullback and a second wave here. So we have lower lows here and lower highs. Palantir getting an aggressive uptrend here. 2450 Palantir. Rocket, nothing exciting. Virgin Galactic here tanking 230 aggressively. And now recouping with a nice bounce here at 31. Nvidia continues to rip higher. There is no stopping Nvidia here. Nvidia at 704.51. Very nice move, Nvidia. Keep writing covered on CCIV every week. Sold the 25 this week. Thinking of buying back and selling the 24s till the end of the okay. Yeah, CCIV, that is definitely one. CCIV is one that's been acting very nicely for covered calls here. So you're thinking of buying back and selling the 24s till the end. I don't know. For a day trade today, I mean, I would maybe for next week I would be selling something a little bit higher. But yeah, CCIV acting right now for some nice covered calls. I mean, it's uptrending, so maybe closing out some of your positions. But I think right now CCIV is at a point where it can. Let's look at the dailies. So CCIV here had about a hit my support line here at 17, bounce back here, and potentially I was seeing CCIV maybe going lower here, and but bouncing back up. So you're thinking, oh, okay, so you're thinking about selling the 24s for the day. That's actually a pretty good move. I like that. Possibly, let me see here. Let's look at the 5-minute chart. Let's see here. I'm a bit concerned it might come back up here, back to all-time high somewhere. So if you sell the 24s, you're literally selling right in the middle. But what we could see for the day, if you sell the 24s, see some chop here, and it could definitely end a little bit below 24, around the 23 area, 23.50, 23.70, plus 16 cents times 1,100 shares. It's scalping. It's scalping a small move intraday. The only one thing that you have going for you is that volume is low, and selling right now, you're going to be able to suck some premium out. Right now on the 5-minute chart, it looks like it wants to come back up here. Maybe wait until it hits around 24 and sell something. Do they have the 24.50s, 25s? But it's just scalping at this moment. It's not really my style, but I would wait maybe for it to go a little bit higher so you get a little bit more premium out of it, or get a little better strike.
The tech and the kind of deep coding stuff, and how much of it is not.
Yeah, well, one thing that's really important to note about this conference is that it is very much Bitcoin specific. So it's not a crypto conference per se. You've got a lot of Bitcoin maximalists who believe that Bitcoin and not necessarily other cryptocurrencies are they think that Bitcoin is the future of finance. And so with that in mind, it's Bitcoin 100%. And as you said, yes, there are a lot of coders here and like the top people in this space that are very much in the weeds of blockchain. So that's a huge conversation as well, and talking about the functionality there and what's possible. So I've been learning a ton. I'm new to the tech feed. I've been in this tech reporter role for 3 weeks, and I'm asking a lot of questions.
Yeah, I can imagine. I guess my last question, Mackenzie, would be if you landed on planet Earth from outer space and came straight to this conference, ex-Bitcoin, what would you think is the most important coin?
Oh, so without Bitcoin, like what's the next one I would choose?
Exactly. What does get the most buzz right now?
Okay. Everybody's talking about Ethereum because Ethereum 2.0 is this release that's imminent, and Ethereum is really that. So the underlying blockchain to the coin Ether has a ton of functionality. They've got something called smart contracts, which is what fuels this world of decentralized finance, or DeFi. And so that is the hot topic because people are excited about these apps that they can build on top of Ethereum. So I think if I were to parachute in from another planet, I'd be asking about Ether.
Wow. Fascinating. What a statement it is about how the asset has gained acceptance. Just that live shot alone. Mackenzie Sigalos, thank you.
Thanks.
Carl, I knew it would be Ether or Dogecoin, so I'm kind of glad to hear it was the latter. Meanwhile, take a look at Ford landing a new street high price target over at JPM this morning. Monthly EV sales up almost triple, but that hasn't been enough to keep the stock in the green. It's currently down by about 0.5%. Tesla, meanwhile, is higher, breaking a 5-day losing streak. And Google is confirming that a top diversity executive will change roles. Continued fallout after anti-Semitic language used in a 2007 blog post that was brought to light. More context around that story at CNBC.com. Tech Check is back after one more quick break.
Cisco, the bridge to possible.
At CDW, we get your IT staff has to be ready to take on new challenges.
Yeah, that's why we built an office obstacle course to prepare our people for anything. You're late.
Well, CDW Amplified Services.
Okay, Armando. So right now you're playing. You're selling. You sold the 25th. You've been doing the covered calls. I don't know if you already closed that out. It would have been better to have closed it out here and wait for it to run up. It's running up right now, and I would have waited for it to go around the the day of the high of the day to resell the 25th strike. What you can also do is you can hold off, wait for some volatility, and sell. Wait for the end of the day to get some volatility so you can sell next week and start all over again. But good stuff selling on the 25s. You did. I mean, it's up there, but definitely it's $1 below, so you're able to get some nice premium. Hey, what's up, Chris? All right, yeah, CCIV on the move. It's at 24 right now, holding very nicely, and next week we'll see. This is kind of a level where it's been holding below 25. So it's going to be interesting to see. Here, I'm going to delete this one. This 2650 is not relevant anymore. It's the 25 that's relevant. So I'm going to replace this one here and put 25. So this is the one to beat right now. The $25 level right now for CCIV. This is more relevant. And you can see it continues to get rejected. So it got rejected back here on April 6th, got rejected again on the 28th, and now we're here once again. But if you see the 10-day moving average here, you can see the slope turning and now trying to go higher. So next week, we're going to see, it's going to be a good week for CCIV to see if it breaks out of this downtrend. AMC here's just holding steady at 53.68. Let's look at some NVIDIA. NVIDIA at 7.05. NVIDIA just slowly uptrending, creeping up, and just very powerful move today. You know, we had some buying opportunities yesterday. I have some positions here, and I should have bought at this point yesterday, which I was considering buying, but it went past me. And I had a second chance here in this pullback. Now I'm waiting on another pullback. So we'll see if I get a pullback. I'm not counting on it today, but sometime next week.
Fate. We will see you Monday from the NYSC. Have a great weekend. Let's get to the judge.
Carl, thanks. Welcome to the Halftime Report. I'm Scott Wapner. Front and center this hour. Does today's softer-than-expected jobs report reignite the rally as the major averages move closer to new highs? We'll debate where your money goes from here with our investment committee. Joining me for the hour today, Shannon Sakosha, Chief Investment Officer, Boston Private Wealth. Liz Young, Head of Investment Strategy at SoFi. Big week for her this week. Jim Leventhal here, the farmer, along with Pete Najarian. Let's check the markets, which after that soft jobs report, once again edging towards new record highs, perhaps on the belief that the Federal Reserve will be more patient before making any changes to its bond buying effort. We'll get to all of that in just a moment, along with Apple's 5-week slump and what that means to your money. But first, new at noon, and Bill Ackman's big play for a piece of Universal Music Group through his SPAC Pershing Square Tontine Holdings. I spoke with Ackman a little while ago. He told me he was very excited about that deal and that he expects it to be signed later this month, likely by June 22nd. It's a complex deal, as you've heard, for sure. But if you look at recent analyst reports, as I did, it would suggest that Ackman is getting a pretty good deal. Goldman, for example, in a report published last month, right here, they put Universal Music Group's valuation $44 billion, whereas Ackman's deal would have an enterprise value of some $35 billion, a significant discount, at least by Goldman's calculations made last month. Further, if you look at an apples-to-apples comparison to where, say, Warner Music currently trades, the price Ackman is paying is about a 10 to 15% discount, and Warner is the number 3 player in the industry, behind both Universal and Sony, according to data I saw from earlier this year. It's also a more levered company in comparison with Universal and comes with fewer voting rights for shareholders, given that company's control structure. By comparison, Universal has the most market share in the U.S., about 41%, and 30% market share globally. It's also been taking share. Margins have been increasing as, like many players in the space, it's been benefiting from the tremendous growth in streaming. But there is more. Ackman's investors will also get roughly $5 in cash in what remains of Tontine, which essentially now becomes a smaller version of itself, with $1.5 billion in cash to go look for something opportunistic to buy. And they'll get an opportunity to participate in what Ackman is calling a special purpose acquisition rights company. It's a mouthful, or a SPARC, which will trade on the New York Stock Exchange, and what is essentially a long-dated option or warrant to take part in the next deal. Unlike a SPAC, though.
Just want to interrupt here. I saw NNDM trending. NNDM, powerful move here in the past 30 minutes here. We saw it go from 740 to 8 right here, a 60-cent move. NNDM, not sure what the news is out here or the headline, but powerful move on NNDM.
Holdings down by about 11%. Our Leslie Picker following the money as always. So there's no more mystery of what he was looking at.
BNGO, NNDM. These tickers were hot last year, towards the end of the year and beginning of this year. BNGO also getting some nice uptick move here. It could be an intraday thing. A look at this move. Wow. From 630 to 722. $1 move on BNGO. Let's see what else is moving right now. I see Inghang Holding. I haven't traded this one. This one is trending right now, 27.40 with a $4 move here, almost at 32. Let's look at the dailies here. So we're seeing some big moves right now within the last 30 minutes.
Choose to. If not, they can sell these rights to other shareholders or other people who are interested. So now the question becomes, what do you do with the next purchase. Now, the way this transaction is structured, they actually have more than $10 billion in purchasing power to do another deal here. The first deal, this Universal Music.
ATOM also. So it looks in the past 30 minutes, we have NMDM, ATOM, BNGO. They're all getting a nice uptick here. You see some money coming in here. I'm trying to make the connection. This is commercial services. The other one's 3D printing. The other one is biotech. So there's no real correlation amongst these three names, but yeah, these are trending right now.
Will be what he uses with this whole Spark structure.
It's confusing, right? You know, Andrew and David have been doing a great job trying to explain it to everybody, because it's just different, Leslie, than what I think a lot of investors expected, not only in the target, but in the structure of what we have here, because it's really not a SPAC, even though investors got into this in the first place thinking it would be a traditional, if there is such a thing for such a thing, a traditional SPAC. And then the target, remember, Airbnb was the name that was thrown around all over the place, and this is not that.
Yep. Airbnb was thrown all over the place. Bloomberg was thrown all over the place. It's interesting because you see these dialogues take form where people are so convinced that it's going to be a particular target. People were so invested and had been anticipating the day where a DA or a definitive agreement was signed. And it's important to note that it has not been signed yet. This is still preliminary. And as you mentioned, the deal could still fall apart, although it's expected to be closed or at least signed later this month. But people were staking their hopes and dreams on what this particular deal was. Universal Music Group wasn't one that we saw pop up. I don't think I ever saw it pop up, although it's impossible to say with tens of thousands of comments on these forums. But it's a slower growing company than I think a lot of people anticipated. And it's one that was already set to go public. And so it wasn't a company that people were looking at, a private company, traditional reverse merger into the public markets. It's a different structure. It's a very outside the norm in terms of SPAC world. And in traditional Bill Ackman form, he's kind of rewriting the rules here.
Yeah.
The rules are, he's abiding by the rules, but
yes,
putting his own spin on it.
Yeah. And speaking of the rules, he was limited, obviously, in what he could say to me, but it was clear he was excited about what he brought to the market today. Leslie, thank you. Leslie Picker, as I said, following the money, as always. Speaking of the money, let's take a look at the major averages once again, because we are reacting, of course, to today's softer than expected jobs report. And maybe by virtue of the gains you see on your screen here, Dow good for about 100, S&P, which is not the best levels of the morning session. S&P is good for 27, 2/3%. NASDAQ's the big winner today. Well, why? Because maybe the market thinks the Fed is going to be more patient before it starts to taper. Liz Young, is that your read? Is that what this reaction says? Like, chill out with this worry that the Fed's going to do something tomorrow?
Yes, I do think that's the read right now. And I think the market is reacting to the fact that we had a jobs report that missed expectations, but we still added more than 550,000 jobs. So this is sort of steady as she goes. And it reinforces the Fed's statement we're going to be data dependent. I said today that the Fed is going to be labor data dependent. This just keeps them in play. This keeps them here. It keeps them holding steady. And I don't think we should expect them to change their narrative anytime in the next few months. As we move through the rest of the year and as we get into 2022, the story changes a little bit. And I think it changes because once we get back to prior levels of GDP, so pre-crisis levels of GDP, that's when we create new organic growth in the economy. That's when we have a garden variety recovery story. And hopefully jobs do come back and the Fed doesn't feel as trepidatious.
Yeah. Pete, Tom Lee, no surprise, bullish, right? He's not wavering, even with the churn that we've been seeing and some of the activity. And we said we're not all that far away from new highs as we continue to move higher today. He says, quote, we still believe equities are risk on. We see the S&P 500 reaching 4,400 by the first half of 2021. Remember, he had pulled forward his optimistic expectations for stocks. That's in the next 4 weeks, going to 44. And then we'll see. And it's going to be led by epicenter stocks. Did the jobs report just give the rally that excuse to take that next leg higher?
It sure may have, Scott. I mean, it feels that way. We watched it move the second we got that jobs report. So I would say the reaction was exactly that. And I think Liz broke it down very nicely. I mean, the idea that the Fed's watching, they are data dependent. They'll be continuing to watch. But as of now, it's just steady as she goes. And that's exactly what we are seeing. And that's a very big positive thing, I think, generally thought for the markets themselves. And we're seeing the NASDAQ really outperform. They're both performing very nicely. The Dow, the NASDAQ, the S&P as well, throw that in there. But the NASDAQ has certainly been the leadership today. And, each and every day we see different leadership. But the strength that we're seeing out of the NASDAQ today does make a statement to me that folks are very comfortable with some of these growth stocks, with some of these very speculative stocks. And that's exactly what we're seeing today. And you look at volatility, Scott. Volatility is once again starting to creep that much lower. Even with some of the crazy moves that we've had in different sections of the market, we are watching volatility just kind of ease back into those teens and now into the 16s. It tells me that people are feeling very, very comfortable right now.
Well,
whether they should be or not, that's something for the future.
Well, I mean, maybe they should be, Shannon, by virtue of a jobs report that suggests there's a long way to go. And the Fed probably reads that and thinks the same thing and says, we're going to be patient regardless of what the market thinks or what the market wants. Rates have not been exploding higher. So why shouldn't we be comfortable investing in growth and investing in tech as long as the environment remains as what I just said it will?
I think there's a counter argument to that. And again, with the way that we're structured in our portfolios, we're certainly barbelled to some cyclical exposure as well as plenty of quality tech. So, I don't want to speak out of both sides of my mouth, but I would say we're coming into a difficult period here. So we've got about 4 weeks till the end of the quarter, 3 weeks or so, and we're not going to have any, earnings season's over, essentially. We have a few more reports next week. And so I think it's important that each of these successive data points is going to be important because every single time we get a piece of economic data, we're going to be thinking about, is the housing market slowing? Is inflation creeping higher? This jobs report, we're continuing to look at claims on a weekly basis. Now we're going to start to take all of these data points and go down to the second and third levels. Where are the jobs coming from? Are there areas of the market or areas of the economy that have rebounded quickly over the course of the last few months? Is that rebound slowing? Are we getting any sort of plateauing? So I don't disagree with Tom's enthusiasm about the potential for a tailwind in the Fed, coupling with just an improving economic environment, as well as a clear sense of reopening. If anybody has been to a restaurant in the last several days in some of the states that were not as open, but I do want to caution that there could be some fits and starts here over the next 4 weeks or so, just because the only thing that we have to look at is economic data.
So, Farmer Jim, if I were to tell you, okay, we're still 7.5 million jobs light, right, from pre-pandemic levels, Fed doesn't go to Jackson Hole until later in the summer, and that you would think would be the time that they would lay the groundwork for any taper talk if there was one publicly. That leaves a little bit of a runway here, does it not?
It leaves runway, Scott, in which I think we're going to be stuck in the mud. And this is what I said to you, I think, last week. I think you got a few weeks, at least, maybe more, of sideways trading here.
Why?
Here's a fun fact.
Why?
Here's a fun fact.
I think that's what
because
I'm trying to suggest
you're going to get no resolution.
I'll give you a second.
You're going to get no resolution.
Oh my God! I'll come back to you in a second. But why wouldn't you be on more, to use your analogy, more solid footing? Right? If the environment I just said is like, okay, you don't have to worry about the Fed, and you don't have to worry about rates rocketing and maybe inflation ripping. Why isn't it more solid footing rather than mud?
Because you have no resolution. You have no solid ground. You have no resolution on inflation. 4 business days from now, we're going to get the CPI. Remember what happened last month? You had a weak jobs report, the market ripped, and then 4 days later, you got the CPI, and it was much hotter than expected. The market tanked. Now, I don't know what CPI is going to be next week, but I suspect it's not going to be tame. So there's no resolution on inflation. There's no resolution on taxes. There's no resolution on infrastructure spending. I don't think you're going to get any catalyst to move this market higher until second quarter earnings season. And maybe even that's not enough because we saw what happened first quarter. But I do think second quarter earnings will be positive and possibly will break us out of the mud. But that's a month away. I think we're sideways. There's no resolution in the next month on any of the factors that are facing the market.
So wouldn't you just, Liz, just trade what you have in front of you? I mean, we need to see, to use Jim's word, a resolution on all of these issues. The market's not going to wait around. It's going to anticipate. That's what it does, right?
It has nothing to anticipate. There's no way of knowing. There's no way of knowing. If you locked the 5 of us in a room and said, crunch the data and analyze it and tell me the outcome, Jim, there is no way to confidently say what's going to happen with inflation.
Jim, I don't know if I'm going to get hit by a bus on Monday, but I'm going to go out to dinner on Saturday. I'm not going to sit in the house worried that I'm going to get hit by that bus that may not hit me. Isn't investing in this market the same way?
I don't think that's a... I don't think that's the correct comparison, because analysts like all of us on the show, we want to look at the data. We want to predict what's going to happen with confidence. We can't do it right now, Scott. We can't predict whether inflation is transitory or entrenched. I happen to think it's transitory. I happen to believe Jay Powell, but there's not a great deal of confidence in that assessment. So the market, yeah, it anticipates, but it doesn't know what to anticipate right now.
All right, Shannon, who wants a piece of this right now? Who thinks that now's the time to sit on your hands because you don't have clarity on, that issue among some others? But besides Jim, Shannon, Jim's going to go ride off into the sunset on his tractor and wait this thing out. What's the strategy for everybody else?
That's right.
I think it depends on where you're talking about. I mean, if you look at this potential for accelerating economic growth globally, and you look at valuations that are available even in the small cap space, but more importantly, outside of the United States in emerging markets, or if you look at even U.S. multinationals that have, emerging markets exposure, wow, it seems like there's certainly some opportunities here. I think we spend a lot of time, because they're important parts of the market, talking a lot about the FANGs, and I think this is a great opportunity to start talking about things that are outside of the FANGs, start talking about other ways to derive growth in your portfolio based on this economic tailwind that I believe is going to persist for many years. We may have fits and starts. Again, there may be a little bit of a pullback. We may see some weakness around tapering. But I think if you're looking at the next 4 weeks or so, and there are opportunities to add to your exposure to set your portfolio up for the next 3 or 4 years, you absolutely should be doing that.
So, Pete, maybe Jim is going to be right. Maybe he's right now, and maybe he's going to be right because let's go in the FANGs. Because if Apple can't really get its act together, don't you think it's going to be hard for the overall market to take that next leap? Apple's trying to avoid a 6-week losing streak. You don't see that very often. Right. The stock has been stuck in the mud, to use Jim's thing again. It's at 125. It's getting a little bit of a lift today, but it's done next to nothing, and it is the most valuable company on earth. It's owned by just about anyone who ever comes on this program, and a lot of people who watch it too.
Right, and we've hit the pause button. You're exactly right, Scott. I think what you have to look at is, I think it's healthy that it's not just FANG leading, and I've said that for weeks and now probably even months. It's great to see other aspects of the marketplace take a lot of that leadership role as we've hit the pause button. And I know that you know this, Scott, as well, but if you give 1 year ago, we were looking at Apple trading at 82, and here we are at 125, and you'd say, wow, that's a pretty nice performance. All of that performance came between a year ago and November, and then we've been essentially paused ever since. So I understand frustration. I understand everybody's expression of dead money and everything else. But I think the reality is this stock still had a really nice gain, and then it stopped and paused, and we have other parts of the market. It almost was a baton toss, literally, where it was passed along right away from the FANGs to the financials, to energy, to the industrials, to the materials. And that, I think, was a powerful and a good thing for the markets. And that's why we are seeing where the markets are, which is really just pushing upon all-time highs once again. So when the FANGs start to kick in once again, maybe it is something as simple as WWDC. That could be a catalyst for Apple, and we'll see. We've had some huge call buying in there today, Scott.
From you too.
Sorry.
From you too, right?
Yeah.
You bought new calls in Apple, and to your point, that's what Katie Huberty, your favorite analyst, thinks, that WWDC could actually be a bigger catalyst than it's been in years past, and maybe what some are expecting, and that's on Monday. But your new Apple call buy suggests that you're bullish in the near term.
Right, and what they were buying, just so people understand, are the June 129 calls. Pretty substantial, like 14,000 of those. But what made those interesting for me is that does fit into this calendar of what we're talking about, WWDC. And let's look at Apple for just a moment. Everybody wants to say it's stretched and everything else. If you look at the PE, you look at the forward PE of a 23, then you start to look at where their margins have increased and what they're doing there, and the earnings, and the strength, and the free cash flow, 80 or $90 billion. I think you're looking at a stock that, yes, it's paused. It made that dramatic run to the upside. It paused. I think we're ready for another move to the upside as we get a little bit deeper. And maybe the ultimate catalyst right now, at least, would be WWDC. But the second half of the year, Katie also has discrepancy with others who think that China's starting to slow down in terms of smartphones. That doesn't seem to be the perspective that her and the team over at Morgan Stanley are talking about. They see this much differently right now on the second half of the year as well.
Farmer Jim, you've played this thing more in the last few months. Is this going to be stuck in the mud with everything else too?
Yeah, well, thanks for the question, because stuck in the mud, if I'm saying for the next 3 weeks, that says nothing about the next 3 years. Both the markets and Apple, yes, I think are going to be much higher over the next 1 and 3 years. I think we got to have some perspective here. The last 5 years, it's returned 40% compound annual growth rate. It's been stuck in the mud for 9 months. That's a fact. Everything I just said is factual. What do I think is going to happen? I think that when you get to the next earnings season, which is probably 6 weeks away, I don't know the exact date, I think they'll give you another blowout earnings, and this time I think the earnings will hold. Why? Because 9 months is an awfully long time for a stock like this to consolidate. The quality of its business is tremendous. One other thing, Scott, sorry, this is important. This is important.
Okay.
All the time that the stock is down here, they're buying back shares. Now, for all of us who are long-term holders, we love that. Let them buy back the shares at these depressed prices, relatively speaking, because they're going to buy back more of them, and it's going to concentrate the earnings power of the shares that all of us hold. So you got to look past the next 3 weeks. Yes, stuck in the mud, but by the end of this year, again, I've said this all along, 150 by the end of the year.
I hadn't even jumped in yet before you were going for your one more thing. So maybe you were anticipating something
You've trained me well, Scotty. You've trained me well, Judge.
Thank you, Farmer Jim. Jenny Harrington's call, by the way, she called Apple. I cannot believe that we're having this part of the conversation, but Jenny Harrington's the one who called Apple dead money, right? Would you have thought that someone would describe Apple as dead money? Well, since she made the call, she's been right. Shannon, you're underweight Apple shares, even though you own them.
We trimmed the stock back in December, and really it was just, as a result of what we felt was some strength and then some of this consolidation that Jim just mentioned. Think about it this way, though. Number one most recognizable global brand, has an installed base that continues to support continued monetization of services. So what? That's what the market has said. They've said, so what? What have you done for me lately? Maybe WWDC's the what have you done for me lately? I think what you're actually going to see is you're going to have to see a handset switch from 6 and 6S upgrades into some real enthusiasm about 5G. And I think that, and I don't want to take away Weiss's enthusiasm about 5G, but I think that that's where the next catalyst for this stock is. But maybe the stuck in the mud over the course of the 9 months starts people to look forward to say, why do I want to make sure that I'm in this stock for that next phase, for that next catalyst? Because the reality is that Apple is not going to slow down. They are going to continue to grow their services and grow that free cash flow that then they can do anything they want with. They can buy back shares. They can pay it out in special dividends. There's a lot of optionality with this company, and I think it's a great long-term hold as far as a core in the portfolio.
All right. Highs of the day for shares of Apple. We'll take a quick break. Up next, to say the least, it's been a wild week for AMC and the other so-called meme stocks. Pete Najarian has been active, as you know, in those names. We'll find out what he is seeing now in the options market and how he is trading them today, because it changes moment by moment. And a reminder, you can always watch or listen to us live on the go on the CNBC app. We're back in 2 minutes.
Okay, so we're seeing AMC here at 51.80. So it looks like AMC, I would say it's going to probably stay within the 55 to 50 levels for the day. unless we get some nice volume coming in towards the end of the day. Volume is dead right now. There's not much going on. So that's what pretty much I see AMC holding between 50 and 55 for the day. Let's take a look at some of the other ticker symbols here. BlackBerry, same thing. BlackBerry is probably going to stay between 1420 and 1580, within that range. So about more or less $1. Let's look at some GameStop. GameStop pulling back here. It's at 253. Clean Energy holding strong here at above of 950. So I had a massive rally, pulling back. Could be a potential buy the dip here. Could be a good play. Let me look at the options here for Clean Energy. I'm curious to see what this is going for. Oh, so it looks like they only have monthlies here. They only have monthlies, monthly options. So, okay. Let's see what their implied volatility. Implied volatility is 157 on their options here. 157. Now, let's see some SNDL options. I know they have really high volatility right now. June 11th, the $1, 200 implied volatility. Let's hear. The $1 is 200, 220 IV. So let's see here.
A woman shot in the head during a mass shooting near Miami has died. The 32-year-old is the third victim to die after being shot outside a banquet hall on Sunday. Still no arrests in this case. And a report soon to be released has found no evidence that aliens were responsible for more than 120 unexplained sightings by Navy personnel. That's according to the New York Times. The findings, though, leave open the possibility that the flying objects were created by other countries like China or Russia. UFOs still out there and still defying explanation. A look at what we do know about the latest sightings tonight on the news. And a very earthbound swarm of insects providing feasts at a Maryland zoo, birds, lizards, and turtles enjoying the endless supply of snacks there. Other animals, however, found the swarms annoying, including chimps and elephants. You're now up to date. Scott, I'll send it back to you.
All right, Rahel. Thank you very much, Rahel Solomon. Well, been a wild week for AMC and other of those so-called meme stocks. Pete's been trading. And, Pete, I'm looking. AMC's not doing much now. It's up 2%, but it has been quite a ride. You've been in the thick of it. Maybe you've been hodling along the way, too. What about now?
Yeah, it's really interesting, Scott. Yes, I am. I took off a position today, but I still have some options that actually extend out past today that I'm going to hold on to for a while and see what happens in this craziness. But, you know, I almost want to compare this, Scott, to, and I was talking to one of the producers, Patty, earlier about this, that it's almost like activism to a degree, because when you look at the meme stocks, let's really break that down. As opposed to an individual activist investor or somebody who's out there shorting something, which is exactly what we've been seeing in most of these names, we are seeing the other side of this, the Reddit crowd, the activist memes, whatever you want to call it. As that army comes together, they become a big force. And we have seen this squeeze many of these various names, whether that's BlackBerry or AMC, or we're still looking, and we don't hardly talk about it, Scott, but how about GameStop? This has not stopped in GameStop. This is still persisting there as well. It's just significantly different now as far as the short interest that it once was. But that's becoming the case in many of these various names. But the amount of volume that we are seeing day in and day out, 4 million contracts yesterday in AMC, 580 million shares trading in AMC, that name, Best Buy, or not Best Buy, excuse me, BlackBerry and others. It's just amazing, actually. Bed Bath & Beyond is another one that I would throw in there with huge short interest and a lot of activity coming into that name as well. So it just seems like they've caught something, and this really goes back to January, but it's still extending. Well, you know, we lose it for a few weeks, and then all of a sudden it seems to pop back right back again.
Maybe, Pete, it's just morphed now, that it's just that the short squeeze angle is just too easy, and it's not that anymore. And it's just simply a momentum wave. And it's riding a very large wave of momentum that probably, you know, the activity today suggests that it has legs, that it's no longer trying to squeeze the shorts out of the business. It's simply riding the momentum that exists, and it's proven to be a good trade.
I would say that you're mostly right. I would say it's a combination, though, Scott. I mean, the reason that we are seeing some of what we are seeing, and I think some of the pauses along the way as well, is some of that covering. When some of these shorts are losing billions of dollars in a single day, I would think that there becomes a time where they're going to have to cover, like we'd seen happen in GameStop and we've seen in some of the others, where we've seen specific names that have come up that have had to cover, and because they're basically getting margin called. So it's a combination of that, but you're 100% right in terms of there's a lot to do with what's going on with the momentum and the options that people are triggering towards as well. Just going extremely far out of the money to buy options, just, you know, with basically hope that there's a possibility that they could move. And actually, they have seen some of that occur. I mean, earlier, just a week ago, believe it or not, we were talking about AMC trading in the 20s, and they were buying the 70-plus strike calls. Well, those actually came into play, Scott, when we hit 72 the other day. So it seems crazy, but maybe it's not as crazy as you and I would think it is.
And Jim, on that note, you know, your narrative has been, well, we know how this is going to end. It's going to end badly. Maybe it doesn't, right? Maybe, at least for AMC, which is now front and center, because they've been able to use this opportunity to raise the equity that they have, and coming out of the pandemic, they're advantageous in scooping up some distressed properties, that they actually have a good and bright future. And the people who've been betting on it all along are the ones who are actually going to have the last laugh, if you want to call it that, rather than those like you who say, well, this is not just, these people don't know what they're doing, this is not going to end well, it's all going to end badly, they're going to lose all their money, blah, 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 blah. What about that?
I think AMC management's done a fabulous job raising capital. I mean, my hat is off to them. They've done exactly what they should do. I will continue, though, to say that I've seen this movie before many, many times. The likelihood that the people who are buying the stock in the 50s make money on it is low. It's low. But the catalyst, and here's where you're going to be able to tell me I'm wrong for a while, because the catalyst is going to be when the Fed pivots and starts talking about at least tapering. That's going to be the catalyst that knocks this down. But this is not trading on fundamentals. It's not. There's no way an investor like me can value the business and come up with the current share price. It's just not reasonable. I've seen this movie many times, whether it's the Web Vans and eToys and Planet RXs of the late 90s, or the Countrywide Financials and the Washington Mutuals of the late aughts. I've just seen the movie too many times to not know how it's going to end.
Look, Bank of America has thrown in the towel on coverage. That's what they're saying today. The price target on AMC was raised to $7.50 today from $6.50 at Wedbush. Obviously, the stock's trading north of 52, so make of that what you will. But we'll see we'll see where it goes next week. All right, we have bullish calls today on Lululemon, Northrop Grumman, plus Ford gets a new street high target. We'll discuss. We'll trade that next. And a reminder, you can always watch or listen to us live on the go on the CNBC app. We'll be right back.
I'm searching for info on options trading, and look, it feels like I'm just wasting time.
That's why TD Ameritrade designed a first-of-its-kind personalized education center. Their award-winning content is tailored to fit your investing goals and interests, and it learns with you. So as you become smarter, so do its recommendations.
So it's like my streaming service.
Well, except now you're binge learning.
See how you could become a smarter investor with a personalized education from TD Ameritrade. Visit tdameritrade.com/learn.
Give me the detonators.
No! You first!
negotiate.
Really? Is this what we're doing?
The Bitcoin on here will never be yours.
Nothing can stop me.
So that's how you got into crypto?
Yeah, no. I invested with Grayscale. Bitcoin exposure straight from my brokerage account.
Okay. What happened to the guy in the roof?
Investing in Bitcoin begins with GBTC. Sometimes you want speedy, but reliable. State of the art, but dependable. In other words, you want a hybrid. So do telcos. That's why they're going hybrid with IBM. A hybrid cloud approach with Watson AI helps them roll out new innovations anywhere without losing speed. From telco to transportation, businesses are going with a smarter hybrid cloud, using the tools, platform, and expertise of IBM.
Good work, little buddy.
I used to have a landlord who thought he could fix everything.
Here we go again.
He could not.
When you need to throw in the towel on renting, Rocket can.
You got any tape?
The world's first fully autonomous vehicle is almost at the finish line.
What a ride! I invested in Invesco QQQ, a fund that invests in the innovators of the NASDAQ 100, like you.
Become an agent of innovation with Invesco QQQ.
In business, it's never just another day. It's the big sale or the big presentation, the day where everything goes right, or the one where nothing does. With Comcast Business, you get the network that can deliver gig speeds to the most businesses and advanced cybersecurity to protect every device on it, all backed by a dedicated team 24/7. Every day in business is a big day. We'll keep you ready for what's next. Comcast Business, powering possibilities.
Options action. Strategies from the street's top traders. New opportunities to profit from the market's hottest trends. Options action. Today, 5:30 Eastern, CNBC. Sponsored by Thinkorswim by TD Ameritrade.
All right, we're back at those bullish calls we talked about. Let's start with Northrop Grumman. Farmer Jim, you own Northrop Grumman. Price target today to $475 from $350. Upgraded to buy over at Stifel. You, of course, have already had it as a buy.
Right. It's been in a little stealth rally here. I've been talking about it on the show for the past month or so. What's happened here is defense stocks languished for the last year, year and a half on the premise that Democrats were not going to spend on defense. Well, they are going to spend on defense, but only certain parts of it. Not tanks and ships. They're going to spend on missiles, on airplanes, on satellites. That's where Northrop Grumman excels. So I completely agree with this call. I think the 475 is a little bit aggressive. I like it, but I'm more in the 425 range, 425 to 450. Either way, it's got a nice rally and it's going to continue.
425, 450, 475. Let's not quibble. Lululemon, Pete. Price target raised to 405 at Cowen today. They remain outperform. Stock is up nearly 3% right now. Of course, they beat and they raised their guidance as well.
Yeah, really strong. Calvin McDonald's done an outstanding job, I think, navigating the company. And when you look at the e-commerce growth of 50%, they're just doing everything right, Scott. And I continue to like this company. I know that when you look at it from a PE standpoint, it is extremely high. There is no doubt about that. But they've got great projections going out into the rest of this year. And I think that growth, just the potential of that growth remains. And with the hybrid society that I think we're going to be in over the next year or two, I think that Lulu is going to be another strong run through 21, through 22, and then probably into 23.
Okay, take a look at shares of letter F, Ford. Today, the price target raised to 18 from 16 at JP Morgan. That is a new street high. Jim Lebenthal, are you going to give Ford any love ever, or is it just a GM world and you're living in it?
You know, I want to give Ford love. GM, look, Ford, you can make money in Ford, but you're going to make more money in GM. They've just done a better job on the EV space and the autonomous vehicle space. I'm not panning Ford, but GM's the better stock. What do I do? How do I say that nicely? I don't know.
Well, I mean, year to date, it's a nicer gain for Ford.
Yeah. How about longer than year to date?
I mean, look, you can go out to a lot of metrics.
I'll stick with GM.
Go out to, I mean, you pick your metric, Farmer Jim.
All right. How about from here to year end?
Okay. All right, let's see what happens, right? Let's see what happens let's see between now and the remainder of the year. I mean, I have no clue, but whatever. We'll come back and revisit that. All right, up next, Pete has unusual activity coming up when we come back.
Whether it's a technology first, a fashion first, a science first, or a first for us all. Whatever you hope to achieve for your business, Cloud First helps you get to value first. Let there be change. Accenture.
Remember when driving was fun? It was an act of freedom, an inspiration. But somewhere along the line, cars just got boring. You deserve a car that thrills you. Like sports cars with 3 pedals, trucks that take you to incredible places, colorful crossovers, and cars loaded with technology. And there's a car company that believes that too. One that has been delivering thrills for over 80 years. This is the new Nissan.
The pursuit is on. The pursuit of outperformance at PGIM, with deep expertise to outthink across multiple asset classes, actively managing investments in the world's public and private markets, outscale, with the resources to serve 1,500 clients in 52 countries, and outlast, with long-term conviction that looks beyond today's volatility. Join the pursuit of outperformance at PGIM, the investment management business of Prudential.
We sit for over 9 hours every single day.
Still working from home?
The pocket is large enough to fit a tablet.
The tank has what you need.
That's smart.
Shark Tank, tonight 8 Eastern. See you.
Got 6 plus 1.
Wingstop for
Who ordered lunch to class? Chloe? Archie? Eleanor? Oh, so nobody will fess up? Fine. I guess I'll just have to eat it all myself. 10-piece lemon pepper with extra ranch?
Yeah, it's in there.
Awesome, thanks.
You know you want that smoky, tangy, sweet, and spicy sauced and tossed Wingstop, where flavor gets its wings.
When it's others first, you second, we see you. Giving tirelessly, we see you. Summer's Eve sees all women, and we put you first. With gentle pH-balanced cleansing washes more women reach for. Summer's Eve, we see you.
Let's get back to talking smack with the side of mac and cheese. Before we can safely come together, we need the facts on COVID-19 vaccines. To get the facts, visit getvaccineanswers.org so you can make an informed decision when vaccines are available to you.
Download Thumbtack today.
All right, Leslie Picker's back with us. She has breaking news regarding Facebook. Les?
Hey, Scott, that's right. Facebook announcing that it has decided to continue the suspension of President Trump's accounts on both Facebook and Instagram for 2 years, effective to the date of the initial suspension, which was January 7th of this year. Now, just some background here for those of you who may not remember that last month, the oversight board that reviews these types of issues, they upheld Facebook's suspension of the former president Donald Trump's Facebook and Instagram accounts. That was following the praise of people, or for people that were engaging in violence at the Capitol on January 6th. In doing so, though, they ultimately instructed the company itself, instructed Facebook to review that decision and respond accordingly. And so this is the response. The company said that they did decide to uphold that suspension for 2 years, dating back to January 7th. So January 7th, 2023 is the date that we should be looking for with regard to the suspension, Scott.
Okay, something tells me we're going to hear from the former president regarding this issue, perhaps momentarily. We'll see. Leslie, thank you. Leslie Picker. All right, Pete, unusual. What do you see today?
All right, I'm going to start with Tapestry, and that's Coach, that's Kate Spade. The stock was trading around 41.35. As a matter of fact, yesterday they were buying the 43.5 calls. Today, they're buying 5,000 of the next week expiring 41 calls, Scott. And so those are going for about $1.10. As I say, about 5,000 of those. Pretty good to see that twice, in a row. So that one stood out for me. IQ is another one. Its stock was trading just around $14 a share, and we had a pretty large buyer, 15,000 of the June 14 calls. 10,000 in a single print. So those are big traders coming in there expecting to see a nice move to the upside there as well. Then I'm going to give you a quick update on Dropbox. John had some unusual the other day, but he actually used it as a final trade in Dropbox. They were buying the June 29 calls pretty aggressively, Scott. They bought about 10,000 of those. That stock is really starting to move very rapidly towards 29. So just as a quick update, keep an eye on that one as well.
All right, appreciate that, Pete. Thank you very much. Coming up, fighting the hackers, the Justice Department taking a big step to combat cybercrime. We've got those details next.
The way we access information and communicate has evolved. This evolution has resulted in the integration of telecommunication, media, and internet companies. The Communication Services Sector SPDR ETF offers access to the entire communication services sector while reducing single stock risk. The Communication Services Sector SPDR, the next chapter in investing. Before investing, consider the fund's investment objectives, risks, charges, and expenses. Go to sectorspiders.com for prospectus containing this information. Read it carefully.
Millions are saying yes to Allegra, the #1 allergist-recommended non-drowsy brand. Allegra works 2 times faster than Claritin, and unlike Zyrtec, it's non-drowsy. Say yes to Allegra. And for congestion relief, find Allegra Deep.
Okay, so right now, AMC holding here. Let's draw some lines here. Holding around the $51 level. I'll put it here. And put here 51. Very nice. So, AMC holding here at 51. Let's see what the top runners are here. Clean Energy pulling back though. Palantir had a good run up. Went up to 24.50. Pulling back. Clover Health. Let's see here. Look at the daily. Let's look at the overall markets, what they're doing. Oops. The Qs having a nice move here. 1.6% on the green here. 1.6 on the Qs. Let's look at the VIX. The VIX getting crushed here. 1643. VIX getting crushed here. So it's markets are looking very bullish here. There's concerns of inflation. You know, those numbers are gonna, I believe, gonna come out. The CPI numbers are gonna come out next week. So hopefully we can get a nice rally now until then. So if we do have a pullback, you know, it's not much of a pullback. We'll at least have some appreciation of gains from now until then. So we'll see how that pans out. Yeah, let's see here. AMC still holding here around the $50 level. Potential play here. I would like to buy some options on it, but it's just volatility is too high.
Just how frail critical supply chains are here in the United States. Now the Justice Department issuing new guidance to combat the growing risk of cybercrime. Eamon Javers is at the DOJ with the person leading that charge. It's a CNBC exclusive. Eamon?
Scott, that's right. I'm here at the Department of Justice with Lisa Monaco. She's the Deputy Attorney General. And thank you so much for having us here, first of all. And secondly, what can you tell us about what the changes are here at the Department of Justice in terms of the way you're going to handle these ransomware cases going forward? So many cases in the headlines just over the past 2 weeks or so.
Well, great to be with you, Eamon. Look, what we are doing here at the Department of Justice is reflective of the threat that ransomware poses to national security and to economic security. What we've done in just a short time that I've been back at the department is directed a 120-day review of everything the department is doing to combat cyber issues, including ransomware. We've established a ransomware and digital extortion task force to bring all of our tools to bear and ensure that we are going after these attack networks. And yesterday, just yesterday, I issued a directive to every federal prosecutor in the country that we need to treat ransomware attacks with the severity and the urgency that it merits. That means centralizing reporting back here to the Department of Justice from around the country, so we have a national and indeed a global picture of the threat of ransomware attacks, including the illicit use of online infrastructure and networks that fuel these attacks.
This morning in the Wall Street Journal, we saw the FBI Director Chris Wray comparing this ransomware crisis that we're in right now to 9/11. Do you agree with that comparison? How does it shake out for you?
I absolutely agree that we need to treat ransomware and cyber attacks like the national security threat that they are. That's why we're taking the steps that we are across the department, and indeed across the government. We need to have a national picture, and we need to bring all of our tools to bear. Here at the Department of Justice, our job, of course, is to enforce the law and to protect Americans against threats from all types. And today, that means the exponential rise in ransomware attacks. And that means telling corporate America and those who had organizations of all stripes what they can do and what they should be doing to address this threat.
What does the U.S. government know about who's doing this, right? I mean, there are bad guys on the other end of the keyboard. They might be in Russia, former Soviet state. The most recent group we heard of was called Our Evil. Does U.S. law enforcement, U.S. intelligence know who these guys are and where they live?
Well, we know that, indeed, the attacks, the most recent attacks, including against JBS Foods and against the Colonial Pipeline, are linked to criminal actors, criminal groups that are known to law enforcement, that have ties to Russia. And these are attackers who have struck before. And frankly, it is reflective of a threat that is ongoing today, Eamon. And indeed, as we speak, companies are under attack from ransomware attacks, from malicious cyber attackers, whether they're criminals, whether they're nation states, or whether they are what we call a blended threat of the two.
The big question in all this is you've got these criminal gangs, some of them operating in Moscow. I mean, we've seen pictures of some of them doing donuts in their Lamborghinis and sort of spending all this money that they're making. How much control do you think Vladimir Putin has over these criminal gangs? Is this a direct control thing where he's ordering these attacks? Or is this sort of a hands-off approach by the Russian leadership saying, hey, you guys go cause mayhem and we're not going to mess with you?
Well, what we know, Eamon, is that these attackers and the criminal groups that fuel many of these attacks, including some of the recent ransomware attacks that we've seen, come from groups that have links to Russia. And what we know more broadly is we cannot give any quarter, and no country should be harboring criminal actors of any type.
But
and
that's
our
links,
message.
It's those links to Russia, right? How strong are those links? Are these people who are answering to the command and control of Vladimir Putin, or are these people who are out there in the Wild West doing what they do, and Putin is just allowing it to happen?
Well, I'm not going to get ahead of the investigation. Obviously, these things are ongoing. These are both the most recent ransomware attacks are the subject of ongoing investigations. The message, I think, needs to be that no country should be harboring malicious actors of any type. And importantly, the message needs to be to the viewers here, to the CEOs around the country, that you've got to be on notice of the exponential increase of these attacks. And if you are not taking steps today, right now, to understand how you can make your company more resilient, what is your plan? If your head of security came into you today and said, we've been hit, boss, what is your plan? Do you know, and does your head of security know the name and number of the FBI leader in your area who deals with ransomware attacks? These are steps you've got to be taking right now, today, to make yourselves more resilient.
But these are national strategic resources, right? It's fuel, it's food, it's the things we need to run our society. Right now, it's a ransomware attack where if you pay, allegedly, you get the cryptocurrency, you get the crypto key back, and you can reopen your systems. What if there's an attack where it's not ransomware, and they simply shut these things down as a hostile nation state? Is the United States prepared for that?
Well, and we've seen attacks of that type, nation-state-driven attacks. This is exactly why we need a whole-of-government, and we are putting forth a whole-of-government approach to this. The threat to critical infrastructure, the threat to companies across all sectors is very real. But the most important thing we can be doing is not allowing ourselves to be victimized in the first place. The biggest difference, Eamon, between a company and a CEO who heads a company that will be paying out millions.
I'll just pull it up now, Chris. I was going to wait for commercials, but this is pretty boring. Nothing much going on here. So let's see. So we look at Workhorse right now. We have a short volume ratio of 32% as of yesterday. Let's look at the history of it. This is today. We saw more shorted shares 1 hour ago. So we're seeing more shorted shares today. 1 hour ago, we saw another 150,000. 2 hours ago, we see 200,000. 3 hours ago, we saw another 150. So we're seeing more and more. Let's look at, these are the fees. Let's look at the history. So the short volume ratio in the past, let's see, 1, 2, 3, 4, 5 days, not counting today, is actually going up. So Workhorse maybe has the potential to go higher, actually. You might be right, be onto something here, Chris. It's at 31.72 as of yesterday, but previously it was at 21.88. Before that, it's 26. Before that was at 26.6, 27. What I'm trying to say is yesterday was the highest it's been in the past about 2 weeks. And it looks like they're buying more today. So that might create more momentum to the upside. Let's take a look at Workhorse. Let's see here. Let's take a look at it on the dailies. So yeah, it's at 13. It's at $13 right now, pulling back. Maybe potential for some options play here. Interest declined from 26 to 21. Some must have covered. Yeah, but right now it's actually at 31. Let me check on my other. Let me check on my other. Let me check on Ortex. Let's see. This might have. Let me log in here. Log in. Let me see what's going on here. Let's see where it stands right now. Let's type in Workhorse. So the short interest has changed plus 10%. It's currently estimating 30, so it's still around 31%. So it's still correct. So yeah, let's see here. Days to cover on loan. Let's see here. And we're seeing, maybe this is the most up-to-date current, but on the Fintel one, it's showing here. Let me see here. Yeah, and the Fintel one is showing around 31. So yeah, short interest is rising. As it moves up, they continue to hit it and hammer it down. Potential pullback. Let me see some options here. Workhorse. This one's just a little dangerous just because it doesn't really have anything going on for it right now. And this is a pure play, pure squeeze play here. It has a lot of negative news. It's been getting dumped. Volatility is a little high here. Let me see here at 13. Let's look at some, let's say December calls. Implied volatility is 129. Not super high, but let me see here. Could be a play. Workhorse could be a play. One to look at. Yeah, Chris. Someone went from 26 to 21, but the numbers have been fluctuating, and it's around 31 now. So definitely went higher from yesterday from this pop. And we'll see at the end of the day numbers to see if more people covered, but or if more people are shorting. It looks like more people are shorting. They're trying to hammer this bad boy back down to 7. Okay, let's see here.
Now, Shannon, you are up first.
Las Vegas Sands, the majority of the revenue comes from Asia. We believe that this is the best positioned gaming stock in the world, so that's why we like it.
Still playing for that reopen. Big time stocks down about 1 1/3% today. Liz Young of SoFi, the newly public company. Big week for you. Congrats.
Big week for us. Thank you. I am leaning into the small cap strength with small cap value. The biggest sectors there are financials, industrials, and consumer discretionary. I like those for the year, and I like the small cap space over large cap.
You feel like that's a symbol of risk coming back into the market if small caps can continue to do well?
It's a symbol of risk appetite, but also the cause of a crisis matters, and the way that we went into it matters, and the way that we come out of it matters. So small caps got hit the hardest. I think small businesses come out the strongest on the other side.
Okay, good stuff. Thank you. Farmer Jim.
Yeah, I'm having lunch after this, Scott. I may have to have a glass of wine with it after this show. You are running through the finish line this week. I'm impressed. Final trade is Raytheon Technologies for the same reason as Northrop Grumman and Boeing.
All right, good stuff. Thank you, Jim. Enjoy. Pete?
I'll give you microvision, Scott. We saw some call buying in there, and I think this is a great area right now in the markets. Anything in automobiles is doing very, very well,
stuff.
It seems, right now.
Great weekend, everybody. The exchanges now.
Thanks, Scott. I'm John Fort, and here is what's ahead. We're going to speak with a five-star fund manager who's up 25% year to date, far outperforming the markets, and the gains haven't come from the high flyers, the reopening trade, or big tech. He's going to tell us what he's buying. Plus, electric earnings. ChargePoint giving strong guidance on its call today as it inked an EV deal with GM. We're going to talk to the CEO about that deal, what could be next, and the role the infrastructure bill might play in the sector. And multiple stock sales, millions of shares issued, and a lot of dilution. We're going to look at AMC's wild week, but we begin with today's markets. Seema Modi with the numbers.
John, all those concerns around Fed, inflation, jobs, major averages are on track to end the week in positive territory. We are currently trading at the best levels of the day, led by the Nasdaq up 1.4%. And just from a global markets perspective, worth noting the European stock averages have been hitting new highs every day once again, trading higher by 0.4%. Here in the U.S., consumer discretionary is topping the S&P. Names like Twitter following news of its subscription service. Take-Two Interactive planning to launch 93 games over the next 5 years, getting the support from analysts at Jefferies with an upgrade, and Netflix higher by 1.6%. Actively traded names, once again, it is AMC. 185 million shares have now exchanged hands. In fact, average trading volume on AMC has nearly quadrupled this year's average. Biogen is also moving on heavy volume, up about 5% ahead of an FDA decision on its Alzheimer's drug. And Bitcoin also moving down just about 4.7%. So completely isolated data points, John, which do not make up a trend, but certainly are worth watching.
All right, Seema, thank you. And now stock picking is back with active funds crushing passive ones. According to Bank of America Securities, active funds posted their best month ever in May, with nearly 70% of large cap funds beating equity benchmarks. One manager seeing spectacular gains is Eli Salzman, portfolio manager of the Neuberger Berman Large Cap Value Fund, rated 5 stars by Morningstar. It is up 27% year to date, outperforming the S&P 500 by 15 points. Eli, welcome. Now, I don't know. This isn't supposed to be working. I'm told value's dead. You're not in GM's, GameStop or AMC. You're not chasing Snowflake. What are you buying? How can it be working?
Yeah, sure. Value's been out of favor, as we all know, for the last 13 years, but it's time for value. It's time for value over growth. It reminds me a lot of what we saw 20 years ago, where growth was in favor for an extended period of time in the 90s, and then value took over in 2000 and ran for 7 years and ran hard. We're entering that same period now, at least for the next 3 to 5 years.
So what are the underlying beliefs that you have about what the economy is doing or what's necessary that are driving these picks?
Sure. The first thing to understand as to why value is going to outperform is, remember, value works in an accelerating economic environment, and growth works in a decelerating environment. Again, that's counterintuitive, but you pay a premium for growth when growth isn't there. We are entering an accelerating environment. We're looking at an environment that's going to have higher growth, higher inflation, and also higher interest rates. And in a higher interest rate environment, you want to be in low duration, not high duration, not long duration. Long duration is growth, low duration is value, and that's where you want to be.
Now, that's a similar argument that I hear to people who are buying Bitcoin and cryptocurrencies about the inflation side of this. But you are buying something that is very different from that, including JP Morgan. Tell me why.
Yeah, we really like the financials a lot here. Remember, financials benefit in three ways. Let's start by talking about the interest rates. Most banks are asset sensitive, including JP Morgan. Clearly, what asset sensitive means is loans repriced before deposits. Clearly, in that environment, you get net interest margin spreads expanding, and clearly that's very good for financials. The other thing also is loan portfolios and the quality of those loan portfolios are completely misunderstood. Loans are clearly about to pick up as the economy picks up and the competition has moved out, so it's all very good for financials.
Now, I said you don't have big tech, but that's not entirely true because Cisco is pretty big, though it was called big tech more 15 years ago. What does it represent, that type of company, among your picks? Do you have others of its ilk? And why will you hold on to it, if you will, for the rest of the year?
Sure. You know, the answer is we like Cisco very much, but it's important to understand technology as a whole is a very big weight in our benchmark. And while you see a couple of technology names, we are very underweight relative to the benchmark. So please don't misunderstand. We are not positive on technology. We're definitely very positive on Cisco, but technology as a whole, we're quite negative on. We think, again, like we talked about, the long duration stocks, the technology stocks are the ones that are going to get hit here.
And so as we head toward the end of the year, are there specific either catalysts or warning signs that you are looking out for, whether they be legislative, whether they be economic signals that we expect to get that are going to affect how much you lean into or away from certain elements of your thesis?
Yeah, I mean, listen, obviously we're a bottom-up manager and we go company by company, sector by sector. That being said, from a top-down perspective, we are going to focus very clearly on economic growth, what's going on in the environment, is pricing materializing, is capacity coming on? Those are the things that we're going to focus on. With the amount of monetary and fiscal stimulus you have pumped in over the last year, the economic growth is sort of baked in for the next 6 to 12 months.
And when you look at the labor report today and some of the signals on inflation that we've been getting, I know you mentioned inflation being a concern, but how transitory do you think it is? Do you see anything that maybe others aren't paying as much attention to that you think we should be paying more attention to?
I think some of the inflation is clearly transitory, but much of it is not. One of the most important things to focus on is we've never, in my 40 years of being in the business, we've never seen this kind of capacity destruction. COVID destroyed a lot of capacity. That capacity takeout, some of it is permanent. So we believe that while some inflation is transitory, some is not. Some will be with us for quite a while.
All right. Old school stock picking and paying attention to those signals. Eli Saltzman with the Neuberger Berman Large Cap Value Fund. Thank you.
Thank you. Thanks for having me.
Speaking of inflation, it continues to be the big word when it comes to the Fed as investors try to figure out how hot they'll let the economy run. Today, we got more evidence of those rising costs. Wages jumped more than expected. New credit card data shows consumers are paying more for goods. So is it another sign that the Fed could go from baby steps to bigger leaps when it comes to tapering? Joining me now is Michelle Meyer, head of U.S. economics at Bank of America Global Research. Michelle, what does this data show and how should people be reacting to it?
Sure. So I think it's very clear that there is this big kind of mismatch between demand and supply. Demand is extraordinarily strong. Consumers are out spending at a rapid clip for all kinds of products, whether it's durable goods or services spending. And meanwhile, businesses are investing and trying to keep up with that demand and increase their capacity. But there's obviously some real challenges there, and that's creating these price pressures, which were evident in today's jobs report, and it's evident in the inflation numbers as well.
So we're talking about price pressure, but there's also wage increases. I've been seeing all these stories about, hey, how much the summer jobs are paying. It's a good time to be a teenager looking for work. Some of the inflation might be transitory. Are the wage hikes also transitory, do you think? And is that going to affect how much people are willing to pay for things as the year progresses?
Well, look, yeah, I mean, there's similar dynamics in the labor market as there are in the broader economy, which is that there's an incredible amount of demand for labor. We see that with the job openings numbers. And there's some friction in terms of getting people back in the labor market into the jobs that would best suit them. So I think the increase in wages, particularly what you're seeing on the lower skilled part of the labor force seems to be partly a function of this, and it's probably going to slow down. I don't anticipate we're going to see wage growth of this magnitude much longer. That said, I do think we need to be careful with how we characterize transitory. Transitory could last for a few months here, if not quarters, given the incredible imbalance in the economy right now. And the longer that you get these price increases, particularly the larger those price increases are, the more it starts to set into expectations and can threaten to be more persistent.
So does this at all shift the math on when we get a taper from the Fed?
I don't think it's going to really change the timeline too significantly, to be honest. I think that the Fed is setting up very nicely and carefully for a change in the balance sheet for tapering, which in the next few months, I think is still very much a function of the success in the labor market rather than this, kind of inflation narrative. I think the inflation trajectory will really influence the timing of rate hikes and the speed of those rate hikes. But I think for tapering, it's about making sure that there's sufficient growth, broad-based enough growth where you can start to pull back on those asset purchases. And to me, they're starting the baby steps in setting the stage for it. And I think that throughout the summer, we're going to hear a little bit more around the taper, a bit more details, nothing concrete. And then in the fall, particularly that September FOMC meeting, I think if all goes as planned, they'll be able to send a more explicit signal at that point.
Okay, now let's go a little bit more micro again, get back into that credit card data. A year ago, consumers were binging on toilet paper, right? But now entertainment services, is this like the flip side of I've been cooped up, all year with my closet full of toilet paper. Now I want to get out and have some fun. Is that what the data is showing?
Yeah, I mean, to some extent, yes, it is.
All right. Thanks, Armando, for eHang. So let's pull up eHang in the meantime. Pretty boring right now news. So we're seeing a pop on eHang, EH, ticker symbol EH, currently at 34. So a volatile ride for investors, but certification remains the key. eHang's outlook is dependent on obtaining certification from China's Aviation Authority, and progress is being made. These are some of the key points. We're not duly concerned over the role of Ernst & Young Huangming LLP's role as appointed auditor, despite the record of the engagement partner. eHang remains front and center in the development of urban air mobility in China. So this is urban air mobility in China. Very interesting. Blade already, this Blade SPAC already, it used to be EXP C, I believe, is now Blade. So Blade is one of the eVTOLs here in the U.S. and eHang is China's. Okay, so I know a few players. Archer's the other one here in the U.S. I didn't know eHang was the equivalent in China. eHang remains an attractive option on obtaining certification and developing a domestic Chinese market for passenger drones. We are not duly concerned over the role of Ernst & Young's Huangming LLP's role as appointed auditor, despite the record of the engagement partner. And so, let's see. The race to certification. So some positive news there for them to get certification in the Chinese market. This was just out a few minutes ago.
The president's infrastructure push, plus Bank of America's throwing in the towel on a couple of meme stocks, saying they're no longer trading on fundamentals. Will other Wall Street banks follow suit? The Exchange, back in a moment.
This is The Exchange on CNBC.
Allergy sufferers. Bedtime means
So EHang's pretty interesting. I'm going to read up a little bit more on that. So it looks like they're on the road to get their certification. AMC here holding at 52.45 and pretty much a sideways trading here. The S&P's up 0.76%, nice gap up here and holding steady.
Unless Amazon is committing to leaving MGM alone, I think you're...
Let's check out some NVIDIA. NVIDIA 704. NVIDIA has been one to look at. This stock, I believe, by the end of July is going to hit 800. I mean, at this rate, I mean, it's just explosive momentum. I'm looking for a pullback here on NVIDIA. Look at this chart. It's just a wall. This is just outrageous. This is great.
And more reward.
Welcome back. Shares of EV charging leader ChargePoint higher after posting 24% revenue growth and record new customers last quarter, plus bullish guidance for Q2. Still down about 10% since its public debut through a SPAC in March. Can this charging pioneer get a boost from the EV surge and President Biden's clean energy push? Let's ask the CEO, ChargePoint President and CEO Pasquale Romano. Pasquale, good to have you. What are these dynamics that could impact both demand for your service and your progress throughout the rest of the year?
Yeah, for us, it's all about vehicles being sold into the consumer market and the fleet market. Our business is completely driven by vehicles driving demand for charging. And you're seeing that. You're seeing a tremendous number of announcements. You're also seeing great consumer reception to the new makes and models that are really going to drive demand for our products.
Now, to what degree do incentives from governments then influence the pace and rate, right, of purchases of EVs? To what extent do, I guess, the pricing actions by some of these companies influence that too? We've seen Tesla in the last few days say, hey, we're going to have to raise prices a bit to deal with some of these supply chain issues that we've seen globally.
Yeah, I mean, I think it's normal price dynamics in not only in the auto industry, but you're seeing that, I think, across the board in all industries. Prices move around with with supply chain issues, availability, demand, et cetera. But in general, EVs, you're seeing the most heartening thing is you're seeing more makes and models being introduced daily, and their price points, the available models at lower price points that are more accessible to consumers, has gone way up. And that, I think, is the bigger driver to consumer adoption of electric vehicles.
To what extent are you watching what's happening globally in EV adoption? And, how much do those other markets affect how you invest and how you strategize about your growth?
Well, we're investing heavily in Europe, in addition to North America. And then we're also investing heavily in the emerging fleet segment, which is a global business for us as well. So we not only watch it, we think it's critical, and here's why. The auto industry is one where it cannot bring platforms locally to a market that are too distinct, because the R&D support for that is challenging, and obviously you get economies of scale when you can sell into more than one market. We have the same exact dynamic in our industry and virtually every other. You need global scale to be competitive, to drive the R&D that you need to drive to support it. And more importantly, we need to be well integrated with auto OEMs, in-dash experiences, and the ecosystem around that. And they're going to introduce those platforms globally. So the global nature of this cannot be more critical.
Are we going to get, on that commercial industrial front, are we going to get more EV truck stops? I mean, those seem like things that, that could be a backbone for this kind of business. How does that develop? Is there anything that you can do, either influencing policy or coalition-wise, to bring that more to fruition more quickly?
Yeah, so we're working with the National Association of Truck Stop Operators because they serve long haul and medium haul trucking, as well as passenger cars that want to use the facilities at many of the member truck and rest areas that are a part of that organization. So the answer is a definitive yes there. Our policy team is quite well distributed through the country, through not only our country, we also have a presence.
Armed with a big pop here. Armed, we're seeing a lot of money coming into the markets, guys. I haven't seen this kind of action in a while. It's starting to feel very bullish. I think we're going to see a lot of money coming in here. We're seeing a lot of pops on some of the names, even though it's short-lived. I mean, we weren't seeing this in the past 2 months. We weren't seeing any names getting this kind of activity. This is good news for us growth stock investors and small cap investors. So Armed trending right now. Armed having a huge pop here. Let's look at the 5-minute chart. Wow, explosive, like $3-4 move. So let's see if I can find some information here. Armed, let me look it up. So there was an article 4 hours ago about selling it. I don't see any recent news. I love how this article came out about trying to sell Armed this morning, and it's up like freaking 100%, 67% to be exact. Wow. So I don't see any news here. I don't know what's going on with Armed, but one that is trending. Let's look here. Facebook. We're seeing money coming in. Look at Facebook. Armed trending. Let's see. Envis. Another one trending here. Microvision trending. Getting it's up 18%. Microvision trending right now. 18%. I like this Friday. You don't see this kind of activity on Fridays. Let's see. This is another one trending. SCR. Score Media and Gaming Inc. So this is internet and software company. Market cap of 743. So Score Media, another one trending right now. It's up roughly about 3.4%. Not as hot as some of the other ones. But yeah. Armando, yes, I hear you with the NVIDIA. I announced it on the Discord as soon as I heard it. I heard the announcement, the 4-to-1 split, and I sent an alert out there. I jumped on it. I bought shares. I bought contracts. Today I closed a position where I made about, I think, around 350% on my options. Fantastic trade. I'm still holding more options that expire next week, and that expire in 2 weeks. And I'm looking into buying more. I want to buy more options. So yeah, there's no pullback here. It just looks like a wall. But Nvidia, I mean, sky's the limit. I have no price target for this guy. This guy could go to 800, 900. Who knows?
News update at this hour. In Hong Kong, police stopping pro-democracy celebrations of the anniversary of the Tiananmen crackdown. In past years, tens of thousands gathered to light candles and remember the victims. Authorities cited the pandemic for banning events. For the second year in a row, the Singapore Grand Prix is being canceled because of the coronavirus. Singapore still requires lengthy quarantines for most visitors from abroad. Formula One organizers say that they continue to plan a 23-race season, which could bring a second race to the U.S. this year. And back here in the U.S., in California, severe drought drying out many reservoirs. One researcher says that they're averaging 50% below normal levels. State officials predict that they'll hit record lows this summer. And tonight on the news, how drought is forcing changes in western states, what conservation measures are being considered, and who will have to get by with less water. It's coming up tonight at 7 p.m. In the meantime, we'll send it back to you, John.
All right, Rahel, thank you. Now, last year made it more important than ever to have a digitally empowered sales team when face-to-face meetings became impossible. Enter Outreach, an AI-driven platform designed to maximize sales. Outreach saw its revenue double in the last year, adding customers like Microsoft, Zoom, and Adobe. And this week, it closed a $200 million funding round as the valuation more than tripled to nearly $4.5 billion. So what's next as Outreach continues to grow post-pandemic? Let's bring in co-founder and CEO of Outreach, Manny Medina. Manny, good to see you. And I want to put this in the context of what we see happening in the broader economy. I mean, consumers are spending again. They're spending a lot, apparently. People coming back to the office. There's money for companies to make if they invest correctly, I guess. How does that fit into your hiring plans, growth plans, expansion plans for Outreach?
John, good to see you again. Outreach is doubling its headcount again. We almost doubled from the beginning of the pandemic all the way to now, and we expect to hit another double in terms of hiring. So we expect another 600 to 700 people to come on board. And the most importantly, what we're seeing is our customers are growing as well. So we sell seats ahead of sales demand, and we're seeing sales seats being bought very quickly. And what we're expecting our customers is to be driving double-digit growth across the board, which is a great sign for the economy.
Now, what's the mindset of these companies that are looking to drive sales, right? Because your pitch is sales efficiency. We're going to get you the right leads and help you close them. I mean, what's going to determine who wins most as the spending continues to pick up, at least people hope, coming out of this pandemic?
That's a great question, John. So what we're seeing is the rise of what we call the revenue innovator. And the revenue innovator is a different job description that has changed since the pandemic because it's a data-driven, digital-first, predictable, long building, trusting relationships kind of seller. And what we're seeing is that this influx and this growth of the type of seller that knows how to drive a digital conversation that is complemented with a hybrid approach of visiting your customer once we come back, but it's a very predictable, very data-driven kind of job description. So what we're seeing is the growth happening across our customer base is a growth of that kind of seller, a seller and a customer-facing rep that is going to be very data-driven and very innovator-led. If we were to think about the Salesforce number that just came out, those are incredible signs of growth for the cloud platform. And that's an incredible sign of growth for us as well, because what we're seeing is that the system of action is taking place on top of the system of record that Salesforce is providing.
Yeah, on the Salesforce platform where you operate, I want to note. Now, we keep talking about how this move toward digitization has gone beyond the usual suspects, tech companies, companies that are living on the edge. The pandemic has pushed more companies into thinking about their digital processes and being efficient. Are you seeing a change in the makeup of your customer base, the types of industries represented, and the kinds of problems that they're looking to solve?
Oh, unequivocally so. What we're seeing is all the companies that used to be in the mainstream economy are coming accelerating into the second wave of digital transformation. So the first wave of digital transformation is to move all the data into the cloud, and that is happening, but it's not what companies are talking about. Companies are talking about is how do you make me smarter? How do you make my teams more efficient? How do you make my teams digital first? How do I live and thrive in this new hybrid environment post-COVID in which the buyers are not ready to see sellers until post-transaction, until you're expanding, not selling. So all this the before laggards are coming in and becoming, early innovators, early adopters of new technologies such as outreach that is, AI driven and digital first.
But Manny, do these companies have the employees they need in order to get digitally smarter? Because if the companies weren't leaning as much into digital as they were before, it suggests to me that maybe they don't have the knowledge worker base that it takes to use the software. So is there more demand for that work, or are the companies able to find it? Is that a bottleneck perhaps for the industry?
That is precisely right. It's the new job description are the revenue innovators, the digital first, the digital natives that are coming online, and those are new job descriptions. So they may not have them, but they're coming online. They're getting these jobs. These revenue innovators are the new revenue leaders, and they're hiring people who are of the same ilk that are looking to drive this innovation within their companies. And that's what you see in the transformation. Transformations are always people first, and this is this new wave of people that are coming into traditional companies that are driving this digital transformation because they're forward thinkers and they're data driven as well.
A deeper look at what some of those numbers in the jobs report might mean and how innovation factors in. Manny Medina, CEO, co-founder of Outreach. Thank you.
Thank you, John.
Bank of America is pulling its coverage of two meme stocks, warning investors to no longer rely on their past analysis on one of them in particular. Those names are coming up. And Bitcoin falling today, following a tweet from who else? Elon Musk. We'll head to the biggest Bitcoin event in history to find out what the crowd of more than 50,000 people are saying about the volatility. The Exchange will be right back.
Hey Armando, I hear you, man. There's a lot of action going on today, and surprisingly on a Friday. Some of the meme stocks, AMC, and some of the the Blackberries, right now those are cooling off, but there's a lot of things moving right now on the sidelines. I mean, some of the big names. You have Nvidia, you have Facebook, you have some of the other more popular names that were earlier this year, NMDM, BNGO. I mean, there is a lot of action today, and that's very unlikely. So it's kind of weird, The meme stocks are kind of cooling off right now, but there's activity on the SPACs and some of the larger caps.
Now are higher, with the NASDAQ leading the way, up more than 1%. Here are some of the movers this hour. Chip stocks outperforming today, those gains putting semiconductor ETF SMH on pace for its third straight weekly gain, the longest streak since April. DocuSign on track for its best day since September on the heels of strong results, though it's still off more than 20% from recent highs. And shares of Square, jumping after CEO Jack Dorsey tweeted that the company is considering making a hardware wallet for Bitcoin. And speaking of Dorsey and Bitcoin, Jack Dorsey speaking right now at the world's largest Bitcoin conference in Miami. More than 50,000 people gathering to discuss the future of crypto. CNBC.com tech reporter Mackenzie Sigalos is there and joins us now. Mackenzie, Elon Musk let a little air out of the Bitcoin balloon that was already deflated from about a month ago. Is he popular there or no?
Elon Musk is a divisive figure, even though he is not physically present here. So already today, Michael Saylor of MicroStrategy, a company that obviously was among the first movers to add Bitcoin to their balance sheet last year before the rally began, appeared to take aim at some of Elon Musk's comments, saying that Bitcoin, by a long shot, was one of the most energy efficient assets in the history of the planet. Jack Dorsey, as you mentioned, also speaking at the event today, and he said that he thinks that Bitcoin is good for renewables and in fact is good for the environment. He also appeared to kind of take aim at Elon when he said that he thought that there was a consensus among notable figures in this space on that topic. So definitely coming up. Also in conversations that I'm having, like I asked people, do they think that this setback from Elon Musk's comments has lasting power? And they think it's a blip.
And so how much talk then shifts to Jack Dorsey, who's been very much a proponent of Bitcoin and decentralized finance, has power communication through Twitter, and is certainly big in fintech through Square. I mean, this hardware wallet possibly getting a lot of buzz, right?
Yeah, absolutely. And I mean, a lot of positive comments from him saying that if he wasn't involved in Twitter and Square, he'd be working in Bitcoin. He'd be a full-time employee somewhere in the space. But this isn't new, right? Like, he's always been a big-time fan. So, like, even though he's very bullish on his Bitcoin comments, it's just a continuation of things that he said for years.
Yeah, that hardware wallet would be interesting. Security of Bitcoin, one of those things a lot of people are concerned about. You keep hearing about people with millions of dollars stranded when they've forgotten their passwords. You hope maybe Jack Dorsey can get that figured out. Mackenzie, thank you.
Thank you.
And coming up, TikTok's new data collection. Facebook will no longer protect politicians, and Elon Musk is breaking the habit. All that and more in today's Rapid Fire. But first, it is Friday, and that means it's time to look ahead to what's in store for your money next week. Here's your Friday Fast Forward.
Apple, inflation, and IPOs. That's all ahead next week. Investors and users alike are anxiously awaiting Apple's Worldwide Developers Conference on Monday. With shares lower by about 6% this year, can Cook & Company deliver? Two big IPOs are coming down the pike. Payment startup Marqeta is eyeing a $12 billion valuation and debuts on Wednesday, while workflow platform Monday.com hits the NASDAQ on Thursday. We'll get quarterly results from Stitch Fix, Chewy, and GameStop. That meme stock up 139% over the past 3 months. And the Consumer Price Index print for May will give us a read on inflation. Plus, hotel CEOs will take the virtual stage at the Goldman Sachs Travel and Leisure Conference as summer travel heats up. Colonial Pipeline CEO Joseph Blount testifies about its high-profile ransomware attack in front of the House Committee on Homeland Security. And President Biden will attend the 47th G7 Summit, which kicks off on Friday in the UK. That's your Friday Fast Forward.
Folks, the world's first fully autonomous vehicle.
Welcome back. Let's catch you up on a few stories that should be on your radar. Time for Rapid Fire. Here to break down the headlines, Deirdre Bosa, Nilay Patel, editor-in-chief of The Verge and a CNBC contributor, and Tim Seymour, CIO of Seymour Asset Management and a CNBC fast money trader. First topic, TikTok giving itself permission to collect extensive data like your face and voice prints. The new policy explains that TikTok may collect information about images and audio in users' content, something that other social networks practice. The more eyebrow-raising part deals with biometric data, stating we may collect biometric identifiers and biometric information as defined under U.S. law, such as face prints and voice prints from your user content. Where required, it says TikTok will ask for permission. Nilay, I'm old enough to remember last year when, the U.S. government was going to shut down access to TikTok and require all the, and now apparently TikTok can just collect all kinds of biometric data. What is going on?
Well, either they're already doing it and they need to cover their butts, or they want to do it and they need to cover their butts. I think fundamentally the issue here is that terms of service agreements should probably be illegal or regulated. What other contracts would any business person sign that you never get to negotiate and that can change on a whim to favor the other side whenever the other side wants it? It is ridiculous. It's going a little too far. I think this is evidence of it.
Now, Dee, while they're covering their butts, I'm wondering, can you get biometric information from a butt? Like, can you tell that it's TikTok's butt that it is covering in this situation? But, I mean, this wouldn't be...
A lot of butts on TikTok, I gotta say.
There are a lot of butts on TikTok, and they're usually dancing, I think. But, Deirdre, this wouldn't be as concerning, I guess, if we didn't know that China is really big into biometric data collection. So, I mean, where's this stuff going?
Yeah, we're not really sure what they do with it, but, my question is, does it really matter? I mean, my favorite part of this story is that the privacy policy wasn't actually of that much concern to its users, but rather that pop-up. There's a big outroar on how this is actually rolled out, and users, a lot of them don't really care about the privacy policy. They just want to get that button out of the way. And to Nilay's point, though, there's only two options, okay or privacy policy. And as we well know, Apple is doing this a different way, opt-in or opt-out, clearly decisions. But this, your only option is to go read the privacy policy or stop using the app. So I think that will change. But it is pretty funny, in my opinion, that the rollout is what caused the most attention within the TikTok community, with some TikToks going viral making fun of it all.
Yeah, I mean, people just want to get that out of the way because they want to see the dancing butts, Tim. That's what people are going to TikTok for, the butts that are getting covered but with the policy. I don't know, I guess, right? I mean, are there implications here for where social media platforms are headed in information collection?
Well, again, because I'm not looking to post videos of me strutting around like Mick Jagger or skateboarding into a tree, I don't worry about this. But I think object recognition with social media is not new. I think this is a little bizarre considering the timing of, as we've said, and set the table on TikTok's issues in terms of trust in this country, and where they just settled a $92 million class action suit in terms of where they may have violated this dynamic in Illinois. So I think most users really could care less. And I think the privacy policies are that which they expect no one to read, and largely no one will.
I think you could do very well with a TikTok, though, Tim. I mean, don't sell yourself short there.
Thank you, sir.
John, I just want to follow up on that.
Is he on?
Well, hold on, Nilay. You follow up as we talk about Facebook, because we're not done with social media, because there's been another social media policy change. Facebook's responding to its oversight board's ruling on the suspension of former President Donald Trump over the January 6th Capitol Hill insurrection. Facebook reinforcing its suspension of Trump for 2 years, effective from January 7th. His account's only going to be reinstated if conditions permit. The platform outlining heightened penalties for public figures during times of civil unrest, and said it will stop its hands-off treatment of content posted by elected officials. So, Nilay, I don't know. Mix in your take there. Trump was very serious about putting U.S. TikTok in U.S. corporate hands. I don't know how he felt about the butt covering on TikTok, but Facebook spiked on this news. It has come down a bit, but does it matter?
Yeah, I can connect these two stories. The platforms need to have clear rules. You need to understand the rules. And if you don't like the rules, you need to be able to push back on what they are. So TikTok is saying to all of its users, we're collecting this data. Your choices are okay or privacy policy. That's not a choice. That does not give the users power in that scenario. You can extend that all the way up to Trump, who got banned indefinitely. Facebook sent it to its own oversight board, and its own oversight board said, no, you need to have some rules and a schedule of penalties for this to make any sense.
Yeah.
If you want to operate with legitimacy, you need to have a system that people can understand.
D,
Facebook, to its credit, extended that system.
D, it's not lost on me that Trump banned TikTok, and some people argue that he didn't do it with clear enough rules involved, and then Facebook banned Trump, and the oversight board ruled that they didn't do it with clear enough rules involved. I mean, there's a lot of banning and not a lot of clear rules out there.
Yeah, we've come full circle, haven't we? But I mean, Facebook essentially just kicked the can down the road once again for 2 years. What's going to happen in 2 years? This is going to be just as controversial. It's before another election, and we're certainly going to hear from Trump, who knows where or on what platform, about this decision. But I do applaud Facebook for at least laying out its enforcement policy and giving us some clarity. I mean, this should have been done years and years ago. So I don't know if they deserve a pat on the back, but there is more to go on at least now, to Nilay's point.
Well, we know how long the road is that they're kicking the can down, 2 years. Bank of America Securities, meanwhile, throwing in the towel on 2 meme stocks. The firm's terminating coverage of GameStop, effective immediately, and moving to no rating on Bed Bath & Beyond. The analysts were writing that meme mania and non-fundamental factors have taken over. While it's game over for GameStop, Bank of America does see a long-term turnaround story for Bed Bath & Beyond. Both stocks making outsized gains in the past month, along with the rest of the meme names. Tim, I don't know. Analysts tend to chase stocks a little bit too often, and it seems like these meme stocks are just running too fast, and plus it's not based on fundamentals. How would you even cover these things? Do you trade them?
Well, no, I don't. And in fact, I think the question that sometimes I ask myself is real or Reddit when I'm looking at an outsized move in a stock that there may be a fundamental attachment to. Look, we can pick on analysts all we want. If anything, analysts should be standing in here and making a clearer stand on fundamentals. And so when you look at what's going on with AMC, and when you look at GameStop, yes, there's a fundamental story. There are management changes, but there's still no getting away from balance sheet dynamics or essentially secularly broken industries or parts of their business. And so while look, an analyst can talk about where a balance sheet has been repaired. AMC has done a lot to at least take care of short-term liquidity dynamics. I don't think they've done anything in the longer term. Throwing in the towel right now and just saying we can't make a call, I think is a problem, because I think, in fact, they're the ones that are supposed to be making the fundamental assessment. Analysts also do take into account liquidity dynamics and technical factors when adding in at least their entire picture, and I think that's what you have to do here.
Oh, well, Dee, we've been having this conversation on TechCheck. Some people think that traditional valuations are dead. So maybe, I mean, what are analysts supposed to do? Maybe, I don't know, finger in the, what do they do?
Maybe they need to meet a new cohort of investors where that new cohort is comfortable thinking about value in more creative ways. I'm not sure how you do that. But, John, we introduced memes on TechCheck. Why can't they introduce memes in their analyst notes? I'm half kidding here. I don't know how they do that. But I think, to Tim's point, they do serve an important purpose, and throwing in the towel, isn't necessarily good enough. And who knows, over the next few months and years, we could see the rise of more YouTube investors and analysts, a few of which I think are very good, that I follow myself.
All right. Yes. Well, I don't know about memes and analyst reports. Can PDFs have memes in them? We'll see. Finally, not GIFs, but maybe memes. Finally, Bitcoin just got dumped over Twitter. The crypto is down 4% following a tweet from none other than Tesla CEO / techno king Elon Musk. Bitcoin trading below 37,000 earlier today. Now it's a little bit above. Musk tweeting a breakup meme along with hashtag Bitcoin and a broken heart emoji. Nilay, this guy, he hooks up with cryptos like nobody's business. I mean, he was making out with Bitcoin just a few weeks ago with Tesla, and now he's hanging with the Doge. I don't know, but he changes his mind a lot too. I wouldn't be surprised if in a week or so he's back, making up with Bitcoin.
Oh yeah, absolutely. I mean, if you could change the value of any security by as much as Elon can with a tweet, why wouldn't you? I think I would ask a broader question. What is the difference for the average investor between a meme stock and some of these crypto swings? You buy them both in an app, it's super seamless, and you can make some money and you can leave. You're not in it for the long term. I think for the average investor, this stuff all looks the same.
Tim, back to you on that connection. Isn't it amazing that he can move stuff as much as he can?
Well, look, I've referred to, and I'm sure I'll get added here, as Tess Lemmings. And look, when Elon's, the power of his social media presence is about as significant as anyone out there. To the extent that at times Tesla has been a high growth company with fantastic technology, with largely a great product, but where the stock made no sense, the balance sheet was under a lot of pressure, and then ultimately, you fake it till you make it. So I think there's also many other little threads of parallel here. I think Tesla's balance sheet is incredible at this point, and we all know where the market cap is. But I think Elon Musk's role out there in terms of disclosures and in terms of where he can and cannot influence asset prices is really up to that retail investor or that institutional investor to decide. I think a lot of institutions have issues with this. I think a lot of retail folks are not as concerned.
Yeah. Well, not now. Not now, because the market's still hot in a lot of this stuff. Tim Seymour, thank you. Deirdre Bosa, Nilay Patel, thank you. And speaking of, AMC CEO Adam Aron communicating directly with investors as they send shares to the moon. But some of the company's moves this year could slow enthusiasm for the stock. That is next. The Exchange. We'll be right back.
So we're seeing NVIDIA here holding at 704.53. So NVIDIA not going to take a breather today by the looks of it. It looks like it's going to hold strong here at these levels. And we're not going to get a pullback. So who's to say where it's going to open on Monday? I was looking for a pullback. Never got it. I still have some positions here, so I'm still happy about that. But I wanted to open up more, get an opportunity to get in at a good price. Workhorse here at 1263. Short interest went up on Workhorse yesterday. So it could be cooling off just to rally up and create more momentum here. But yeah, coming back. And then earlier, Fabian, you gave me if Black Bear is a buy or a sell. I mean, if you're in, I mean, I would take some profits at these levels. It pulled back. And if you're not in, I would buy a small piece, but I wouldn't go in heavy. It can very easily come back down to around $10, $11 before we go higher. But it looks like it's cooling off for now.
Hours yesterday, but that's not even the wildest number when it comes to AMC share offerings. Seema Modi, has that story. Seema?
John, AMC has been capitalizing on the retail investor enthusiasm by completing a number of stock sales this week, as you just mentioned, selling $230 million worth of stock to Mudrick Capital, then selling another 11 million shares of common stock to the market, amounting to $580 million. Before this week, AMC raised $1.6 billion from January to May, money it can use to pay down its debt, which sits at around $5 billion. But these stock sales, they come at a cost, further diluting existing shareholders. In fact, 80% of its total stock has been issued over the last 12 months. And CEO Adam Aron says more sales could be in the cards. The company is now asking shareholders to approve a proposal that would allow it to issue more shares, but vowing not to use them this year.
If the shareholders approve this new 25 million share tranche, theoretically, we could use them quickly in 2022, or we could use them spread out over a long period of time. We would only use them if there are really good opportunities for AMC.
That was Aaron in conversation with YouTube personality Trey Collins, who is followed by thousands of retail meme traders. Unlike GameStop, Aaron has really tried to embrace the younger retail audience who has helped the theater chain stay afloat. And of course, John, the question is just for how long?
I mean, the way this used to work, the way this works, is that when you're buying stock, you're paying for future earnings per share, right? And when the denominator gets bigger, the shares, the number of shares, the answer gets smaller, right? That's generally how this works. So that's the dilution piece that, I don't know, a lot of the people who are crazy about AMC on Twitter, they don't seem to be focused on.
Yeah, and that's why, to your prior conversation you were just having, the 2,300% rise in shares of AMC, no analyst that covers fundamentals can really justify the stock appreciation we've seen in AMC. Given the metrics that you just pointed out, even short interest has been slowly rising. Today it's at around 21%. 2 days ago it was at 19%. Time is of the essence, right, for the CEO to claim this meme status and take advantage of it, which he clearly has, as one would do, given the distress AMC is under to raise money.
Who knows what next week will bring, Seema, thank you.
Yeah.
And Bank of America is trying to get ahead of the next meme mania. For their list of the next Reddit stocks to watch, head to cnbc.com/pro, and that does it for the exchange. Coming up on Power Lunch, a look at how inflation and the supply chain crunch is impacting the canning industry with the CEO of Ball Corporation. That's after this quick break.
Hey, good call on that ETHE. I didn't know Grayscale made a Ethereum ticker symbol. That's pretty cool. I knew about GBTC. So let's see ET. How long has that one been around? Let's see here. Oh, it's fairly new from March. Okay, I don't remember seeing this. Thanks for the tip there. ETHE. Ethereum here. CoinShares physical Ethereum. Awesome. And here goes AMC. Broke this resistance of $51 and now selling off. Let's see where we go here. BlackBerry here, going back to its trading range of support and resistance between 1350 and 1424. 1450. This is bearish, continues to break down and not be able to break this downtrend.
Welcome to Power Lunch. I'm Morgan Brennan along with Tyler Matheson. 559,000 jobs added in May. Unemployment rate down to 5.8%. Will that change anyone's mind about the economy, inflation, the Fed's next move? And despite those job gains, businesses saying they still have a lot of openings and cannot find workers to fill them. At the same time, many companies are dealing with higher commodity costs, supply chain disruptions. We're going to talk to a CEO that is in the middle of all of that. Plus, Bill Ackman finally makes his move, and it is a big one. The biggest in SPAC history. Will it be music to investors' ears? Power Lunch begins right now. Welcome to Power Lunch. Markets are rising across the board today. The S&P 500 nearing a record high, but the rate-sensitive NASDAQ having the best day of the major averages. Mike Santoli joins us now with more on the moves we've seen in the markets. Mike.
Yeah, Morgan, really a calm, steady levitation throughout the day. We popped to the open, and now the S&P 500, if you look at it now, kind of making a gradual approach to the former all-time highs. May 7th was the date of the closing high. It's above, let's see, about 42.32 was the closing high. So really just a whisper from that level. Is this the top end of the range, or is it now kind of a big breakout after 7 weeks of going mostly sideways? That's a big question. The NASDAQ in a little bit of a different situation, had kind of two peaks earlier this year. It's been the laggard group. You see it there trying to reapproach around that 14,000 mark. Today, the outperformer, as you mentioned, yields down, helping the growth trade kind of get back in gear, at least for a day. Things like Apple and Amazon look like they were pretty wounded. They're actually participating on the upside today, but 14,000 is still kind of key over there. There used to be a thing that said no such thing as a triple top in markets. We're not quite there yet. I don't even know if that's true anymore necessarily. But the flip side of the yield story is the banks index. That obviously has been very strong, but has flattened out over the last few weeks, as have Treasury yields. And you see right here, also down about 0.5%, although up off the lows for the banks earlier today. So kind of a holding pattern with a positive bias is the way I'd put it, Morgan.
Yeah, holding pattern. But I mean, when you broaden it out to year to date, I mean, the S&P 500 is up 12.5%. So perhaps not surprising, given the fact that it is all eyes that continue to be on the Fed right now and the data we get, including that jobs report today.
Without a doubt. I mean, it's the market has held a 12% year-to-date gain since it got there in mid-April. There's really nothing to apologize for that for in terms of if you're bullish. I think it just created a little bit of frustration because the leadership profile of this market has just been in a little bit of flux for the last several weeks.
Mike Santoli down at the New York Stock Exchange, where I'll be joining you starting next week.
All right.
Thanks for kicking off
remember
the
your
hour.
standing coffee order. We're all set, Morgan. Yeah.
I'm looking forward to that. All right. Have a great weekend. All right. We're going to go to the bond market now. Rick Santelli tracking the action at the GME. Rick.
Hi, Morgan. You know, anybody who's ever traded understands that sometimes when you find relationships, you really stick with them. And when I look at the NASDAQ up so big and I look at yields down so much, I think today there's a bit of the tail wagging the dog in terms of some of the buyers moving into that equity space. Look at an intraday of 5s, 10s, 30s. Look what happens. There's basically three big moves. In front of the 8:30 employment data, yields are moving down. Once they hit, up, up, and away, then it's like you pull the rug out from underneath them. And we all know 559,000 normally is a great number. And what that is code for is it wasn't a good number this time, but a lot of the other components were solid, like wages. If you look at a chart that starts in the third week in April, you know, at the low yields at 155, we'd be closing at a 6-week low. Right now at 156, we're down 7 on the day, down 3 on the week. And let's look at Boons. They close at a 1-month low yield. And finally, foreign exchange, right on the number at 8:30 Eastern. Pretty much every major currency rallied against the greenback. There's an intraday chart. You can see what happened to the dollar index, which is now flirting to see if it can salvage a close higher on the week after giving back most of yesterday's strong gains. Morgan, back to you, and have a good weekend.
You too, Rick. Thank you. Well, meme stocks taking over the markets once again this week. We've been talking about it a lot. AMC has doubled, second week in a row, even as the company has been selling more shares. But while a handful of stocks are trading out of whack, you could say, with the traditional valuations or their fundamentals, there are thousands of others that are still trading on those fundamentals. If you're not interested in following the Reddit crowd, where should you look for safer, steadier returns? That is the question we're going to put to our panel. which includes Jeff Mills, CIO of Bryn Mawr Trust, and Ron Insana. He's a CNBC senior analyst and commentator, as well as a senior advisor to Schroders North America. Good afternoon to both of you, gentlemen. Ron, I'll kick off this question, or I'll kick off this conversation with you and put that very question to you, especially since I know you have some strong opinions about what we've seen in terms of the so-called meme stock mania.
Yeah, I heard some commentary from guests on CNBC this morning that made me scream at the TV because, you know, the notion that the stock market is so fully democratized that individuals have the same advantages as professional traders is absolute bunk. And the notion that this won't end badly once monetary policy changes is also ridiculous. I can't tell you how many times over 37 years I've heard this time is different. I can't tell you how many times I've heard about democratization, which is great in the long run for investors, bringing costs down, giving them greater access to financial market products and the like, and allowing them to plan more efficiently and more cost efficiently for future financial needs. But the stuff that's being talked about today is just pure nonsense. It's going to end badly. We know this. It's happened before. 1999, happened in the 60s with the mutual fund mania, happened in the 70s with the Nifty 50, happened in 1929. Isaac Newton lost money in the South Sea bubble in 1720. These fads, these manias, these panics all occur with a cyclical regularity, and this is just another one.
Isaac Newton, I mean, you're really... You've come prepared in terms of a look back in history. Jeff, I want to get...
I can go back farther if you want.
I think that's okay. Jeff, I want to get your thoughts on this, especially since, at least until recently, and I say this as a millennial, I mean, millennials came of age as adults coming out of going through the last financial crisis and recession and what happened with the housing bubble bust as well. And many did not invest into the market, did not buy homes, basically stayed asset light. It helped exacerbate what we saw over the next decade in terms of income inequality trends as well. So to see a new generation getting involved in trading, in investing, there's got to be pros there too, right?
Yeah, I mean, I think so. I mean, for somebody still in their 30s, I kind of have a little bit of a boomer take on this. I do think it's great that people are getting interested in the stock market. I just don't know that they're getting interested in the right way, and I think that's the issue, because to Ron's point, you can't tell me that fundamentals don't matter anymore, because I think they do. The fact is they never mattered in the near term, and I think now they're just not mattering for a different reason, and that's the key. So maybe we've seen this permanent shift in what is causing this near-term volatility, especially in specific stocks, but I don't think much more has changed other than that. And the last thing I'll say, just relative to the topic more broadly, so Josh Brown, a guy I have massive respect for, published an op-ed in Fortune, and he basically said, how do you convince these newly minted investors who bought one stock and it went up 800% in a couple of weeks that diversification matters? And I think the answer is that stock goes down by 50% or more, or they get a margin call, because I don't think a lot of these people have seen the ugly side of all this. So I think when that happens, the dynamics may start to change.
All right, so Jeff, where would you be putting your money to work right now?
So this is going to seem very boring relative to AMC going up 100% in a day and things of that nature, but REITs have been an area of the market we've been tracking for some time now, and they're up 20% this year, you know, relatively unloved. I think maybe they're a little bit overbought in the near term, but I do think that's a near-term phenomenon. They've been expanding new high lists, broad participation. I think it speaks to the durability of the trend that we're seeing. 100% of the REIT index is above the 50-day moving average, above the 200-day moving average. It just broke out to a new high, and I think this is an area that benefits from a better economy. And I do think the exposures within REITs might surprise some people. Right now, over 40% of the REIT index is actually specialty REITs. So think about communication towers and data centers and storage facilities. These aren't necessarily the kind of companies you think of when you think of REITs, but now that is the case, and I think there's value here as the economy continues to improve.
Ron, I want to get your thoughts along these lines, too, especially if someone is tuning in. They are interested in investing in the market. Maybe they're new to the concept of investing in the market, and the meme mania might not be for them. When fundamentals come into focus right now, what looks attractive to you? Where would you be focusing? What kind of data points would you be pulling in terms of an assessment?
Well, you know, you're looking at the economy, Morgan, rebound nicely. And listen, today's number, while short of expectations, is still a solid print. with respect to the number of jobs created. You know, the bond markets handled it well. The Fed's probably right about a certain aspect of inflation being transitory, but we still like the recovery trade. You know, small over large, value over growth, and to a certain extent, particularly in Europe, you know, international either equal to or slightly better than domestic when it comes to opportunities and cyclicals and financials. So that stuff all works. I mean, this other stuff, which again, as was just said, you know, if something goes up 100% in a day, if you go back to late 1990s, there was a company called the Globe.com that came public and went up 600% in its first day. There are people this morning who are suggesting that we've never seen anything like this before, or that individuals didn't have access to, you know, free trading or new technologies that level the playing field. We went through this in the late 1990s, and we went through it in the 60s and other periods of time. So I would stick to my knitting and invest as if I were an investor. Day trading is hard. I've seen professionals of great skill blow up in a matter of a single session. And I'll tell you, once monetary policy changes, and something that Warren Buffett always says, you know, and you find out who's swimming naked when the tide goes out, once the Fed changes policy, the tide's going to go out.
All right. We're going to leave the conversation there. Gentlemen, have a great weekend. Thanks for joining us. Jeff Mills and Ron Sana. Coming up, Biogen is leading the S&P 500 today. Why the company has a lot riding on an FDA decision next week. And Ball Corporation, you may know it as the bottles and cans company. It's also in aerospace. That stock is down 12% in a month. We're going to talk to the company's CEO about the challenges facing Ball and many other companies right now. Stay with us. Welcome back to Power Lunch. We are tracking moves in Biogen today. As Morgan mentioned before the break, that stock up around 6%, close to 6%, ahead of a key FDA decision on Monday. That's going to decide the fate of its Alzheimer's drug. If approved, it would be the first treatment to address underlying causes of the disease. Analysts, though, are split on whether it will get the green light. So from a stock perspective, Morgan,
Biogen's been a strong performer in 2021, up close to 18% compared to the biotech ETF IBB, which is roughly flat on the year, or up about 1% on the year. Morgan, I'll send it back to you.
Rahel Solomon, thank you. Now to one company that's in the middle of a lot of key issues that are facing the economy right now: inflation, manufacturing, finding workers. Ball Corporation provides metal packaging for beverages, foods, and household products. It also makes materials found in aerospace equipment. Shares are down about 12% so far this year. But John Hayes is the president and CEO of Ball Corporation. He joins us now. John, welcome to the show.
Yeah, thanks, Morgan. Good to be with you.
All right, so let's talk about what you are seeing right now as we do see the economy come back to life, not only here in the U.S., but in other parts of the world that you operate as well. What does that mean for manufacturing right now, especially given the fact that we do see aluminum prices up 22% on the year so far?
Yeah, for our business, we haven't missed a beat. We were deemed an essential business ever since the get-go, and so we've been going nonstop. I think North America, in terms of quote recovery, is definitely further ahead of Europe and South America, probably in that order. But our business, we can't keep up with demand. We're investing 3 to 4x what we typically do just to keep up with the demand. Now, it may be unique to us because we make metal beverage containers, and as the stay-at-home provisions happened a year ago, we saw such a big boom in our business, and it continues largely because of this whole sustainability angle.
That's interesting to hear. As you see restaurants, event spaces, et cetera, open up, you expect that demand for those types of containers to continue?
They definitely do. Here's a great example. You think about the phenomenon about spiked seltzers. You go into an on-premise pub right now and look at the number of people holding a beverage can of spiked seltzer of some sort. I think you're seeing it direct to retailer channels open up in ways that didn't exist pre-COVID. And so, I think in today's world, people often look to Nielsen and IRI data as a good barometer of what's happening with our business, but that's increasingly becoming a smaller part. It's still an important part. Don't get me wrong, the grocery channel, et cetera, but there's many other channels that have opened up, and we're trying to create an opportunity around that.
So you're investing heavily, and I know you're building more manufacturing facilities here in the U.S., for example, as well. But when you do see raw material prices increasing, I mentioned the jump we've seen in aluminum so far this year. What does that mean in terms of not only costs to manufacture, but how much you can realize higher prices in your end markets?
Well, first and foremost, a couple of things about aluminum. Number one, aluminum is about at the same price it was 3 years ago. So yes, it's up over the last 12 months. But I think it has, and there is some volatility in that. I think the tariffs that were enacted a few years ago are not a help. We're trying to stimulate onshore manufacture of aluminum, and those get in the way. But I think overall, you're right. We are seeing inflation. We have no choice. We don't have a cost structure that allows us to absorb that. So we've been pushing it through the supply chain. And I do think in inflation, we haven't lived with inflation for approximately 30 years in any meaningful way right now. So there's a lot of relearning, I think, that needs to happen as how to deal with in an inflationary environment.
I realize that the Biden administration is looking to have talks around some of those tariffs where the EU is concerned. But the fact that we still have duties in place in general, is that part of the reason you're investing in the U.S. for more manufacturing?
Not necessarily, because at the end of the day, we are a local manufacturer. Because if we ship our product more than a few hundred miles, as I joke, you might as well tack dollar bills onto the pallets because you're chewing up all your profit in terms of freight. And so it really has to do with the demand. And I think this whole sustainability, it's interesting. Go back to 2018, and that's really when you saw tangible evidence of this whole sustainability movement about anti-plastic. And it accelerated in 19. We were excited about 2020, and then COVID hit. And as I said, because of stay-home measures, this pantry stuffing, and as we sit here today, yes, the month of April and May, there was a little bit more challenging year-over-year comps because of this pantry stuffing, but we still see relative to 19 very strong growth. And in my 23 years at Ball Corporation, I've never seen our end markets as strong as they are today.
Aerospace, it's a part of your business. It's smaller perhaps than the beverage packaging and some of the other end markets that you focus on. But what are you seeing in terms of increasing or recovering aerospace demand, especially given the fact that I know you also do a lot in the defense and specifically space sector as well?
Yeah, exactly. And we don't do much in the commercial. We don't do anything in the commercial airline. So it really is more about defense. And in terms of intelligence, surveillance, and reconnaissance. And I think you just look at the geopolitical issues that are going on in our world, and there will continuously be a greater need for good intelligence, surveillance, and reconnaissance. So it fits right into the sweet spot of what we do so well.
Yeah, and certainly we know that the Biden administration is looking to increase spending both for NASA and for the space piece of the Defense Department, too. Finally, given the broader conversation we're having, do you have enough workers? Can you find people?
Yeah, well, we're quite fortunate because, we are, to give you a sense, our median salary at Ball Corporation is about $130,000, and we pay full benefits and health care and pensions. And so we don't really necessarily operate at the lower end of the spectrum. And so we haven't had the challenges that many of our customers, for example, seem to have. But there is definitely shortage of particular skills. And I think as a society, we got to get our heads around workforce training and workforce development, because we can no longer leave it to someone else to do that. So we're spending a lot of time, effort, and energy at Ball Corporation doing just that.
Yeah, and of course, we know factory floors and the technology that's being adopted is changing and has been changing dramatically for a number of years. Something we'd love to talk to you more about in the future. In the meantime, John Hayes, thanks for being with us today.
Great. Thank you.
Still ahead, we have a new report from the NFIB showing a record number of small businesses that cannot find jobs or fill jobs. Is the country's labor crisis worsening? We're going to speak to former New Orleans Mayor Mark Morial. That's coming up next. Plus, also ahead on the show, Bill Ackman's mystery mega SPAC finally revealed. SPAC, or should we say Spark? We're going to have those details when Power Lunch returns.
This CNBC program is sponsored by TD Ameritrade, where smart investors get smarter.
Millions are saying yes to Allegra, the #1 allergist-recommended non-drowsy brand. Allegra works 2 times faster than Claritin, and unlike Zyrtec, it's non-drowsy. Say yes to the fastest non-drowsy 24-hour relief. Allegra.
It's hard to hope, hard to cope with crisis, so we get to work. We men, fighting for every person in every neighborhood, we, the coming of the common good. So dare to care, to be hope-sighted. We're never divided. When we live to give, we always live united.
At C3AI, we're solving previous
Welcome back to Power Lunch. I'm Rahel Solomon, and here is your CNBC COVID update at this hour. CDC Director Rochelle Walensky says today that she is deeply concerned by an increase in the number of young people hospitalized for COVID-19, and she's saddened by how many of them require intensive care and mechanical ventilation, She's calling on parents now to help get their children 12 and over vaccinated and also encourage them to take precautions until they do. France is seeing some progress as it comes out of its third nationwide lockdown. The number of intensive care patients has dropped to a low for the year. But in the United Kingdom, the government there reporting 6,200 new cases, the highest number since late March. That is still just a small fraction of the surge in cases in January. That's when the daily count was consistently above 50,000. And how about this? A new study by British researchers indicates that a previous COVID infection provided significant, not absolute, protection for at least 10 months. They looked at more than 2,000 long-term care facility residents and staff, and those who had a previous infection were 85% less likely to test positive again compared to those who never had COVID. You are now up to date. Morgan, I'll send it back to you.
All right, Rahel Solomon, thank you. It is time for Power Movers. The gig economy stocks surging today. Ooh, that music. DoorDash leading the group. That name up more than 7% in a month. Square betting big on Bitcoin. CEO Jack Dorsey tweeting that Square is considering a hardware wallet for Bitcoin. It would allow holders and buyers of crypto to hold their funds personally rather than in an exchange. Workhorse, meantime, sinking more than 10%. Cowen downgrading the stock, saying its recent move was a meme stock spike. We did see a big move in that name this week. For more on that call, though, go to cnbc.com/pro. All right, so ahead on Power Lunch, we're taking a deep dive into jobs in America. First, we'll speak to former New Orleans Mayor Mark Morial about this morning's report. Job creation accelerating, but still below lofty expectations. So how do we get back on track and fill those existing job openings? Plus, improving the existing workforce. We're going to speak to the CEO of a startup that helps companies educate and develop their employee base. We still have a big show straight ahead, so don't go anywhere. Welcome back. With just 90 minutes left for the trading week, we're just going to get a quick check on markets. We're at session highs for the major averages right now. The Dow is up 159 points, or about 0.5%. The Nasdaq is the big outperformer, with the Nasdaq 100 up 1.8%. Tech stocks really leading the charge today, as we've seen Treasury yields slip lower as well. The S&P right now, 4228 is your level there. It's up 0.8% right now. Every sector is in the green, save financials, which is right around the flat line, with, again, tech leading the charge. I would also just note that week to date, we are on pace again for some gains. Now, the oil market is closing for the day as well. And for that, we turn to Pippa Stevens for the results.
Hey, Morgan. Well, oil ending the week on a high note here, turning in its 8th positive session in the last 10. WTI futures currently up about 1 1/10% at $69.58. Brent, meanwhile, at $71.85 for a gain of about 0.75%. It's been a big week for oil, and both contracts have jumped to multi-year highs. Brent settled above 70 for the first time in 2 years, and WTI almost got there today, hitting a session high of $69.76. Crude's now up about 40% for the year, and Bank of America is among those calling for even more upside. The firm saying today oil can climb to $100 as the supply and demand imbalance skews to a tighter market. Still a pretty far way to go before we get to $100 a barrel, Morgan, but certainly a trade to watch. I'll send it back to you.
Absolutely. It's been a big week for oil and for energy stocks as well on the heels of that. Pippa, thank you. Today's jobs report showing the economy added 559,000 jobs in May. That is a big number. It's evidence the economy is getting back on track, but maybe not big enough, as the economy is still facing a worker shortage, at least for now. Today, the NFIB reporting that a record number of small businesses can't fill job openings. It's the 4th straight month of those records. So how do we incentivize people to get back into the labor force? Well, Mark Morial is the former mayor of New Orleans. He is the president and CEO of the National Urban League, and Mayor Morial joins us now. Great to have you back.
Hey, Morgan. Thanks for having me.
Want to get your thoughts on the jobs report that we got this morning. In many ways, at least from a market standpoint, it's sort of seen as a Goldilocks report. The fact that we are adding jobs, but maybe not at the rapid clip that many economists, at least, were expecting to see. What is your takeaway?
When you have 600,000 jobs that were created last month, and almost 2 million since just the beginning of this year, this is the beginning of what I think is a strong economic recovery. Why? You've had the American Rescue Plan. You've had stimulus checks that have been put in the hands of many Americans. Number 3, you've got rising vaccination rates and the easing of COVID restrictions. All of these things, when added up, point to continued strong job growth throughout the year. So I look at almost 600,000 jobs as a positive report, especially since we've been in a downward decline for such a long time. You can't just flip a switch and the economy comes back overnight. You can't just flip a switch and workers come scurrying back. Many still have concerns about contracting COVID. Vaccination rates are up, but not where they need to be. There are challenges with child care, and there are workers who, in some instances, may have found some stay-at-home jobs or some opportunities that may be better than going back to jobs from which they've been laid off. So there's a combination of factors at play here. But I think what this report shows is a recovery that is gaining steam and picking up momentum.
Yeah, Mayor Morial, the other piece of the puzzle that we've certainly heard, at least from some employers, is that perhaps some workers are staying on the sidelines right now, given the enhanced unemployment benefits. We've seen more than 24 states actually move to start to sunset some of those benefits earlier than the fall as well. Is that the right move? Is that going to get more people into the workforce more quickly?
Morgan, I think it's a cynical view of the American people, that somehow people want to game the system. Let's look at it in this way. If you look at the number of people who are now looking for work, if you look at the uptick in the economy, people do want to get back to work, but there are child care considerations. There's still fear of contracting COVID. There are other factors before people go back. But look, while there are concerns that are being expressed, the improvement in the economy in the hospitality and leisure sector was quite strong last month. So I prefer to have confidence in the American people. The enhanced unemployment benefits will burn off in 90 days. I think it creates an opportunity for people to be able to transition their lives from a great period of difficulty, COVID and the downturn in the economy. Many people were just unceremoniously laid off because of what happened with COVID. So this enhanced unemployment creates, I think, a reasonable transition for people to reorganize their lives, for those that have children to get their children situated appropriately, for people to get vaccinated, for businesses to place the proper conditions and protocols in place so that not only do we get the economy back, we ensure that people are healthy and safe.
Yeah, and certainly we could talk about that 5.8% unemployment rate, which ticked down month over month. But when you start to dig down into some of the data among different demographics, it looks very different. So unemployment for Black Americans, it continues to lag. It's 9% versus that 5.8%. Broader number. And I realize that that's ticking down too, but the divergence we're seeing, what can be done to alleviate or change that?
I've expressed here on CNBC for years the great concern about this disparity. One of the things I think that is driving it is the battering that Black small businesses took during this recession. This is why we need, I think, continued, or rather an increase in the minimum wage. This is why we need more investments in workforce development and job training. This is why more businesses need to commit to hiring diverse communities, Black and brown people, into jobs. There's a tremendous amount of work to do, and this, if you will, ratio of Black to white unemployment is systemic. It's part of the structural inequities in the American economy that we always talk about. So there's a tremendous amount of work indeed to be done. So let's watch this disparity over the next 3 to 4 months, over the next 6 months, and see if it is going to narrow. That's what we want. We want the narrowing of the disparity and certainly overall unemployment rate to come down. One thing we can do is place great emphasis on small businesses owned by Black people, owned by Latinx people, owned in communities of color, owned in urban communities, because in many cases they are strong employers, and the battering they took during the recession, I think, helps to drive this unemployment rate, not in the right direction, but in the wrong direction.
Yeah, and before we wrap this up, I just wanted to dig into that a little bit more, Mayor Morial, because I've heard that from others on this network as well, that small businesses within the Black community were hit especially hard. Why was that?
Well, they were thinly capitalized. You know, Morgan, this is the old access to capital. If you have a reserve and you may face a crisis, you can get through that. If your business is thinly capitalized but operational, 1 month in missed rent, 1 month and you're unable to pay for your inventory and you're out of business. This goes to the disparities in access to capital, whether it's bank loans. Look at the disparity in the bank loan denial rates. Look at the equity markets. And the fact is that, yes, there are new funds and new efforts in this area, but access to that risk capital has been elusive for African-American owned businesses. So it goes to the thin capitalization. You can absorb a shock much greater if your capital base is a lot stronger, if you have reserves indeed in place. And that has dramatically impacted many Black small businesses. We think we may have lost a third to a half. National Urban League's got new initiatives, one focused on Black restaurants that we will be formally announcing very soon, to provide equity grants for these businesses to help them reopen, get back on their feet, and grow. There are things we can do, and there's a lot we can do, and there's a lot that we need to do, because sustaining, stimulating, and growing these businesses is good for the overall economy.
Yeah, and we'll continue to have this conversation, and we look forward to more details on that initiative as well.
Morgan.
Mayor Mark Morial, thanks for joining us today.
Appreciate you.
Up next, energy having a big week and an even bigger year, up 45% so far year to date. So what are the best bets in the sector? Our traders are going to discuss that next. And cranking up the SPAC market to 11. Bill Ackman confirming he's behind the biggest blank check deal yet. We're going to dig into that as well. Power Lunch. We'll be right back.
If your money is
And welcome back to Power Lunch. Stocks right now near session highs. The S&P, you can see up about 37 points. The Nasdaq closer to 200 and the Dow 175. Leading the chip stocks, the SMH up more than 2% today and also on pace for its longest weekly win streak in 2 months. So within the ETF, NVIDIA is the best performer. That's tracking for a record close and also up more than 20% in a month. Broadcom also moving higher after beating estimates on earnings and revenue. That was yesterday. Company also issuing Morgan better than expected outlook as the adoption of 5G technology continues to grow. You can see NVIDIA is up right now about 3.5%. Broadcom closer to 2.2%. Morgan.
All right, Rahel. We're like going back and forth here this hour. I'm into
It's
it.
the Morgan and Rahel show.
Yeah. All right. Well, we're going to turn now to Seema Modi, another fabulous CNBC lady for Trading Nation. Seema.
Love to be here. Morgan, energy once again the standout sector this week. A confluence of factors from OPEC easing cuts to more Americans hitting the road, sending oil prices higher. The sector already vastly outperforming every other sector in the S&P 500 on the month and the year. Is all the positivity around energy priced in to this sector and these stocks? Let's talk to the Trading Nation team. Craig Johnson of Piper Sandler, Daniel Shea of Simpler Trading. And Daniel, you actually think there's more room to run in energy stocks. What are your top 2 picks?
You know, I do, Seema. Looking at XLE, yes, it has come so far. And I wouldn't really advocate coming in and buying shares right here, but this is a sector that I really like for options trading, especially because we still have a little bit more upside. So for me, when I'm looking at the charts of both CVX and XOM, both of these names, I think they have a little bit more upside, and we can trade them to the long side going into July. With CVX in particular, I have a target of $115. And with XOM, I'm looking at about 67. So I think, bullish call debit spreads, put credit spreads, bullish butterflies, any of those would work to trade these names into the summertime to the upside.
Got it. Craig, last year energy was a no-touch sector, and now it's up 44% just this year. Any concerns here around valuation?
Seema, no concerns around the valuation side. And I would just wrap this all up and simply say it's going to take a lot of old energy to create all the new energy that the world and the people desire at this point in time. And when you start looking through this, all the factors with oil getting to multi-year new highs at this point in time, the relative strength inside of energy rising, the fact that investors have been avoiding energy because of ESG concerns, and the fact that the sector is now up 45% year to date and nobody owns it. And you come back and you look at the chart we brought in today, you can very clearly see a multi-year double bottom has been formed. You've got a higher low that's been made, and it looks like to us we're just starting to break out. I look at these charts, Seema, and I see another 14.5% upside from here on the XLE, and I think you got more room to run, and that would be one we should be buying.
Wow, interesting. Craig and Danielle, thanks for sharing your views today on Trading Nation. Head to our website, follow us on Twitter for more market analysis. Morgan, back to you.
Seema Modi, thank you. After the break, while some companies are focused on creating jobs, others are working to improve their current workforce. Enter Guild. This startup helps educate employees and just raised $150 million. The CEO is going to join us next. Plus, make sure to tune into On the Edge tonight with Scott Wapner for the latest edition this week. That's going to kick off live at 6 p.m. Eastern. On this program for weeks, months, a labor shortage in this country. That makes finding and keeping qualified employees a war for talent. Guild Education offers upskilling services for companies. Approximately 88 million American jobs may be at risk due to automation. So adding those extra skills helps workers stay ahead of the machines. And Guild says those workers are twice as likely to be promoted at their companies than their peers who do not enroll. Rachel Carlson is CEO and co-founder at Guild Education. The company just got a new round of funding, nearly quadrupling its valuation to $3.75 billion. And Guild Education is also number 49 on this year's CNBC Disruptor list. Rachel Carlson, welcome to the show.
Thanks for having me.
All right, so let's start specifically with what Guild does. I mean, we just talked about it a little bit and the fact that you help Fortune 500 companies offer these debt-free degrees to employees. How are you able to do that?
Yeah, so we work with large companies to educate and upskill their workforce. We do it because it helps the worker. Obviously, we've got 88 million Americans who need upskilling and reskilling today. It also helps the company because it increases their ability to attract and retain great employees, and it also gives them a way to advance those employees from what are today's jobs into what future work jobs they're going to need 5 to 10 years from now.
So what are some examples of companies that you're working with, and let's quantify what this benefit has meant for those companies' workforces?
Yeah, sure. So we work with companies like Waste Management, Chipotle, Walmart, Disney, Discover Financial. Think of the frontline workforce of America, the middle American worker. And we've seen really tremendous outcomes for the companies. So you've got a company like Chipotle, which has found that when one of their employees enrolls in our upskilling programs, and this can be anything from college prep to a certificate in people management, digital marketing, you name it, that those employees have a 7.5x higher likelihood of getting promoted on the job. We also find that it dramatically increases retention, obviously, and then that the companies that offer a benefit like this are seeing a 25% increase in high quality job applicants who say, I want to work at a company that's going to pay for me to go back to school.
So you just closed the Series E round of funding. How quickly are you growing?
We are growing quite quickly. Yeah, it's a really exciting time. We're hiring like crazy and growing our product and engineering team nearly 2x, which is really energizing for us and exciting for the mission that we've set out to work on.
So you're in this interesting position to be having these conversations with these companies, to be seeing what the needs are on the employee side as well. Given the fact that it is Jobs Friday, we do continue to have these conversations around labor force participation, skills mismatches, and just the general state of the labor market. What do you see from your vantage point?
Yeah, I'm thrilled to hear you say skills mismatch, because I believe that's the crux of it. And we've been sort of ignoring that in America amidst the bull market for the last 10 years. And finally, COVID has accelerated enough things that we're talking about it. I think the core mismatch is that you've got workers who are debating whether or not to go into a low skill or no skill job. And they're saying, if I'm going to do that, I want to do it at a company that's going to arm me with skills to have a chance at mobility or upskilling or a path to promotion. And so what we're seeing is that the companies who are offering some sort of upskilling career pathway, you name it, whether that's within their company, like a Chipotle or Walmart, who promote, you know, the vast majority of their employees are at the top come from the front line, or companies like Disney and Lowe's who say, we want to help our employees become, you know, electricians and become nurses. Those are the companies that are winning the war for talent right now.
Is there a certain degree or a certain class or type of skill set that is the most commonly sought out right now?
So from the labor market perspective, we're seeing a ton of demand both from employees and employers for roles like cybersecurity, digital analytics, data, as well as allied healthcare.
Which really speaks to the increasing role that tech and the digitization of everything is playing in this economy. Rachel Carlson, thanks for joining us today.
Thanks for having me.
Well, Guild Education ranked number 49 on this year's CNBC Disruptor 50 list. Our weekly newsletter offers a closer look at Disruptor 50 companies like Guild. You can sign up by visiting cnbc.com/disruptor. Disruptor's newsletter. Okay, so up next, music to the SPAC market's ears. Bill Ackman's Pershing Square confirming talks to buy 10% of Universal Music at $4 billion. Those details when Power Lunch returns with all the major averages higher. Finally reveals what he's buying with his SPAC, and it's the biggest SPAC deal ever, although there's a lot of financial engineering happening here. It's pretty complicated, right, Leslie Picker?
Yeah, financial engineering is a good way to put it, Morgan. Ackman's SPAC Pershing Square Tontine out with a press release earlier, quote, confirming discussions to acquire a 10% stake in Universal Music Group. The deal values UMG at $42 billion on an enterprise value basis. That's about 17% higher than the level a Tencent-led consortium boosted its minority stake at just about 6 months ago. Now, this transaction, as you mentioned, as you alluded to, is structured as a stock purchase, not a merger. That means Pershing Square Tontine is not actually taking UMG public, as is common with SPACs. It's going public in Amsterdam anyway later this year. Now, for investors in Tontine, each share will be broken down into 3 publicly traded securities. Now, the first, of course, $14.75 per share goes toward UMG, but then the SPAC still had money left over, so each of Tontine's shares will also encompass $5.25 in cash that could be used to fund another acquisition one day in the future. And then each shareholder will also get, this is a new term here, guys, SPARs, Special Purpose Acquisition Rights. This gives Tontine shareholders the right to fork over additional capital for a future deal if they want to, based on that acquisition. Now, the complexity of it all, the target being Universal Music Group, was met with mixed emotions, to say the least, on Reddit, although the prevailing voice of the market indicates dissatisfaction with shares of PSTH declining today. Now, important to note and really emphasize that this deal is not yet final. It's possible that the definitive agreement may look entirely different or may not even happen at all, Morgan.
I mean, there's so much we could dig into here, Leslie. Is this a situation where you might see, especially given the fact that there is so much capital out there chasing such a finite number of companies in these types of SPAC, or I guess now SPAR or SPARC mergers or deals, I should say? You know, can we see more situations like this, or is this really an Ackman-style one-off?
So this is definitely an Ackman-style invention here. One of the things that separates Pershing Square Tontine apart from most of the SPACs that are out there is sheer size. It's the largest SPAC that has ever been raised. It raised about $5 billion, and it also had money it could incorporate through the Pershing Square funds as well. So just the sheer size of it really limited the types of companies that it could go after, because SPACs purchase a minority stake to begin with. So when you're thinking about a 10% stake in a company, you've got about $5 billion in cash to deploy. Well, there aren't that many $50 billion companies out there that are wanting to go public through this method, that are even able to do this type of transaction. So that in and of itself kind of made it unique, required a little bit of creativity to actually do something that would satisfy its SPAC agreement.
Thank you. S&P 500 right now, session highs up 0.9%, 42.29. On pace to finish the week higher again. That's going to do it for Power Lunch. Have a great weekend. Closing bell starts now.
Welcome to the Closing Bell. I'm Wilfred Frost, along with Sarah Eisen. Stocks higher across the board to finish out this shortened trading week. The major averages all pacing for weekly gains. Let's have a look at what is driving the action this Friday afternoon. The May jobs report showing solid gains, but falling short of estimates. What some are calling a Goldilocks number, not too hot to push up the Fed's timeline, but not too cold to spark concern about the recovery. Meme stocks remain in focus after a wild week of trading. After all of the ups and downs, AMC still on pace to finish the week around 100% higher from where it started. And tech is bouncing back, with DocuSign leading the NASDAQ 100 following strong earnings. Tesla gaining back some ground as well today. 59 minutes left to go in the trading week, and we are on record close watch for the Dow and the S&P. S&P just a couple of points away, Sarah.
Dow up 170, going strong. Coming up on today's show, the CEO of one company that's been caught up in the meme trade. We'll talk to the head of gaming platform Skills about retail bets on his stock and news of the company's first acquisition. Plus, hot stocks getting a pop this week after Amazon updated its drug testing policy. We'll ask the CEO of Aurora Cannabis whether this is the start of a broader corporate acceptance of cannabis. Let's focus in on the big stories that we are watching. 1 hour left of trading. Mike Santoli tracking all the market action. And joining us to talk about today's jobs report is Michael Ferroli from JP Morgan. But Michael Santoli, start us off with this rally toward records.
Yeah, just really kind of levitating here since the open, Sarah. Obviously, as you mentioned, the jobs number was enough to reassure people across the board based on whether you were worried about overheating or a shortfall in growth. But also, I think just when that big known catalyst gets out of the way, the market trend can reassert itself. We've been talking about how we kind of flatlined for 7 weeks, but have been sturdy below the surface. You still have had generally cyclical leadership, more stocks up than down. And so here we are, 42.32 is the closing high. We'll see if we kind of nudge up against. That's still not decisive, as you can imagine, because you're still going to be able to look at that and say, well, until proven otherwise, maybe we're in a trading range. NASDAQ 100, the outperformer today, but is in a little bit of a different position. If you look at how it's still below the prior peak from the spring, and then also right there with that February peak. Now, that mid-February high we always point to, that was when you had peak excitement for hyper-growth stocks, the SPACs, the IPOs, really risk appetites in a lot of the growthy areas did peak then. We came off of that. So we'll see if this can make some progress against this looking like it might be a continued chart with some malaise pulling it down. But right now, as you see, up 1.8%. Things like Apple and Amazon finally participating as well. On the small cap side of things, you have this funny interplay between the Russell 2000 small cap index, which we look at all the time, and the S&P 600. They move together, but when the Russell 2000 is outperforming, obviously there's more stocks in them, but there's also more
unprofitable companies in them and some of the more heavily weighted, sort of very speculative stuff like Plug Power and things like that. And you saw that raced up, was outperforming into February. And you see more recently, the S&P small cap has pulled ahead by a little bit over the last year. And so it shows you that the market still wants risk in the way of small cap, but more kind of the profit cycle, at least at the moment, as opposed to just basically spreading their bets wide on everything that moves fast and has high leverage to not just the economy, but the speculative parts of the market, guys.
Yeah, Mike, fascinating stuff. By the way, S&P's up 36 points a day. Needs to be up 39.40 to have a record close. Stick around. We want to hit this AMC stuff. A number of new developments on that AMC saga. As we mentioned, the stock is on pace to finish the week higher by around 100%. Last night, CEO Adam Aron spoke directly to retail traders on the Trades YouTube channel and talked about another plan to issue millions of new shares.
If you arm us with a tool to go find value-creating opportunities for AMC shareholders, we can do that. If we're not armed with this tool, then you're tying our hands behind our back, and you'll make it just that much harder for us to land some of these attractive opportunities that benefit us all.
The latest push to issue stock comes after AMC already sold 20 million shares in two offerings this week, 11.5 million yesterday, worth $587 million, and 8.5 million shares to Mudrick Capital, which the firm quickly flipped. David Faber reporting today that Mudrick no longer owns any debt or equity in AMC. The meme stock trade has represented a challenge for traditional Wall Street analysts, how to reconcile the share price of some of these names with the underlying assets. Wedbush upping its price target on AMC by $1 to $7.50, well below its current price, saying they don't recommend buying shares right now based on volatility. And Bank of America removed its rating on another meme stock, Bed Bath & Beyond, saying shares are no longer trading on fundamentals. Bank of America also terminated coverage of GameStop, saying non-fundamental factors are driving those shares. As for AMC, Trey Collins from Trey's Trades told CNBC earlier the stock's fundamental value is somewhere in the $20 to $25 range, but there's money to be made on momentum. I thought it was a really interesting interview earlier on Squawk Box, Mike, and perhaps the key takeaway for me was towards the end, even though he didn't bite on the question as to whether this is gambling versus investing, he did say he was willing to lose all of his initial investment when he does something like AMC, and that's his mindset, which shows that it's not traditional long-only investment where retirees, for example, will hope not only to keep all of their initial investment, but slowly but surely grind it higher.
Right. It's not about margin of safety. It's not about necessarily knitting what you're paying to some kind of concrete estimate of fair value. It's basically buying into a story, yes, momentum, yes, emotion, but also what the market will bear at any given moment. I did think that represented, at least from his perspective, we don't know if this is broadly applicable to everybody who's been speculating in the stock and the options of AMC, but eyes are open, all right? I mean, he doesn't really think, he actually said the money's not real. He assumes it's not real until he would sell it and actually have cash, and therefore, if it goes away, he's fine. I doubt everybody has that posture. I think a lot of stories are being kind of sprouting up about what really is behind this move, and people are trying to retrofit a rationale to what the stock has done. Well, you really can't do that. Even the company's not trying to do that. They're just sort of maximizing how much cash they can take in from this cohort of investors in the meantime, which it's rescued the company at this point, and they're going to try to keep going until, I guess, the market says no.
Well, the other interesting feature about this particular example, and this time versus GameStop back in January, Mike, has been the CEO really welcoming the meme traders, accepting them, I would say attracting them, offering them free popcorn, engaging with them. Yeah. He went on the YouTube channel instead of coming on Closing Bell, where he usually goes to talk to the fan base. And you wonder if that's a brilliant move or if this ends in tears, if it turns out to be playing with fire.
Well, I think, first of all, it comes out of necessity to a large degree. If you dial back several months, the position that AMC was in, its debt was trading at massive discounts to face value. The markets were essentially saying, we're not really sure this company can stay out of bankruptcy, which means the CEO's job was basically kind of to cater to the creditors. The creditors were in line to maybe own this company. Big institutional investors not necessarily willing to take on huge new equity issuance themselves. So there was a ready market here because the stock seemed to get into this world and start to breathe this oxygen of the meme traders. And so that's why he kind of needs to cater to them. And yes, without a doubt, also willing to be kind of the face of this company and be very overt about it and not be squeamish about just going directly to social media to raise equity.
Mike, stay there. We're going to turn now to the economy. We've got to talk jobs. U.S. job creation accelerating in May, but still coming in below expectations. Non-farm payrolls increasing by 559,000. The expectation was around 671,000. However, the unemployment rate did come in better than expected, falling to 5.8. Estimates were around 5.9%. Let's bring in Michael Ferroli, chief U.S. economist now at J.P. Morgan. Was this a good report, Michael, or not, given where we are at this stage of recovery?
It wasn't a great report, but certainly better than last month. I think if we go back a few months, many forecasters were expecting that in the spring and summer months we would be adding about 1 million jobs a month. So against those expectations, this is clearly a disappointment, but I think expectations have gotten reset after that April number. And I would say this is, it's not what you'd want, but it is progress. As you mentioned, the unemployment rate came down. We did create over 500,000 jobs. We would like to see that pace pick up, but there were some other good things. We saw wages pick up, which is certainly good for employees, at least. And you did have a big move down in people who are permanently unemployed. So that was also another favorable feature in what was an otherwise kind of a so-so report, I think.
Yeah, I mean, still more than 7 million jobs in the hole since the COVID pandemic. You mentioned the pickup in wages, up 0.5%, better than expected. Where does that go in the inflation debate about whether this rise in prices now trickling into wages could be more lasting and could prompt a move from the Fed?
Well, I think it certainly muddies the waters a little bit insofar as the transitory narrative that the Fed has been applying to consumer price inflation arguably now also applies to wage inflation, because some of the factors that may be pushing up wages, or at least limiting labor supply, are probably also transitory in nature. So those are the expanded unemployment benefits, which expire in September, child care responsibilities, which may normalize in the fall, and fears among some job seekers about ongoing fears about the pandemic. All three of those factors should ease over time, but it does add some, some more noise to what is otherwise a pretty noisy picture of the economy and a noisy picture of the inflation outlook. So I think it's yet another reason why we're going to have to kind of reserve judgment for a few months on where both price and wage inflation are ultimately heading.
So do you think, Michael, that the Fed will be changing its expectations at all, or does it change the timeline of when you think in their comments and interviews or in Fed meetings that they will meaningfully change people's expectations of when tapering will begin?
Right. So I think it's important to remember that after that April number, which was only half as strong as the May number, we had several Fed officials, senior Fed officials, come out and talking about tapering at upcoming meetings. So I think having this number in hand doesn't really change that. So I would still expect at the June meeting, which is in less than 2 weeks' time, that they will begin the conversation. That said, given that we are, as you mentioned, still over 7 million jobs in the hole, that conversation is just getting started, and I don't think it will lead to a hasty move toward tapering. But they got to start somewhere, and given the comments we had before today's number, I would think that's consistent with that conversation starting in June.
Michael Ferroli, thanks for joining us. Good to see you. After the break, shares of gaming platform Skills are up 20% this week as the company announced an acquisition and got caught up in the meme frenzy. We'll speak with CEO Andrew Paradise in an exclusive interview next. You're watching Closing Bell on CNBC.
Driving the Action is brought to you by USAA. Join us in honoring our nation's fallen heroes.
Who is USAA made for? It's made for this guy, a veteran who honorably served.
and it's made for her. She's serving now. We made it for all branches and all ranks, whether they served one tour or made a career of it. We also made USAA for military spouses and their kids. USAA is easy to work with and can save you money on auto, home, and renter's insurance.
First acquisition this week, the company is buying Archie for $150 million in cash and stock to create the first integrated esports advertising platform. Shares of the company up 20% on the week and up 100% on the year, but off 50% from its highs after short sellers questioned the company's revenue reporting and its NFL partnership. Joining us now in an exclusive interview, Skillz CEO Andrew Paradise. Andrew, good to see you. Thanks so much for joining us.
Thank you for having me.
Talk us through the rationale for this Archie acquisition.
Sure. So Archie is a DSP or demand-side platform or an ad network. By acquiring Archie, Skillz is integrating its deep first-party data with their proven bidding technology. And so you have the best of machine learning algorithms for DSPs combined with a unique data set. And that means that we can provide better impressions to consumers all the way through their end consumption of video games.
Will you require them to work exclusively for you now, or indeed the other way around? Will other clients, gaming clients, want to use different ad sales platforms in future?
No, Archie will operate as its own independent business unit inside of Skillz. We'll continue to service the existing customer base and grow it. But I think by using our first-party data about game development, we can inform the bidding engine and the overall technology to create a better value proposition to the existing customers as well as new customers for the business unit.
So, Andrew, how does it fit in with the overall strategy of what you're trying to do, which is get more people paying for bigger gaming hits on your platform?
Sure. So to remind everyone, Skillz is a company focused on building the future of competition on the internet. We see this as building the gamification of things, or GOT. And when we think about the investment in our business and where we're growing, we're really investing in 4 different areas: in content, in distribution, in international expansion, and in brand integration. By making the Archie acquisition, we're going to be able to accelerate our ability to help all of our developer partners distribute their content better than ever, actually.
Andrew, we have some debate about this over the last couple of days, in fact, as it related to Twitter. But how do you see the balance, short-term and long-term, between monetizing your products via advertising versus subscription, and offering perhaps alternatives to those that want to face zero commercials but are happy to pay?
So we've talked a few times about our interest in building out brand-sponsored competition. If you look at Skill's P&L for 2020, we generated $1.6 billion in GMV or gross. We spent $1.3 billion on prize pools, and we think that cost can be optimized down to increase the overall take rate for the platform. And we've been able to show continuous improvement and proof points against that as we've been growing the business. The integration of Archie into Skills will actually help us accelerate our work with the brands out there that are interested in engaging with the consumer where they are, which is really on mobile.
Andrew, your stock has been a roller coaster ride, and when I was digging into this name before the show, there's still so much skepticism out there about what you're trying to do, whether it's on the reopening and the fact that people are leaving and they're not going to be gaming as much, to questions about the CFO leaving so soon after becoming a public company, to how many hits you can actually have. Is there a disconnect? Do you think that there's something that Wall Street is not understanding about your stock, which is making it such a battleground?
Yeah, I think there's been a bit of a SPAC craze. We were early on in partnering with a SPAC to go public as a kind of a non-traditional route. And I think we've been caught up in that to some extent. If you actually look at the performance of our stock since IPO, we're up over 100% as a stock in the past year since we announced our intention to go public. So for all of our holders, it's actually been a really good outcome. It has been a bit of a roller coaster, admittedly, particularly earlier in Q1 when we announced our deal with NFL. We can't control sentiment around the stock. What I can tell you is that we've been really pleased with the response of the retail and research analyst community. We have some of the smartest institutional investors in the world partnered into our business. And we're a long-term oriented company. We're growing over what we've repeatedly talked about as a 100-year vision for the future of competition. So, if you zoom out to 10 years or 100 years, I think the blips over this past quarter will truly be that, just blips.
Andrew, thank you for coming on and talking about it. It's always good to talk to you.
Thank you for having me.
From Skills.
Yeah, good to see you guys.
Up next, you too. Facebook making a major policy change surrounding posts from politicians. We'll tell you what it is and what it means for the ban of former President Donald Trump. And as we head to break, check out some of today's top search tickers on CNBC.com. AMC tops the list for the day and for the week. It's down 5.4%. 10-year yields straight up there again, although yields are lower today, 156 on the back of a little bit weaker jobs report. Tesla, Ford, and BlackBerry, kind of a mix of the meme stocks and what's been working lately. Ford at a 6-year high. We'll be right back.
Wealth is your first big investment. Worth is a partner to help share the load. Wealth is saving a little extra. Worth is knowing it's never too late to start, or too early. Wealth helps you retire. Worth is knowing why. Principal, for all it's worth.
Give me the detonators.
No! You first!
You are in no position to negotiate.
Really? Is this what we're doing?
The Bitcoin on here will never be yours.
Nothing can stop me!
So that's how you got into crypto?
Yeah, no. I invested with Grayscale. Bitcoin exposure straight from my brokerage account.
Okay. What happened to the guy on the roof?
Investing in Bitcoin begins with GBTC.
As we travel life's roads, we all create our own version of family. For me and my little nugget, I knew the ID4 would be the SUV for us. And check this. Hello, ID. Set temperature to 72 degrees.
All right.
That feels good, doesn't it? Who rescued who? What'd you expect? Scan the QR code below so you and your family can personalize your own virtual VW ID4. Because if you're going to change the world, the change starts with you.
At CDW, we get that even as we return to the office, collaboration is still evolving. It's time to make collaboration better, seamless, secure, with Cisco WebEx, orchestrated by CDW. Get AI-enabled automatic transcription and translation, and easily share documents, notes, and even whiteboards from anywhere. So even if you're not in the same room, you can still say, "Go team." For Evolve collaboration, trust Cisco and IT orchestration by CDW. People who get it.
I think it is much more likely that this deal ends in tears. Unless Amazon is committing to leaving MGM alone, I think you're going to see a massive culture clash.
Owning and securing the supply chain for semiconductors is not just an economic issue, but also a national security priority.
You don't win the war on crime. You fight it every day. And it's going to be the same thing with cybersecurity.
The employers' recruiting is white hot. And then when we shift our view over to the job seekers, we see reluctance.
Welcome back. Facebook reversing its policy surrounding politicians and harmful speech on the platform, and outlining how former President Trump's, how long it will end up lasting. Eamon Javers with the latest. Eamon.
Sarah, it will end up lasting 2 years. Here's the word from Facebook. They said they're going to continue that ban for 2 years, but at that point, they will reconsider. That is, in 2 years from January 7th, they'll assess, going to experts, whether or not the risk to public safety from Trump's comments has receded. They say that there will be a strict set of rapidly escalating sanctions that will be triggered if President Trump is allowed back on the platform and commits further violations in the future. You remember that it was the Facebook Oversight Board that stepped in. It's sort of this quasi-independent body. They say it's independent. It was set up by Facebook and all the members appointed by Facebook. They said that Facebook wasn't exactly right in its decision to suspend Trump indefinitely. They said that Facebook really needs to tell him how long he's suspended for and under what terms he can come back. So that this is Facebook responding to that Oversight Board decision earlier in the year. The former president had a reaction to that, and here's what he said in a statement he posted a short time ago. He said they shouldn't be allowed to get away with this censoring and silencing, and ultimately we will win. Our country can't take this abuse anymore. So there is the reaction from the former guy, as the current guy would call him, Sarah.
Eamon, it's well worth reading the full blog post from Nick Clegg, and also his recent article on this topic. There's a few issues I have with it. One line in particular that says, "We know today's decision will be criticized by many people on opposing sides of the political divide," end quote. But it shouldn't be a political issue. They claim not to be a publisher in other areas, but they're kind of making themselves a publisher in this instance. So I think that bringing the politics to this themselves, rather than being able to blame those who have issue with it in either direction as being the ones that are taking a political view, I take issue with. And the other line of his blog that stands out to me is this, quote, "Of course, this penalty only applies to our services. Mr. Trump is and will remain free to express himself publicly via other means," end quote. And that completely ignores the fact that Facebook and other social media platforms are now the most powerful communication tools in the world. It'd be kind of like holding a TV debate in the 60s or 70s and muting the microphone of one of the candidates and saying, well, that's our decision, it's our TV channel. And I think that we're in a totally different playing field today. And so I get that they're putting this huge blog post out and saying they're being transparent, but I just think the blog post is sort of ignoring some key truths or facts, which is taking away the gloss of claiming they're being transparent.
Well, sure. Awfully good of Facebook to acknowledge that the world exists outside of Facebook, though, right? I mean, because so often it seems like these tech giants don't know that. But look, you're right. The debate goes to this question of, is Facebook a publisher or not? Are they doing journalism or not, right? A television news network would see news value in what the former president or current president was saying, even if it was incendiary, and would cover it. But Facebook is sort of saying here, you know, we're not a news organization. We may be a publishing organization, and we're going to exercise some discretion about what appears on our platform. But basically, we're a platform that wants to be about people getting in touch with their old high school friends who they haven't seen in 20 years or 10 years in your case. And that's, you know, sort of the line that they're taking, right? Is we want to be about sort of friendly interaction. We don't want to be about this toxic stuff. And that's a private company making a private business decision, and that also is protected under the First Amendment.
18 years since high school for me, alas. Getting old, Eamon. I mean, to your point
18.
there, there's a lot of unanswered facts. And in defense, of course, of Nick Clegg's blog post and Facebook, this also is an important thing to note, that there is lack of legislation. He writes, in the absence of frameworks agreed upon by democratically accountable lawmakers, the board's model of independent, thoughtful deliberation is a strong one that ensures important decisions are made. The Oversight Board is not a replacement for regulation, and we continue to call for thoughtful regulation in this space. And, fair point on that. Clear rules and regulation from lawmakers.
Well, this whole thing about the Facebook Oversight Board is so strange, right? It's sort of Facebook pretending that there is a Supreme Court for Facebook things and, appointing all the people and financing it. That's not true independence, right? Independence would be an independent regulator that was run by the government. But do you want that in this country? Do you want the government regulating who can speak and how much they can speak and where they can speak? That seems like a thorny path to go down. So Facebook has sort of set up this sort of betwixt and between thing that sort of pretends to be a Supreme Court that's not really, in the absence of the actual Supreme Court of the actual United States getting involved in deciding all these issues.
Eamon Javers, great stuff. Thanks so much for that. After the break, we'll be talking to Art Cashin about all of the crazy market action this week on the meme front and the fact that we're close to a record close on the S&P.
All right. So we're out here, Power Hour, 30 minutes to go. I'm now up a whopping $400 for the day. So from earlier, I was up about 3,600. So, just normal market activity, day-to-day activity. You get some rallies, you get a end of the day pullback and a setup for the next week. So, overall, I locked in some profits and some of my positions in the morning. So I'm glad that worked out pretty well. And now we're setting up for next week. AMC looked like it was going lower. Nice trade, Armando. I saw that you cashed out. Very nice trade there, selling the 100 calls. That's a easy one since volatility is very high right now. It's Friday expiration on a very volatile stock like AMC. That was well played. And now we're seeing AMC, going up. Volume's extremely low. It's a highly volatile stock at the moment, and volume's very low. So, if you're able to squeeze out some dollars out of selling some options, that's fantastic. That's great. So let's see what's going on here. Workhorse, just pretty much staying at 13. GTT, going below this gap, almost gonna fill the gap, but holding at $3 level. So we'll see if this is setting up for next week. Sundial here, tanking here at 111 now. So Sundial erasing some of those gains, going back down. Let's see some BlackBerry. BlackBerry still following this trend here, can go past the 10-day moving average here, 10-period moving average on the 5-minute chart. So things just cooling off. It looks like it's setting up for next week. It's going to be interesting to see which ones run and which ones stay behind. Bed Bath & Beyond here at 31, cooling off, going sideways. Virgin Galactic at 31.20. Nokia at 550. Now Nokia is a big company, it has a huge market cap, so it's really difficult to really make this one a mover. Clover Health at $9 a share, 9.04. And Clover Health is one that's been getting squeezed from time to time. Terrible news. It squeezes, it makes about a $2 to $3 move and then cools off. Squeezes here, made about like a, $4 or $5 move, cools off. Another about another like $4 to $5 move, and it's possibly gonna cool off here. So absolutely, maybe take a swing here on Clover Health if I see it go around 650. Maybe buy some options on there. So we'll see what happens next week if it stabilizes here, and take a look at that.
Steve, time now for a CNBC News update with Rahel Solomon.
Rahel. Hi, Sarah. Here's what's happening at this hour. Chicago's police department announcing major changes to try to improve relations with the Neighborhood State Patrol. Officers are being appointed to be liaisons with the city's LGBTQ, homeless, immigrant, and religious communities. Police leaders say that the moves are intended to reduce crime.
Police department this morning is taking a big swing at community policing, community engagement, and building trust. Arguably, this will be the most significant commitment of effort, resources, and leadership to building trust in Chicago PD's history.
Olympic champion sprinter Brianna McNeil has been banned for 5 years for an anti-doping violation. She won gold for the U.S. in the 100-meter hurdles at the 2016 Games. McNeil is appealing the ban. Her case will be heard before the Tokyo Olympics. And in Germany, a leading cardinal and good friend of Pope Francis is offering to resign. The cardinal citing his guilt over remaining silent over the Catholic Church's mishandling of sexual abuse cases by clergy. The Pope says, meantime, that he's still deciding whether to actually accept the resignation letter. You're now up to date. Wolf, I'll send it back to you.
Rahel, thank you. Coming up, meme mania hitting the markets this week. Shares of AMC up more than 100%. BlackBerry and Workhorse also significantly higher. We'll break down the moves with the man who's seen just about everything in the market. UBS Director of Floor Operations, Art Cashing. We're looking forward to seeing him and hearing his view on all this craziness in this past week. We'll be right back.
So all in all, pretty great week. This is the first week I've seen in months for all of you who are trading high growth stocks. It's the first week in months that I've seen green significantly. So I'm happy for this week. A great week. Potentially, let's see if it's not a fake out. We'll see next week if we continue. We're seeing different names getting some nice pop here. So I'm very optimistic about money rotating back into high growth and SPACs, and could be a nice run. I was expecting this run I was very optimistic and bullish about a month and a half ago, and I kind of just took a step back and just cooled off because I was over trading, being very aggressive. From time to time I would contain myself, but yeah, it wasn't really performing. Market wasn't really performing, so I took a step back and just held some core positions. And now I started shooting away. I have some decent positions with some good shares, some options, just to complete and balance the portfolio. And I'm lucky I saw this pop and follow through throughout the whole week. We saw a follow through. So to next week, we'll see what happens. We saw a fake run up maybe about a month ago. I don't know if you guys remember that. And things cooled off. And then this week again, we're getting another run up. Could it be the beginning of a turn? Possibly. It's difficult to say at this time. The good thing is we are seeing the VIX cooling off here. VIX is at 1628. If we can get the overall market run up and the SPACs, that would be awesome. We already seen the market run up once before and left SPACs behind. So right here, we're almost at all-time highs here on the SPY. Looks like we're going to break your all-time high. So we'll see if this holds going into next week. We're definitely in power hour. AMC just held around 50. BlackBerry and some of the other names cooled off. Nothing too exciting today. It could be the beginning of it just taking a breather, consolidating before they go higher. The only one thing I can say for sure is that money's coming back into the markets. When crypto took most of the shine, and now we're here, money coming back into the markets. GTT selling off here at 298. It looks like the big move already happened, and it's cooling off now.
Minutes left in trades. What has been a crazy week on Wall Street. Let's bring in Art Cashing, Director of Floor Operations at UBS. Art, great to see you. Thanks so much for joining us.
I'm honored to be here. Thank you.
When you look at this kind of reignition of the meme stock mania, is it something that you look at and you say, oh, I've seen this many, many times before over my career, or something that you say, this time it really is different?
No, I unfortunately think it is something I've seen time and time again. It's the equivalent, the Wall Street equivalent of a chain letter. You know, the chat room gets everybody excited, put $5 in an envelope, mail it out, and in a week you'll get an envelope with $1,000 in it. And that's pretty much what's happening. These chat rooms are nothing new. I've seen, there was a stock called iOmega, and they had iOmega options, and they ran in much the same wild and illiquid fashion that we're seeing AMC move. I've been doing this well over 60 years, and forgive me if I don't have all the details correct between the alcohol and the Alzheimer's. I'm getting a little slow, but over 60 years ago, there was a company, I believe, called something like Southeastern Aviation, and it was doing nothing, and everybody was getting involved in a different kind of technology at the time. So they changed their name from Southeastern Aviation to Aero Geo Astro, and the stock doubled overnight. So this is nothing new. You build up some excitement around you, look like you're part of a trend, and people climb in. Unfortunately, it doesn't usually end well.
Well, you're not seeming slow at all, Art, and it's so good to have you on. When will markets revert? What do you look out for, therefore, as a catalyst as to when people go back to basing share prices on fundamentals, if that is indeed what we'll pivot back towards?
Well, it will eventually. The timing is always very difficult, Wilfred. The first thing you notice is when the stock begins to trade actively, and on the chart it turns parabolic. In other words, it goes up in a straight line, and that's usually an early warning sign that we're getting near at least a temporary end of things. Now, remember, we went with these chat room stocks separately from short squeezes to now promotional ideas coming out of the chat rooms. So that will eventually wear out. I mean, I am stunned that the company was not only able to sell millions of additional shares without the stock cracking, but to imply that they're thinking about registering to sell even more. And somewhere the apple is going to fall on Newton's head here, and things will change. So you can go through 1, 2, even 3 of these kinds of cycles, and then reality does come home. You know, people. I'm interested. I'm, you know, obviously an avid fan of your channel, and I'm hearing college professors saying, "Oh no, this may be a brand new type of evaluating securities." Listen, every time they tell you this time it's different, it's not different, okay? Human nature is the same.
Yeah, you've seen it before, Art. It's so good to see you. It's Sarah. Do you think it says something more broadly about the liquidity environment we're in? And I wonder if the clock is ticking there with the Fed starting to talk about tapering and the potential for higher interest rates as inflation starts to heat up.
Sarah, it's an excellent point, and with no disrespect, I will tell you, a lot of these bubbles get help and aid from the Fed. The dot-com craziness in the year 2000, that I would suggest to you was in fact the Y2K curse. Now, you two folks are much too young to recall, but as we were approaching the year 2000, everybody was terrified. The computers will all go dead. No computer would function properly after the year 2000. Well, the Fed was so worried that, you know, you were going to lose your bank account and whatever, that, gee, Sarah's going to worry she's going to lose her bank account, so she's going to take all her money out. She's going to hoard it and keep it at home, is what the Fed thought. And the Fed started pumping money into the system. And we got very, very liquid. And what did the people do with the money? They went out and bought new computers to be prepared for the changeover, because they'd have one that worked. So eventually, as the turn of this century came up, the Fed called the banks and said, "How bad is the hoarding?" did Sarah take all her money out? And they said, no, no, she's still got plenty of money here. And what money she's taken out, she's using it to buy computers, and now she's using it to buy computer stocks. So I would tell you that the dot-com craziness was simply the curse of Y2K, aided and abetted by the Fed. And I've seen it time and time again over 6 decades.
And that is why it's so valuable to get your take, Art Cashin. Thank you very much. It's good to talk to you. I probably was buying a computer in the year 2000. Always a pleasure. Have a great weekend.
You were probably asking your parents' permission, but yeah, it's okay.
Probably. We have got just about 16 or so minutes before the close. Straight ahead, Musk tweets and Bitcoin tumbles. We'll dive into that story and what people are saying about it when we take you to the world's largest cryptocurrency conference. It's happening in Miami. We are live there next in the Market Zone. With 14 minutes left in the trading day, we are now in the closing bell market zone. Commercial-free coverage of all the action going into the close. CNBC senior markets commentator Mike Santoli here to break down these crucial moments of the trading day. And today we've got Delano Saporu from New Street Advisors back as well. Welcome back to you. Let's kick it off with the broader market. S&P 500 within striking distance of a record close. The Dow and the S&P higher for the second week in a row. The Nasdaq on track for a 3-week win streak, and the Nasdaq 100 at a 1-month high, powered by the likes of Apple, and Microsoft. Mike, you hear the word Goldilocks being thrown around off a jobs number like this, and I guess what they mean by that is it's good enough to show the economic recovery is continuing and progressing, but not good enough to move the Fed from its patient stance on tapering and interest rates. Is that just a recipe to buy stocks and bonds?
Well, it was in the late 90s when Alan Greenspan pretty much cited that as the not too hot, not too cold, just right. Although back then he was talking about how productivity growth was actually dampening the inflationary forces in the economy. Right now, it's much more, I think, you had traders leaning a little bit in the direction of wondering if it was going to be a hot catch-up type jobs number after the shortfall last month, after we got a really good ADP number. And then when we didn't get it, basically nothing to disagree too much with in the fundamentals of the number, right? It does show, I mean, 500,000 jobs in a month is a decent showing. Relative to 650 as forecast, maybe not that great, but you still, as you say, it's not going to inflame the overheating taper debate more than it was otherwise. Also, just in the last month, May 7th, a month ago, Monday, was the peak for the S&P 500. The cyclical stocks have outperformed since then. Most stocks are up since then. So there's been some firming under the surface of this range as well.
Delano, do you welcome this slight pullback in yields today, which I guess came off the back of that jobs number?
100% will. It's really a good news for growth investors, and if your allocation is heavier on the growth side, this is a good indication, and the market saw it as an opportunity to buy, especially in the high growth names. And a couple of those factors you mentioned, there was no signaling from the Fed of changing the strategy. They're focused on the jobs mandate, and with that number coming in slightly soft, it was an opportunity for investors to buy with yields going down. So another opportunity for investors looking at the growth side of this thing is there are companies that are showing still strong prints, right? If you believe in that work from everywhere strategy, especially with these tech names, you looked at DocuSign had a huge jump based on their earnings. They had an impressive top line growth. This is just an opportunity for investors to say, hey, we believe in the strategy going forward for a lot of these companies. It's not just going to be, a pandemic, throes of the pandemic trade. There are some companies that have longevity past that, and that pull forward for the revenue is something that could continue.
A wild week for AMC. Shares are trading at the moment close to the flat line. Today, a source telling David Faber that investment firm Mudrick Capital no longer owns any debt or equity in the stock. AMC announced earlier this week that it had sold 8.5 million shares to the firm. It also sold 11.5 million shares in an offering yesterday. CEO Adam Aron appeared on YouTube Live last night on Trades, calling shareholders to support the issuance of more stock.
No question, this does not fit into the traditional valuation box. And I give Adam credit. This morning, he even said that in his own statement. However, it's a new world, which I don't pretend to understand. And there are different factors. And myself, on my own investment side, I've missed a lot of the trends because of my older ways of thinking about these things.
Obviously, that was the wrong soundbite. Mr. Gelfond speaking yesterday, but giving Mr. Aron some credit for the actions he's taking. Mike, I said essentially flat today for AMC. I mean, it's down 5% now, but 5% is not a big move for it. And frankly, to see it moving less than 10% in either direction is quite impressive given the moves it's seen. And you kind of feel like it from here needs to be either rallying further aggressively or pulling back aggressively.
And it very well might do either one of those things. Very difficult to handicap. There was some talk just mechanically coming into a Friday with had this tremendous amount of buildup of exposure in the weekly expiring options today, various price points along the spectrum for AMC, that it might suppress volatility a little bit, because that really is the tail that has wagged the dog in the very short term, is this racing higher of options and this sort of piling in certain strikes. So anyway, that's one aspect of it, but really it's been very difficult to have an edge one way or the other. There was this report out there that some Wall Street banks are kind of limiting hedge funds' ability to go further short some of these. And really, people are just wary of the volatility, and they want to stay out of the way if they're not directly trading it.
Delano, any sense of the institutional buyers in this stock, the hedge funds that are just chasing these retail traders and making a lot of money with it? I mean, it can't just be retail traders driving this up.
Yes, Sarah. I'm not sure on the institutional side. I will say from the clients that I deal with, there are a lot of clients that, formerly had no interest in even, checking accounts or kind of the stock market themselves. But they really wanted to get invested in or kind of inquire about some of these meme stock names. And I think what that tells me is, this is more, based a lot on momentum. I think the original concepts are still around, which was the original concepts from the original entrants and the people that got in at lower prices. They were looking at something that they felt was undervalued. And I actually want to double back with the great interview that you guys had with Mr. Cashin. This is actually an interesting area where I think there's something going on where there are more intelligent investors in this situation. There's people that understand the risks. There are people that fully understand that they may lose money. And a lot of the investors that lost money on the GameStop trade in January are probably the same people that are coming in to this opportunity here in AMC. So I think it's a different aspect where we're seeing investors that are more intuitive and okay with the risk of this situation.
Bitcoin tumbling today after yet another tweet from Elon Musk, this time suggesting he's over the cryptocurrency. Musk tweeting a meme, of course, of a couple breaking up over the male partner quoting Linkin Park songs, along with the hashtag Bitcoin and a broken heart emoji. His latest tweet comes as thousands of investors meet in Miami for a cryptocurrency conference today. Twitter and Square CEO Jack Dorsey among those in attendance.
Considering building a non-custodial hardware wallet, and the thing we want to do is make it completely in the open. So from all of our software to all of our hardware design will be open source. It'll be on GitHub. We don't want to compete with the hardware wallets out there. We just want to take it to the next level and get to 100 more million people who have non-custodial solutions. And we're likely to do it sometime very soon.
Let's bring in CNBC digital tech reporter Mackenzie Sigalos for more color on the Bitcoin conference in Miami. Mackenzie, you're there with all the believers and the diehards. What can you tell us?
Yes.
What have you learned?
So 50,000 people have descended on Miami. And keep in mind, only 12,000 of them have tickets. So it just speaks to the fact that people want to be here. There's so many side events happening. I flew in yesterday and spent 8 hours last night going from event to event, NFT gallery opening to gatherings all about BitClout, which is the first decentralized social network. Now, what's going on today is an event that's focused purely on Bitcoin. And so it's not necessarily a cryptocurrency event. The people here are Bitcoin maxies or Bitcoin maximalists. And what that means is that they really believe that Bitcoin and not necessarily other cryptocurrencies are the future of finance. So I haven't really run into any Dogecoin fans yet since arriving.
Mike, the thing I was going to just bring up on the back of this is the decline we're seeing today. Of course, that's linked to a tweet from Elon Musk. But again, just brings back the debate as to how lasting this asset's value is as a store of value if it's moved by little one-off tweets like this.
Yeah, I mean, you can actually draw a circle around. So a tweet from Elon Musk on Twitter, founded by Jack Dorsey, who's now the obvious kind of huge Pied Piper of Bitcoin and crypto in general. So clearly this is just kind of, influencers, kind of locking horns a little bit, or at least just sort of testing their relative influence. I think that I would step back from it and say, look, Bitcoin cracked hard. It was cut in half. This chart needs time to kind of rehabilitate. It's not surprising it's going to be choppy and very subject to a lot of these emotional moves in the short term. What's fascinating is there was a story about all this gathering down in Miami and both bullish cases and bearish cases about it. One is it's going to really stoke a lot of excitement. The other one was, oh, the whales are going to be down there and they're not going to be actually buying more. And so it's kind of a fascinating psychological experiment.
Mackenzie, any animosity there toward Elon Musk for the latest leg lower in Bitcoin?
Yes, I mean, he's very present, even though he's not physically here. And so two of the main stage events, Michael Saylor of MicroStrategy, of course, an early mover when it came to adding Bitcoin to a company's balance sheet when they moved into that space last year. Both he and Jack Dorsey seem to kind of refer to Elon Musk's comments a few weeks ago where Elon Musk brought up Bitcoin's environmental impact. Now, Michael Saylor said that Bitcoin, by a long shot, was the most energy efficient asset in the history of the planet. Meanwhile, Jack Dorsey pointed to the fact that Bitcoin incentivizes renewables, which in effect is good for the environment. So again, both seem to be direct responses to Elon Musk's comments a few weeks back.
Mackenzie, thank you. Have fun down there in Miami. Meantime, hedge fund billionaire Bill Ackman's SPAC deal is nearing a deal with Universal Music Group Leslie Picker has all the details of the non-SPAC deal, Leslie.
Yeah, non-deal part of this SPAC. Ackman's SPAC, Pershing Square Tontine, out with a press release today, quote, confirming discussions to acquire a 10% stake in Universal Music Group. Now, the deal values UMG at $42 billion, about 17% higher than the level a Tencent-led consortium boosted its minority stake by 6 months ago. Now, this transaction is actually structured as a stock purchase, not a merger. That means Pershing Square Tontine is not taking UMG public. It's listing in Amsterdam anyway later this year. The complexity of it all, the target being Universal Music Group, was met with mixed emotions on Reddit, although the prevailing voice of the market indicates dissatisfaction, with shares of PSTH declining today, although up from its lows. Now, important to note that this deal is not yet final, and it's actually possible that the definitive agreement may look entirely different than what was laid out today, or may not happen at all, guys.
Pretty interesting and pretty complex. Leslie, thank you. Leslie Picker. You're at the 2-minute mark. 2 minutes to go in the trading day for the week as well. Mike Santoli, what are you seeing in the internals?
Started off weak, Sarah, but actually has improved throughout the day. If you look at the New York Stock Exchange, it's about 2-to-1 advances to decliners. It was basically 50-50 a few hours ago. So this has been kind of a quiet build on the upside. Take a look at the U.S. dollar index. Really become a little bit of a battleground. It held its multi-year lows not that long ago. It bounced, and now it's coming off again, as in fact that sort of softer jobs number took a little bit of the taper discussion away. And then the volatility index really giving way right now. It's down in the 16s. We both had the catalyst of the jobs report out of the way. Obviously, calm new highs, all of that contributing to downside pressure on the VIX. Also, probably the calm down in some of the meme stocks doesn't hurt into a weekend to get the volatility index downtrend to deepen a bit, Wolf.
With just 50 seconds left, we are sadly 3.5 points from a record close on the S&P 500, still up 0.9%. The Dow is up 0.5%, and the Nasdaq is up 1.5%. Tech very much the top performing sector today, followed by communication services. Those are the two sectors that are up more than 1%. Only one in the red, that's utilities, down 0.2%. A couple of big week-to-date gainers. Energy up 6.6% on the week, and real estate up 3.5% on the week, outperforming the other sectors. At the close, we are up by 0.9% on the S&P 500, just 2 or 3 points away from a record closing high, 0.2% on the Dow, and 1.5% on the Nasdaq.
A very strong close, but not quite at a record. We were on record watch for Dow and S&P. Welcome back, everyone, if you're just joining us to Closing Bell. I'm Sarah Eisen here with Wilfred Frost and Mike Santoli, CNBC senior markets commentator. Take a look at how we finished up the day on Wall Street. The Dow did close higher by 180 points, about half a percentage point. 34,777 would have been a record close. But for the week, the Dow is up about 0.7%, second strong week in a row. S&P 500 up 0.9%, just shy of a record close for the week. Also up about 0.6%. By the way, this S&P finish, best day since May 24th. Nasdaq also having a very good day. Technology was the leader in the market today. It closed up 1.5%, best day since about May 20th.